Okay, so good evening everyone. How are you all? This is CA Rohit Grover, your faculty for CA Final Paper number 3, Advanced Auditing and Professional Ethics. So today we are going to start with a very important topic that is called audit of NBFCs. Let me tell you one thing, when we talk about the audit of NBFCs, most of the time students confuse the concept with the audit of banks, but audit of banks and audit of NBFCs are completely different concept. It is a very small topic. Let me tell you one thing, it is a very small topic and at the same point of time very scoring also. There are so many things you have to understand in this particular topic called audit of NBFC. And when we talk about the audit of NBFC, what are the major concentration areas are going to be auditor's report, auditor's duty, auditor's procedures, certificate of registration to be obtained from RBI, and how do we check the prudential norms when the Nbfc classify its assets into standard, substandard, and when the Nbfc make sure that it has to provide for the provisioning and income recognition prudential norms. So it's a very small chapter, so we'll try our level best to complete this chapter within this one video. Now see, let us first start with the definition of NBFC. First of all, let us understand the full form of NBFC. NBFC stands for non-banking finance companies, right? So RBI is also going to regulate the NBFCs along with whom? Banking system. So RBI has a special set of rules for the bankings, and RBI also at the same point of time has a special set of rules for whom? NBFC. Now, what is the definition of NBFC? So, section number 45 defines the definition that NBFC is a what? NBFC is a financial institution which is a company. So, what is the definition, everyone? NBFC is a financial institution which is a company, and NBFC is a non-banking financial institution. You are like a bank, but you are not a bank. So you are a non-banking financial institution. Are you understanding the point? You are a non-banking financial institution. So you are a non-banking financial institution. Like the banks go for the deposit and for the lending of the money, same activities and NBFC also can do. Now, you are also any other class of institution which is notified by the RBI in the central government notification in the official gazette. So this is what the definition of NBFC given as per section 45 IF. Now, next point, sir, how will come to know that whether particular financial institution is eligible to be an NBFC or not? Remember, to become an NBFC and to get yourself eligible to get registered with the RBI, there are two conditions required to be satisfied. Now, sir, what are those two conditions? Condition number one, out of your total assets, at least more than 50% of your assets should be financial assets. Again repeating, out of your total assets in the balance sheet, more than 50% of the assets should be which assets? Financial assets. And the income from such financial assets should also be more than 50% of your total gross income. Again repeating, out of your total income of the NBFC, more than 50% of the income should come from such financial assets. So again repeating, there are two conditions to be eligible to be an NBFC. Condition number one is out of your total assets, more than 50% should be the financial assets, and out of your total income, more than 50% of the income should be from the financial assets. These are the two conditions. After that, what will happen? You will go to the RBI and you will apply for the registration. Now, RBI at the time of registration will definitely take care of these two things. First one is what? Out of your total assets, more than 50% should be financial assets, and at the same point of time, out of your total income, more than 50% should be the income from such financial assets. Now, when the RBI gives you the registration, remember one thing, obtaining the certificate of registration from RBI is mandatory. Now, when you are applying to the RBI for the registration, remember one thing very carefully. Obtaining the certificate of registration is very much mandatory from 1997. 9th January 1997 onwards, obtaining the registration from RBI has become mandatory. It means what? Why I'm stressing on that mandatory? Because you are not allowed to commence your business activities until and unless you obtain the audit, or until and unless you obtain the certificate of registration from RBI. Say for example, I am an NBFC, not yet obtained the certificate of registration from RBI. Then in that case, what will happen? my all the financial activities, my all the business transactions will be treated as null and void, because I am commencing my business without obtaining the certificate of registration from RBI. So RBI has made it mandatory that you have to only commence your business activities if you have obtained the certificate of registration with the RBI. Second most important thing, you have to understand that RBI says that when you are coming and when you are applying me for the certificate of registration, तो भैया you should have a net owned funds. Again repeating, you should have a net owned funds of 2 crore rupees. Sir, we to heard it is 25 lakhs before 21st April. You can see the date over here. Before 21st April 1999. Before 21st April 1999, the entry fee was 25 lakhs net own funds. But recently 25 lakhs has been increased to 200 lakhs. It means on or after 21st April 1999, if any NBFC has got the registration, they should have net own funds of 2 crore rupees, that is 200 lakhs. Clear everyone? Now, no NBFC is allowed to carry out its activity without obtaining the certificate of registration. And next one, companies under the Companies Act may apply to the RBI desirous of commencing the same activities. If you are a normal company but you are desiring to operate the activities which the NBFC does, you can also apply to whom? RBI for the same. Clear everyone? Next. Following up the applicable norms, if you are becoming an NBFC, you have to apply your capital adequacy norms, income recognition norms, asset classification norms, and provisioning, etc. Like for the banks, these norms are applicable. Same way RBI has conducted or planned these norms for you. Next one, directions for auditor to report on compliance are also prescribed under the RBI guidelines. So RBI does not only provide the norms for the NBFCs to be complied with, RBI also plans the norms for auditors to be complied with. Now, how many types of NBFCs we have in India? Remember one thing, NBFCs are broadly classified into 3 types. How many types everyone? 3 types. Deposit taking NBFCs, non-deposit taking NBFCs. So sir, what is the first type? Either you can be a deposit taking NBFC, means what, you can accept the deposits, or you are a non-deposit taking NBFC. Second one, if you are a non-deposit taking NBFC, either you are systematically important NBFC or non-systematically important NBFC. Second classification. Third classification is on the basis of your activity. So again repeating, either you are a deposit taking NBFC or a non-deposit taking NBFC. Point number 1. Point number 2, in the non-deposit taking also there are 2. Systematically important, non-systematically important. In the further, there are total 7 classifications on the basis of your activity. So broadly, deposit taking, non-deposit taking under that systematically important, non-systematically important, and third one is on the basis of activities. On the basis of activities, you have these 7 classifications. Sir, what is ICC? It is known as Investment and Credit Company. Those NBFCs which are into the business of investment and credit. Second one, IFC, Infrastructure Finance Companies. What is IFC? Infrastructure Finance Company. What is the third one? So CIC. CIC stands for Core Investment Company. What is CIC? Core Investment Company. Sir, IDF, Infrastructure Debt Fund NBFCs. So what is MFI? Microfinance Institutions. And some of the NBFCs are categorized as NOFHSC, non-operating financial holding companies. What do you mean by non-operative financial holding company? And what is the last one? Factors. Those NBFCs which are into the business of factors. So again repeating, there are total 7 types of NBFCs when it comes to types of activities. What are the 7 types? ICC, Investment and Credit Company, then CIC, Core Investment Company, then IFC, Infrastructure Finance Companies, then IDF, Infrastructure Debt Fund Companies, then we have factors, then we have non-operative financial holding companies, and then we have MFIs. What is MFI? Microfinance Institution. Now, sir, what do you mean by ICC? What do you mean by ICC? Investment Credit Company. Actually, ICC is a new form. It is a cluster of 3 types of NBFCs. Those NBFCs which were involved into asset financing, investment and lease financing, the 3 have been clubbed together and now it is named as what? It is named as ICC. What is ICC? Investment and Credit Company. They can't do the financing for the buying its own shares. Remember one thing, you can't do the financing to someone who is ready to buy your own shares. So it will be like indirect problem in the RBI norms. So you can't finance someone who is buying your own shares, right? Next one, ND in nature. What do you mean by ND in nature? These all ICC NBFCs are non-deposit taking NBFCs. It means they are only into the financing line, they cannot accept the deposits. Next one, infrastructure finance companies, IFC. IFC NBFCs are again what? Non-deposit taking, but very important point, at least 75% of their assets should be in the infra loans. Again repeating, out of the total assets, at least 75% of their loans, 75% of their assets should be infra loans. Next, they should have the net own fund of 300 crores or more. They should have a net own funds of 300 crores or more. And remember, they should have got a credit rating from the specified credit rating agency. Next one, their capital adequacy ratio, the capital requirement adequacy ratio should be at least 15%, out of which tier 1 capital should be 10%. So if you are able to maintain these 5 conditions, you will be termed as what? Infrastructure finance NBFC companies, right? Next one, sir, what do you mean by core investment companies? From the name itself only you can understand they are called core investment companies. Core means what? Out of the total assets, 90%. Sir, what is the difference between infrastructure finance? There it was at least 75%. Here they are saying at least 90% of their assets should be in investment. 90% of their assets should be in investments in equity shares, preference shares, debentures, bonds, etc. And out of that 90%, at least 60% should be invested in the form of equity shares of the company. Again repeating, these are obviously non-deposit taking. Next one, they are systematically important. Core business is what? Investments at least 90% of its total assets are investments in the equity, debenture, preferential debentures, and out of those 90%, at least 60% of the investment is the equity in the group companies. Remember, all the NBFCs are required to invest only in the group companies. Next one, does not trade in its own securities except through the block sale or for the purpose of dilution. You are not allowed to sell your own securities, but you can sell it if you want to do it for the block sale purpose, or if you want to do for offer for sale, or if you want to go for a purpose of dilution. Remember, major thing is, if you are a CIC, your 90% of the assets should be in the investments, and out of that 90%, at least 60% of the assets should be the investment in the equity shares. Next one, it is not allowed to carry on any other activity other than these 3. You can invest in the bank deposit, money market issued in the group companies, granting of loans to the group companies, issuing of guarantees on the behalf of group companies. You can invest, you can grant, means you can loan it, and you can give the guarantees, but only and only on the behalf of your which companies? Group companies, everyone. Clear? Now, minimum total assets. Minimum total assets should be 100 crores, everyone. Then only treated as CIC NDSI. What is CIC NDSI? Core investment company, non-deposit taking, systematically important, right or not? The minimum total asset should be 100 crores. And remember one thing, if you are less than 100 crores, and if you are less than 100 crores, you do not need any kind of registration with RBI. If you are a CIC with less than 100 crores of net assets, you do not have to go for registration with RBI. And even if you are a CIC of 100 crores or more net assets, but you are not applying for the public funds, then also you are not required to apply to the RBI for the registration. It means these CICs are exempted from applying to RBI for the registration. Without registration also, on some simple directions of the RBI, you can operate your business. Clear, everyone? But if you are a systematically important, non-deposit taking, and your minimum total assets are 100 crores or more, then you have to mandatorily get the registration with whom? RBI. Next point, infrastructure debt funds. Now, what do you mean by infrastructure debt funds? Sir, again, they are the non-deposit and their net own funds are 300 crores or more. Now, infrastructure finance company or infrastructure debt fund, both should have a net own funds of 300 crores or more. Next point, they are only allowed to invest in PPP, public-private participation projects. Infrastructure debt funds only and only invest in PPP projects. Sir, what do you mean by PPP projects? Public-private participation projects, or the projects of which post-commencement operational date has taken place. Means what? They will only and only invest in PPP, and post commencement operational date projects where the 1 year of satisfactory performance has been given. Now see, completed at least 1 year of which performance? Satisfactory performance. Clear everyone? PPP, public private participation, and PCOD, post commencement operation date, right or not? So this is what the infrastructure debt fund. Next one, microfinance institution. Very important from the MCQ point of view. First of all, try to understand, sir, what do you mean by microfinance NBFCs? Again, they are the non-deposit. 99.99% of the NBFCs are always non-deposit taking. There are very few NBFCs which are deposit taking. For them, separate prudential norms have been framed. So separate prudential norms for the deposit taking, non-deposit taking, systematically important, non-systematically important. Remember, systematically important and non-systematically important categorization only comes in non-deposit taking. In the deposit taking, there is no systematically important, non-systematically important. Systematically important and non-systematically important categorization only and only comes in non-deposit taking. Clear everyone? Yes sir, we are very much clear. Now, if you're a microfinance institution, right? If you're a microfinance, from the name itself says that it will give you the finance in a very small amount. If you're a microfinance institution and if you open your microfinance institution in the northeastern states, you only have to have 2 crores of net owned funds. But if you are a microfinance institution and you are opening your institution other than northeastern states, then in that case it has to be 5 crores. Now see, if it operates in northeastern states, minimum 2 crores of net owned funds. If it is other states, 5 crores of net owned fund. Point number 1. Point number 2, at least 85% of your total assets, at least how much? 85% of your total assets should be qualifying assets. So what do you mean by qualifying assets? I will tell you the meaning. Now, at least 85% of your net assets. So while calculating that 85% of the net assets, we have to reduce cash, bank and money market instruments from the total assets. So from the total assets, if you will reduce cash, if you will reduce, if you will reduce cash and if you will reduce bank and if you will reduce the money market instruments, then it will be treated as what? Then it will be treated as net assets. Now, 85% of the net assets should be in the qualifying assets. Now, what do you mean by qualifying assets? Now, listen to this. As a microfinance NBFC, and if you are giving the loan to the borrowers who is staying in a rural area, borrowers of rural areas whose household annual income not exceeding 1,25,000, it means you can only give the loans to those borrowers in the rural areas whose annual household income is not exceeding 1,25,000. And if the microfinance institution wants to give a loan to those borrowers who are staying in the semi-urban area or urban areas, then in that case their maximum household income should not be exceeding 2 lakh rupees. So look at this, annual household income in the rural area should be greater than equals to, should not be greater than 1,25,000. Annual household income in semi-urban area or urban area shall not be greater than 2 lakhs. Next point. So whenever you are giving a loan to the borrower, first time you are not allowed to give a loan more than what? 75,000. Once he has repaid the 75,000 of loan successfully, second time onwards, if the same borrower comes, you can give the loan of maximum 1,25,000. That makes you a microfinance institution. Next point. Without, and remember one thing, when you're giving the microfinance loans, you are not required to collect any kind of security and any charges on the foreclosure. Suppose he wants to prepay the loan, then in that case, no penalty charges like the other banks will charge. Tenure. Remember one thing, you have to give at least 24 months installment for a loan exceeding 30,000 rupees. If the loan of the borrower is exceeding 30,000 rupees, the minimum installment should start from 24 months because these are generally being given to the rural areas. In the rural areas, they do not have the capacity to pay you that much of loan. Maximum they can give you what? 1,000, 1,500, 2,000 rupees of installment. That's why minimum 24 months installment you have to give. And very important point, remember one thing, the choice of making the payment either weekly or bi-weekly or monthly is given to the borrower. They have the choice to make the payment, and minimum 50% of the total loans of the microfinance. Minimum 50% of the total loans of the microfinance should be income generation loans. Sir, why income generation? Because sir, microfinance also institute has to run now. They will only run when they will earn some profit. And how they will earn the profits? If and if they will make some income. Did you get the point or not? Is it clear or not? Yes, sir. So these are the various features relating to, these are the various conditions to be satisfied if you are a microfinance institution, NBFC. Next one. So what do you mean by factors NBFC? So factors NBFC are those NBFCs who those NBFCs who always receive, those NBFCs who always receive the whose business is into the factoring. Are you getting the point? Whose business is into the factoring. Now, how should I explain you the factoring business? Like say for example, sometimes the banks are unable to collect their money from the NPAs, right or not? So what the banks will do, they will make a pool of those NPA assets and they will sell it to factors company. Now, these NBFCs will immediately pay the money to the banks while purchasing their factors, and later on they will do the recovery from those non-performing assets. But yes, there are two conditions to be satisfied if you want to become a NBFC which is into the factors business. Condition number one, out of your total assets, minimum 50% of the assets should be factors, and out of your total income, minimum 50% of the income should be from that factors assets income only. Same like a normal. So your 50% of your assets should be factors, and your income from the out of total income, your minimum 50% of the income should also come from the factors. So this is what do you mean by factors NBFC. Next one, non-operating financial holding NBFCs. Sir, what do you mean by non-operating financial holding NBFCs? These are non-deposit taking NBFCs, and their only work is to do the investment in the group companies and just holding the investments in the banking companies and other financial institutions. No other work, right? Now, NBFCs where no registration under the RBI is required. So remember one thing, there are some NBFCs which have been given a special privilege under the RBI where no registration with the RBI is required. And let me tell you one thing, what are those NBFCs where no registration with the RBI is required? If you are regulated under some another regulator, so RBI does not want you to get confused between RBI directions and your regulator. So RBI has given you the exemption. The RBI says that if you are registered under SEBI regulator, insurance, IRDA regulator, or Ministry of Corporate Affairs, or any other regulator, then you need not take any kind of registration or certificate of registration under me. Then do some little bit of directions which I am going to issue and do your NBFC business. Now, the next one, stockbroker. If you are a stockbroker company, if you are a stock exchange, if you are a venture capital fund, if you are a merchant banking, they do not need any registration from RBI because they are all covered under SEBI regulator. If you are a chit fund company, you are covered under Chit Funds Act 1982, no need of registration. If you are a Nidhi company, you are covered under Ministry of Corporate Affairs, no need of registration. If you are an insurance company, you are covered under IRDA, no need of registration of the company. Next one, housing finance company under National Housing Board, no registration required. Microfinance company other than which are specified above. Just now we have completed NBFC microfinance. If you are unable to meet those criteria, but you still want to call yourself as a microfinance company without complying with those requirements, you can run that business. Then in that case, you will not be considered as MFI COR by RBI. You do not have to take any certificate of registration other than those which are specified above. Alternate investment funds. If you are into a business of alternate investment funds, no certificate of registration is required. Next one, mutual benefit companies. If you are a company which is into the business of mutual benefit, no registration required. Mortgage guarantee companies, no registration required. Securitization and reconstruction companies, no registration required. If you are a NBFC, non-deposit core investment company, non-systematically important. It means if you are an NBFC, non-deposit taking, core investment company, but systematically important, then registration is mandatory. But if you are an NBFC, non-deposit taking, core investment company, non-systematically important, you do not require. So these are the following organizations which can run their NBFC business without obtaining any kind of registration from RBI. The question is why? Because RBI says that if you will be following the multi-regulations of the multi-regulators, then in that case it will be difficult and it will be the confusing thing for that particular NBFC, right? Now, what features makes the NBFC different from the banks? How NBFCs are different from the banks? Point number one, NBFC make current account and savings bank account you can't open. You can't open the demand deposits. Next point, NBFC mein if you have an account, you can't draw the self-drawn checks like what we can do in the banks. Next one, NBFC is never a part of Payment and Settlement Act. Only the banks are part of the Payment and Settlement Act. There is no minimum guarantee given by DICGC. So what is DICGC? Insurance, Government Guarantee Corporation, something like that is there. So there is no minimum guarantee. So say for example, if you are a bank, and as a bank, if you lose your money in the bank in the FDs and term deposits and all, then in that case bank gives you the minimum guarantee that this is what the minimum guaranteed amount will give you. But that guaranteed amount is not available in case of what? NBFCs. And next most important point, they do not have any exposure towards the priority sector. Remember one thing, in the banking we have the priority sector and public sector, two types of exposures of the loan. In NBFC, no such kind of provision. So these are the 5 points which makes the NBFC different from banks. What are the 5 points? You can't open a savings bank account, a current bank account. You can't draw the self-drawn checks. There is no minimum guarantee provided by the government under the Insurance Corporation, Guarantee Corporation. And most importantly, they are not the part of Payment and Settlement Act. And most importantly, there is no minimum requirement of any exposure to a priority sector. Like in the bank, you might have seen that they have to give some educational loans, they have to give some, that is mandatory for them to fulfill some sectors, educational loans, home loans, infrastructure loans, SC/ST loans, but that kind of priority sector is not there in case of NBFC like what we see in banks. Clear everyone? Now, what are the capital adequacy norms introduced by NBFC? Capital adequacy norms introduced by by RBI are कि if you are a systematically important, again repeating, if you are a systematically important NBFC, if you are a systematically non-deposit taking important NBFC, then you have to minimum maintain 15% CRAR. What do you mean by CRAR, everyone? CRAR is basically called capital adequacy ratio. Capital requirements and adequacy ratio. Remember one thing, you have 15%. Remember in the banking sector, we have to maintain it 9%. But here in the NBFC, minimum 15%. And out of your 15%, minimum 10% should be Tier 1 capital. Sir, ये Tier 1 capital क्या होती है? Like say for example, if any recession comes or any financial setbacks are coming or any financial bumps are coming or financial recessions are coming, in that case you should have minimum that much of capital as an NBFC so that you can absorb more and more financial bumps and financial barriers or financial recessions and financial contingencies, right or not? So you need Tier 1 capital more. So out of 15%, minimum 10% should be the Tier 1 capital that is required for the non-deposit taking systematically important NBFCs. But if you are a non-deposit taking systematically important NBFC but involved in the gold loans like Munnapuram Gold or Muthoot Finance, where the gold loans are given, your major business is gold loans, minimum 50% of your assets are gold loans, then in that case the CRAR requirement is still 15%. CRAR requirement is still 15%, but instead of 10% as a Tier 1 capital, you need 12% as a Tier 1 capital. How much? 12%. Right? Next one. If you are a non-systematically important NBFC, then these CRAR requirements are not applicable to you. You just satisfy the net own funds requirement, that is more than enough. Net own funds requirement, I told you now, 300 crore like that at two places. So those net own fund requirements are required to be done for the non-systematically important NBFCs. If you are a systematically important NBFC, then it is not required. Next one. Now, remember, whenever we calculate the CRAR, the formula is capital requirements divided by risk-weighted assets plus of the balance sheet items into 100. This is the formula. Now, risk-weighted assets mean what, sir? Whenever you are giving any loan, there is always a risk of turning that asset into NPA. Obviously, suppose I am an NBFC given a loan, what is the guarantee that borrower will repay the loan? So, little bit of risk you have to calculate. So, they are saying that there are types of assets they have categorized where the 20% risk weight you have to multiply with the asset. Like say for example, let me give you an example. Suppose I have invested in the bonds of public sector banks. Suppose I am an NBFC, I have invested in the bonds of public sector bank. How much I invested? Say for example 50 crores. But at the time of calculating of the CRAR, I will not take my asset as 50 crores. I will multiply it with 20%. How much percentage? 20% risk I will multiply. So it means if I'll multiply with 20%, 10 crores, it means I will only take 40 crores as my net asset value. Did you get the point? So this risk you have to multiply with the asset. Now in some assets you have to multiply at the rate of 50%, like in the 20% where it is required, bonds of the public sector banks, if you have taken the state government guaranteed claims not in default for more than what? 90 days. If you are invested in a state government guaranteed claims which are not in default for more than 90 days. Now wait here. Now look at these. State government guaranteed claims which are not in default for more than how many days? 90 days. But if you have taken the state government guaranteed claims which are in default for more than 90 days, then it is 100%. It means it is not to be treated at all in your asset. Zero. Means if you have 100 crores invested in the central government guaranteed claims which are more than 90 days overdue, then in that case you can't even take it, because 100 crores into 100% comes to 100 crores. Out of total 100 crores you have to reduce. Zero is only left. But if you are taking the central government guaranteed claims not in overdue for more than what? 90 days, do you have to only multiply how much risk? 20% risk only. And likewise, there are 50% risk ratios, all assets covering public-private participation and post-commencement or operational date. And in that assets, you only have to multiply with the 50%. But there are some assets where you have to multiply with the 100%. Now see, what are those? FDs and bonds of public financial institutions, shares and debentures of the company and mutual funds, stock on hire, intercorporate loans, other security loans and advances, bill purchase and other resources or other loans, asset leased out, premises and furniture, other assets, and central government guaranteed loans where the default is more than 90%. There you have to multiply with 100%. Clear everyone? Yes. So this is all required while calculating the CRAR, because what is the formula of CRAR? Capital requirements divided by risk weighted assets. Risk weighted asset means multiply by that much only you have to take, plus of the balance sheet dates into 100. Clear everyone? This formula is still, and you will do it again when we'll do the audit of banks revision, right or not? Now income recognition and asset classification. So bhaiya, there is a very important thing you have to understand. Ki here also in the Nbfc we categorize the assets as standard, substandard, doubtful up to 1 year, 1 to 3 years, more than 3 years, and loss asset. Remember, very important thing which I am telling you. Here we are going to understand the income recognition criteria. First of all, income recognition means what? Once your asset as an NBFC, once your asset has been declared as an NPA, you are not allowed to take it on accrual basis. You only have to charge the income or credit the income to your P&L account only and only on which basis? Only and only on realization basis. Which basis, everyone? Realization. If the money will come, then only it should be credited to your account. If the money is not coming, it is not required to be credited to your account. Is it clear, everyone? Yes. Okay, so we have talked about the income recognition. In the income recognition, what I told you, only and only on realization basis, not on accrual basis. Now, if you are a non-systematically important NBFC and if you are a systematically important NBFC, how you have to categorize the standard assets? You know that standard assets are what? Standard assets are those assets where the regularization in the payment of principal is there, regular interest payment is there, and common risk which is applicable in all the assets, that is there. So there is no change when it comes to standard asset in case of non-systematically important NBFCs, systematically important NBFCs. Now, when do we call some asset as a substandard asset? In case of, Now, in case of substandard assets, they are saying that if you are a non-systematically important NBFC. So see, on the left side, we are keeping the non-systematically important. On the right side, we are keeping the systematically important. Now try to consume this. If you are a non-systematically important NBFC and your asset is in the NPA category for not exceeding 18 months, then you have to declare your such NPA as a substandard asset. But if you are a systematically important, that is on the right side, then 18 months will be substituted with 12 months. Again repeating, if you are in the NPA category for not exceeding 18 months, then in that case you are a substandard for the non-systematically important NBFCs. But if you are a systematically important NBFC, 18 months shall be substituted by 12 months. Next point. In case of doubtful assets, if you are in the category of substandard, for more than 18 months, then in that case you will be categorized as doubtful asset. But same for the systematically important, again 18 months shall be substituted with 12 months. Remember, there are two types of provisioning. There are two types of asset classification we are doing. One is for the non-systematically important, systematically important. Standard asset in both the sides same. Substandard for the systematically important. If you are into the NPA category for not exceeding 18 months, you will be considered as what? A substandard asset for a non-systematically important NBFC. But if you are a systematically important NBFC, it should be 12 months. And same way in the doubtful assets. If you are in the substandard category for more than 18 months, you will be treated as a doubtful asset. But 18 months again will be substituted with what? 12 months in the systematically important systematically important NBFC, right everyone? Now, loss asset. When you will be treated as a loss asset, if your internal auditor, external auditor, NBFC on its own or RBI inspection report says that this particular asset is a loss asset, you have to declare it. But this is same again in case of systematically important and non-systematically important. Now, Npa classification. Npa classification says that ki bhaiya, if you are a systematically important, then we have to check that if it is overdue for more than equals to 3 months. But if you are a non-systematically important, we have to check it for 6 months. Again repeating, standard, substandard and doubtful. It was 18 months for the non-systematically important. It is 12 months for the systematically important. Now I am talking about NPA classification. Generally in the banks, what do we say? If your asset is overdue for more than 90 days, that is an audit of banks. In the NBFC, rule is different. If you are a non-systematically important NBFC, and your asset is overdue for more than 6 months, then only you will be treated as an NPA. But if you are a systematically important, 6 months will be substituted with the 3 months. But if you are a lease rental asset, if your asset is a lease rental asset and hire purchase installment, then we have to check for 12 months of NPA classification in case of non-systematically important. But when it comes to systematically important, answer will remain same. It is again how many months? 3 months. Did you all understand the point? So I tried my level best to give you the best chart relating to NBFC ka classification. So on the left side we have the systematically important, on the left side we have the systematically important, and on the right side we have the non-systematically important, and on the right side we have the systematically important. So let's do it again. Standard asset, both same in both the case. Substandard, you are in the NPA category for not exceeding 18 months in case of non-systematically important. For the systematically important, it is 12 months. You are in the substandard category for more than 18 months. You will be doubtful asset in non-systematically, and in a systematically again 12 months. Now, next point. If you are a loss asset, it has to be accompanied by the internal auditors report or bank external auditors report or RBI inspection report or NBFC on its own. But when you are going to declare it as an NPA, you are going to declare as an NPA in the non-systematically important if your asset is overdue for more than equals to 6 months, but it is again 3 months more than equals to 3 months in case of what? Systematically important. But if it is an asset in the form of lease rentals or hire purchase installments, then you have to check it for 12 months in case of non-systematically important. But for the systematically important, it is going to be again 3 months. So this is what the standard provisions, or this is what the standard, substandard, loss and NPA classification, asset classification norms. Now, provisioning in case of NPS. So bhaiya, what they are saying, either you are a systematically important or you are a non-systematically important. In case of loss assets, you both have to do 100% only. In case of doubtful asset, they are saying for the unsecured portion, it is always 100%. But if it is doubtful up to 1 year, it is 20% on secured portion. If it is 1 to 3 years, it is 30% on secured portion. If it is more than 3 years, it is 50% on the secured portion. But for the unsecured portion, it is always 100%. In case of substandard asset, for the unsecured portion, again it is 100%, but for the secured portion, it is only 10% provisioning you have to make. But in case of standard asset, sir, standard asset ke liye bhi we need a particular kind of provision. Answer is yes. Standard asset is also having a little bit of common risk, which is applicable in non-systematically important and systematically important. But what they are saying, ki bhaiya, if you are a systematically important, make it 0.4%. But if you are a non-systematically important, 0.25% is also enough. So, provisioning mein mostly on both the side it is same. But when it comes to substandard, systematically important mein 0.4 and non-systematically important mein 0.25%. This is what do you mean by prudential norms relating to income recognition, relating to asset classification, relating to CRAR and relating to provisioning. Clear everyone? Yes. Now, the next part which we have to start with is the audit procedures to carry out the Nbfc audit. Very simple. It is broadly classified into 8 to 10 points, everyone. How to do the audit of Nbfc? Point number 1. Whenever you start the audit of Nbfc, like we start doing the audit of a normal company, what is the first 2 documents we always verify? The MOA and AOA of the company. They are saying the same thing. Whenever you are starting doing the audit of Nbfc, always obtain what kind of business the Nbfc into, because until and unless you will not understand what kind of business the Nbfc into, till that point of time you will never be able to understand what you have to check in that. Like say for example, if I am a core investment company, Nbfc, you have to check that minimum 90% of my assets are in investments. And if I am an infrastructure financing company, you have to check that at least 75% of my loans are infrastructure loans. Are you getting the point or not? So first of all, you have to check the business of the Nbfc. Sir, how we'll check? We'll obtain the copy of MOA and AOA. What we'll obtain? We'll obtain the copy of MOA and AOA. We'll check their business policy. We'll have a word with the management and TCWG. We'll talk to the management and TCWG. It is a paramount importance to know the business of Nbfc because the areas to be examined is based on it. Obviously, that is what I told you. As an auditor, he shall know whether it is a deposit taking or non-deposit. So, what is the step number 1? Bhaiya, identifying the business of Nbfc. What is the step number 2? Evaluation of internal control system. Remember one thing, when you do the audit of Nbfc, the most important thing in the Nbfc, like in any other company, is internal control system and testing its operational effectiveness. Like in the normal company, we test the TOC. We call it as TOC, testing of controls. Here also you have to do the testing of controls. First of all, tell me, installation and adequacy of internal control system is a prime responsibility of whom? It is a prime responsibility of the management. Whose? It is the prime responsibility of the management. But at the same point of time, you have to understand that when we are doing the audit of our Nbfc, even though it is a prime responsibility of the management, we will not forget to do our TOC. We will check whether it is adequate as per the size and nature of the Nbfc or not. A sound internal control system helps in plugging the loopholes in its working. It works like a plug. You know, the plug is having the loopholes now, so that plug is going to fill those loopholes. This internal control system also helps in Nbfc to plug in the loopholes. Obtain the knowledge of their accounting system and related controls. Same thing what we do in the audit system, normal audit of the company, we also obtain their knowledge of their accounting system and related controls. Says also you have to do the same. Check its operational effectiveness by verifying. Sir, what do you have to verify? Its operational effectiveness, whether post disbursement checks are there or not, proper recovery is there or not, security verification is there or not, effective monitoring and follow up is there or not. So what is the step number 1? Step number 1, maybe we have to identify the business of Nbfc. Step number 2, maybe we have to check the evaluation. Step number 3 is very important. If you are an Nbfc, you definitely have to obtain the certificate of registration with whom? RBI. Until and unless you are not in that category who do not need the registration with RBI. So you definitely have to obtain the registration with RBI. From the 9 January 1997 onwards, it was made mandatory to get registered with RBI and obtain certificate of registration from RBI. Net on fund requirement 25 lakhs. I already told you 25 lakhs was before 21st April 1999. But on or after 21st April 1999, it has been increased to 2 crore rupees. Auditor shall check both certificate of registration and net on fund requirement. What is the net on fund requirement? This is what the net owned fund requirement, right everyone? Without any of it, NBFC can't commence their business activity. Auditor has to check that without certificate of incorporation or registration, you are not allowed to do any kind of commencement of business activity. Now the question arises, sir, can we write certificate of incorporation and certificate of registration? Both or any one of them? No. Certificate of incorporation RBI does not give. Certificate of incorporation as a company ROC gives. RBI gives certificate of registration to commence the business activities. Requirement of maintenance of liquid assets. Yes, every NBFC has to maintain the liquid assets. You know that if you are a deposit taking NBFC, sometimes a sudden demand or uncertain demand of deposit holders may take place. At that point of time, you should be having the enough liquid assets to make sure that you are meeting such satisfaction. Investment in the approved securities, checking of quarterly returns. All these things we are going to check whether this NBFC is registered with RBI or not. So what are the three things we have checked? In the first thing we have to check identification of the business of NBFC. Second, we are checking evaluation of internal control system. Third, registration with RBI. Now, specific audit procedure for NBFC accepting the public deposit. Now the main prudential norms have come. If you are a public deposit taking NBFC, first of all, I have to check your credit rating. What do you mean by credit rating? Remember one thing, if you're a deposit taking NBFC, you have to obtain a credit rating from a specified credit rating agency. And that specified credit agency means CRISIL, Fitch, S&P, CARE, ICRA. These are the various credit rating agencies from where you have to obtain the credit rating for the instrument you are issuing. And you also have to check if there is any upgrading or downgrading of credit rating. Doesn't mean that once the credit rating given, the work is done. No. I have to check during the year any upgrading or downgrading. If the downgrading has taken place, तो भैया no fresh public deposits are allowed. No renewal of the existing public deposits are allowed. And at the same point of time, existing shall move towards the maturity. And most importantly, within 15 days, you have to inform to the RBI that there is a downgrading has taken place. Is it clear, everyone? These all are the things auditor has to check. So all the first 3 points are relating to which one? Credit rating. Next point is relating to what? Test check for any excess interest paid or excess commission paid. If you have paid more than what is required interest, or if you have paid more than what is required commission of brokerage, that is also going to be tested here. What is the next thing going to be tested, everyone? Next thing is you have to check there no deposit to be renewed without any written consent of our deposit holders. As a NBFC, you are not allowed to renew the public deposit without any written consent you have received from deposit holder. Next most important thing, register of public deposit you check with the clear categorization of whether the promoters are your public deposit holders or directors are your public deposit holders. Members are more importantly public is your public deposit holders, because if the public is public deposit holders, then little bit things go in more strict manner. Clear? Next point. As an NBFC, as I told you that if you are a deposit taking, you have to maintain some minimum liquid assets. That liquid assets shall be in the safe custody of the filing of returns on timely basis. Next one, if there is no public deposit, verify the board resolution. Bhaiya, if you are a non-deposit taking, it is mandatory for that NBFC to pass a board resolution declaring that I am not accepting any deposit during the year. So we have to check the board resolution. In case of group holding investment companies, check the board resolution to ensure that NBFC has invested only and only in group companies. Declaration that no trading in such shares and securities is allowed. Now this is what is relating to deposit taking norms. Very easy deposit taking norms. If you are not able to understand, just rewind the video 3-4 minutes back and you will be able to understand one by one each and every point inside your head. Next one, NBFC prudential norms. We also have to check while doing the auditing whether NBFC prudential norms relating to CRAR, asset classification, income recognition and provisioning are properly dealt with or not. Check its policy for making the demand and call loans. Classification is proper as substandard, doubtful and loss assets. Income on NPAs only and only on which basis? Realization basis. And check if there are any changes from the last year to this year. So this is what brings an end to while doing the audit of NBFC. So sir, let us start how we started doing the audit of NBFC. First of all, we identified the business of NBFC. Second thing what we did? Second thing we checked the evaluation of internal control system. Third thing what we did? Third thing we checked this registration with RBI. Fourth thing what we checked? We checked if it's a deposit taking. Then 7-8 points we have wrote about the deposit taking, that you will check it while rewinding my this particular video. Then in the last we have to check whether the other prudential norms are also being equally important, being verified by the auditor or not, relating to CRAR, relating to income recognition, relating to asset classification, and relating to what? Relating to provisioning, CRAR, income recognition, and asset classification. Right, everyone? Now, classification of frauds by the NBFC. Very important question. Now, how the NBFC classifies? So, basically, there are total 7 classification of fraud by the NBFC. Are you getting the point? Now, sir, 7th classification is actually not a classification, it is a dustbin, it is a dumping zone. So if you are not meeting any kind of fraud meeting the criteria of the first 6 classification, you can dump it into the 7th one. What are the 7 classification? Read the first one. First one is misappropriation and criminal breach of trust. While doing the business of NBFC, if there is any misappropriation of asset or criminal breach of trust, it is classified as a fraud in the NBFC. Second one is fraudulent encashment by making or manipulation of the books of accounts by making fake accounts or fictitious accounts, or by converting the properties and all those things. So if there is any manipulation of books of accounts, or if there is any forged instruments, if there is a falsification of books of accounts or fraudulent act in the books of accounts, that is also one of the act to be defined as a fraud, by fraud classification by the NBFC. The first one is misappropriation and the criminal breach of trust. Second one is fraudulent transactions, fraudulent encashment via forged instruments, and manipulation of books of accounts via fictitious account. Next one, unauthorized credit facility. Suppose the NBFC was not authorized to give that credit facility, but you give it for illegal gratification or negligency and the cash shortages. Suppose you are very much gross negligent and there were cash shortages because of that, then cheating and forgery cases. What is the fifth one, everyone? Cheating and forgery cases and irregularities in the foreign exchange transactions. These are the 6 basic categorizations. The first one again, misappropriation and criminal breach of trust. Second one, fraudulent encashment via fraudulent or forged instruments, manipulation of books of accounts. Third one is relating to unauthorized credit facilities for illegal gratification. Fourth one is relating to cheating and forgery. Fourth one is relating to negligence and negligence and cash shortages. Fifth one is relating to cheating and forgery. Sixth one is relating to irregularities in the foreign exchange transaction. And seventh one, you can see that any other frauds, it's a dumping zone. If it is not categorizing in the first 6, you can dump it there. But remember one thing, in case of 4 and 6, sir, what is the fourth one? Negligence and cash shortages and irregularities in the foreign exchange. You as an auditor has to prove that there's a suspected intention or there's a proved intention behind that. Because if you are unable to prove that intention, if the NBFC is unable to prove that intention to the auditor, then in that case, auditor will not allow it to be classified as fraud because it will be treated as an error. Because the basic difference between the error and the fraud is what? Intention. So if the NBFC is unable to prove the intention behind that, then in that case, auditor will not allow it to be categorized as fraud. Next, most importantly, all the cash shortages which are more than 5,000 or which are more than 10,000, which are not detected by the person who is handling the cash, is also required to be reported here. Clear, everyone? So which kind of cash shortages? Cash shortages more than 10,000 and more than 5,000. More than 5,000 were detected by the management, auditor, inspecting officer, but not reported by the person handling the cash. These are also required to be reported. So this is what brings an end to your audit of NBFC. Now in the last, you have some audit checklist, everyone. So audit checklist ka point we are going to cover in the next video when it comes for the audit of banks. So I will take some first 10 minutes of that video to make you understand the audit of banks. And while teaching you the audit of banks, first 10 minutes I'll tell you this important relevant points relating to audit checklist relating to NBFC. So that's it for today, everyone. So thank you so much for lending your patient ears. I'll borrow it again in the next video. Bye bye. Take care. See you guys in the next video. Remember, we are little bit pending about the NBFC ka. Last May 1 or 2 points are pending, which I have to tell you. Along with that, we will do the audit of banks ka thing, right? Or audit of banks or audit of PSU or audit of insurance, whatever the appropriate topic I can take to make it complete within a span of 1 hour. Okay then. Bye everyone. Take care. Bye bye. Hello everyone, how are you all? This is CA Rohit Grover, your CA final faculty for the paper number 3, Advanced Auditing and Professional Ethics. So today we are going to understand another very important chapter that is called Audit of Public Sector Undertakings. Everyone, so what we have to learn in this particular audit, we have to learn that if you remember in your intermediate level also the same chapter was there. Sir, where we got this chapter? If you remember in the intermediate level, you had one chapter called Audit of Different Entities, right or not? And in the IPCC level, in the old syllabus, in the intermediate level also, you had this chapter called Government Audit. So in the audit of different entities, there was one concept called government audit where we have understood something about the Cnag. If you remember, government audits are always required to be carried out by this thing called Comptroller and Auditor General of India. So Comptroller and Auditor General of India, and at the same point of time, if I am not wrong, we have done the audit of expenditures, audit of receipts, audit of stores and spares, audit of commercial undertakings, and all these relevant audits under that performance and proprietary audit, all that thing we have done in an intermediate level. So 50% of the intermediate level is still copy pasted at your final level also. But the name of the chapter, instead of calling it as a government audit, we are going to call it as an audit of public sector undertakings. Now, question arises, sir, what we have to understand in this chapter? In this particular chapter, we are going to understand, sir, who is Cnag, what is his coverage of doing the audit, which entities he is going to do the audit. After that, what are the various committees of Parliament and State Legislative Assembly. We are going to talk about various audit boards, and we are going to talk about the different types of audits. If I have to tell you, the overall scope is going to be comprehensive audit, financial audit, compliance audit, performance audit, proprietary audit, right? So let us understand first of all framework. Now in the framework, what we have to understand is, sir, when we talk about the government audit, when we really talk about the government audit, in the government audit, there are basically three types of audit: government company audits, government corporation audit, government departments audit. Now, question is, sir, what do you mean by government company? A government company is the one in which at least 51% of the paid up share capital is either held by central government or state government or combinedly by both. Then, sir, how government company is different from the government corporation? Government corporations are those organizations which are either set up under the state legislative assembly or the parliamentary act. Then what is the third one? The third one is known as government departments. Sir, what do you mean by government departments? Government departments are those departments which are created by the central government or the state government relatively only for the purpose of the government operations only. Like if you will say that Indian Railways is there, Indian Postal Service is there, all that comes under the government departments. And if I have to give you the example of government company, we have so many. ONGC is there, SCIL is there, Coal India Limited is there. And government corporations, you can take the example of UTA and LIC, right? So when we talk about the government audit, these are the three types of audits we have to talk about. Next one, objective and scope. We'll understand what is the objective of the government audit, what is the scope of government audit. Next, along with that, we'll understand financial, comprehensive, compliance, performance, proprietary audits. Next one. Now, what do you mean by government audit? As I already told you, what do you mean by government company? A company in which 51% of the paid up share capital or voting right is either held by the central government or state government or combinedly by both, like SAIL and ONGC. What do you mean by government department audit? Ministerial departments like Indian Railways and Postal Services. And what do you mean by government corporation? The government corporation audits are the audits like those kind of organization which are either made under parliamentary act or state legislative act. Say for example, ICAI also. If you carefully analyze the material, the study material which is being provided by the ICAI, you will find it over there. It is written that it is set up under the Act of Parliament, right? So all that comes under the government corporation. Next one, who carries out the audit of these government organizations? Government organizations ka audit is carried out by the Cnag and IAAD. Sir, what is IAAD? Indian Audit and Accounts Department. Are you getting the point? Now, Cnag has one IAAD, Indian Audit and Accounts Department. Via that, the PSU audits will be carried out. Now, question is, who is Cnag? Remember one thing, Comptroller and Auditor General of India has not been defined anywhere in our Companies Act. But yes, there is one Comptroller and Auditor General Rules Act 1971, and there are some regulation or article number 148 to 151 in the Constitution of India, which talks about this person called Cnag. Now, let us understand what do you mean by Cnag and what are the qualifications of Cnag. If we will talk about the qualification of Cnag, there is no particular qualification for the Cnag. Sir, what are you trying to tell? It means when I am saying that there is no particular qualification, a Cnag is a person who is well qualified and well deserved candidate. Again repeating, a Cnag is a person who is a well qualified and well deserved candidate, a person of high integrity and high ability. Now, who is the present Cnag of India? Shri Girish Kumar Murmu. If I am not wrong, he is the present Cnag of India. You can Google it also. So when you actually see the biodata, when you actually see the resume and the experience cycle of the CNAG, you will find that they are not particularly relating to accounting field or law field or economic field or any other field. A person of high integrity, a person of high ability who can watch the India from the macro level is the eligible candidate to become a CNAG. Next point. Sir, who does the appointment of CNAG? CNAG is always appointed by the President of India. Are you getting the point? He is always appointed by the President of India. So what is the salaries and allowances of CNAG? Salaries and allowances of CNAG are equivalent to CJI, Chief Justice of India. His salaries and allowances are exactly 100% same as CJI, Chief Justice of India, and Chief Justice of India. What do you mean by Chief Justice of India? The one who is the judge of the Supreme Court. Next one. Sir, can CNAG also give a resignation? Yes, he can give the resignation, but his resignation is subject to the approval by whom? President of India. Sir, can we remove the CNAG? Yes. There are various grounds for removal of the CNAG. Remember one thing, there can be a misconduct, there can be a proven misbehavior, or if he gets incapacitated. These are the various grounds under which he can be removed. But not only that, you have to pass the 2/3 of the voting in the both houses of parliament, after which he will be standing removed. Next one. So what is the role of CNAG? CNAG plays a very important role. You know that. And tenure. Yeah, I forgot to tell you about the tenure. Yes, CNAG is having a tenure of 6 years or attaining the age of 65 years, whichever is earlier. Next. Sir, what is the role of CNAG? Obviously, role we already know, 139 subsection 7 and 139 subsection 5. CNAG is the one who appoints the first auditors of the government company, as well as he also appoints the subsequent auditors of the government company. Next one. Sir, what are the powers of CNAG? Powers of the CNAG, if I have to tell you, he is a limitless person. He can investigate any public entity. Again repeating, any public entity, any public servant, and can ask any information at any point of time. There are no limitations and boundaries on this person called CNAG. Next point. So what are the duties of the CNAG? You all know the duties of the CNAG. Sir, duties of the CNAG is to compile the financial statements and to compile the books of accounts of the central government, state government, and the union territories. If it is a central government related audit report, financial statement, and books of accounts, it will be laid down in the front of parliament. After that, President of India. If it is a state government, it will be laid down in the state legislative assembly. After that, to the governor of the state. And if it is a union territory related books of accounts and financial statement, it will be laid down in front of the chief administrator of union territories. Clear, everyone? These are the duties of the CNAG. Now, what is the audit of government company? You all know that government company is the one in which 51% of the paid up share capital is either held by the central government or state government or combinedly by both. But sometimes you might have seen that recently amendment has come. Okay, sometimes they use a word called at least 51% of what? Voting rights. Now, this is a major area where most of the students are unable to understand, sir, when to use a word called paid up share capital and when to use a word called voting rights. Let me tell you one thing. If that central government has issued equity shares with differential rights, then you have to test it on the voting right basis. Otherwise, you have to test it on the paid up share capital basis. Right now, sir, who does the audit of these government organizations? These government organizations called government companies are going to be audited by a practicing chartered accountant, firms of practicing chartered accountant, which are empaneled with whom? Which are empaneled with Cnag. Sir, whether the Cnag allocates the audit to us? Yes, like a bank audit, Cnag also allocates the audit to you, and accordingly only you will carry out the audit. Accordingly only you will carry out the audit. Clear, everyone? And remember, Cnag has also right to give you the directions while doing the audit. You have to do the audit as per the directions of Cnag only, and after the completion of the audit, you have to send the report to the Cnag. And if the Cnag thinks that there is one particular area where more clarifications and more information is required, then Cnag may ask you, Cnag may definitely ask you to conduct a section number 143 subsection 6 supplementary audit or section number 143 subsection 7 test audit. Clear, everyone? Now, one of the unique feature of the audit conducted by IAAD. What is IAAD? I already told you. Cnag has one particular department that is called Indian Audit and Accounts Department or Indian Accounts and Audit Department. Now, an IAAD is a constitution of or a composition of various accounting auditing boards for conducting the comprehensive audit. Remember one thing, in the PSUs there are so many in the PSUs there are so many particular, or there are so many organizations which are particularly into a particular field. At that point of time, it is very difficult for a firm of chartered accountants to carry out the audit. For that special kind of organizations, we have the audit boards, which are constituted by the Cnag under IAAD department. They will take the help of the experts and they will carry out the audit accordingly. Next one, audit boards get associated with the experts to discuss their findings and conclusions with the management of these PSUs and their controlling ministries to get their viewpoint before the finalization. That's what I told you. Audit boards will join the hands with whom? They will join the hands with the experts and they will carry out the audit. The results of such comprehensive appraisals by the audit boards with the experts are incorporated by Cnag in his report, which shall be laid down before the authorities. So once the audit reports work with the expert is over, their findings, their data will be collected by whom? Cnag, and finally it will be reported in his audit board. Is it clear, everyone? Yes. Next one, such audit boards have no separate entity and they work under the direct supervision of what? Direct supervision review of whom? Cnag, right, everyone? Now, action on the audit reports. As Parliament and assemblies are occupied with the excessive workloads, these reports are to be received and referred to the various committees made by the Parliament and state legislature. Remember one thing, parliaments and state legislatives are occupied with so many other functions when it comes to India level and state level. So that is why they have made some special committees. Now audit reports and Cnag reports are forwarded to these committees. These committees will analyze these reports and accordingly they will perform their function. So when we talk about the audit of PSUs, everyone, there are total 3 types of committees. How many types of committees? 3 types of committee. Committee number 1, that is known as a PAC, Public Accounts Committee. Committee number 2, that is known as EC, Estimates Committee. Committee number 3, that is known as COPU, that is called Committee on Public Undertakings. Now sir, question arises, sir, what does the PAC do? PAC ka duty kya hai? You can check that. What is the duty of the PAC? PAC is basically concerned with money disbursement. PAC is basically concerned with money disbursement to the big level government organizations. When they do the money disbursements to various big ministries, who is going to take care of that, whether the money disbursed is illegally or not, whether the purpose for which the money has been disbursed, are these ministries are going to use that money for that purpose or not. Next one, expenditures incurred are properly authorized or not, and reappropriation, if the expenditure has been reappropriationed by those ministries, whether this is very much legal and within the rules and regulations or not. All these are the functions of PAC committee. So let me tell you one thing, PAC committee and committee on public sector undertakings, what is the similarity? The similarity is that PAC takes care of those kind of operations which are relating to ministry level, and COPU takes care of those kind of expenditures which are relating to sector level, public sector undertaking level, right or not? Company level. Next one. So what is the estimates committee? If I have to tell you in the one simple word, estimates committee is a watchdog. Estimates committee watches that whenever you want to get any proposal for particular expenditure, estimate committee helps you in forwarding that proposal to the parliament and to the state legislative assembly. Estimates committee is the one which tells you the format within which you have to make a proposal and forward that proposal to whom? Parliament. Now see, what is estimates committee? Report on EEE of the parliamentary policies on the projects undertaken. What do you mean by EEE? Economy, efficiency and effectiveness. Again repeating, triple E means what? Economy, efficiency and effectiveness. So basically estimates committee reports to the parliament ki whatever your policies and schemes and programs are being undertaken, whether they are economically good, efficiently wise good, or effectively wise good or not. Suggest alternate policies also. If the estimates committee thinks that a particular business policy of the parliament is not working out, then the estimate committees may sometimes advise the parliament on the alternative policies also. Next one, examine whether money spent is well within the limits or not. Who does that? The estimates committee. And next, suggest the forms in which the estimates shall be informed to the parliament. Now, what is the last committee, everyone? Committee on Public Sector Undertaking. Bhaiya, committee on public sector undertaking means what? This is a committee, same work what the PAC does. Same work what the PAC does, but at a PAC does it at a broader level like ministry level. This is going to be done at a undertaking level. Now, examine the reports and accounts of PSUs. You can see that this examine the reports and accounts of ministries. This one examine the reports and accounts of PSUs. Next one, to examine the reports of Cnag on PSUs, obviously. To examine the efficiency of what? PSUs. To check whether the PSUs are running in the sound ways or not. And remember, those functions which sometimes, suppose, let's say for example, PAC is very busy, or let's say for example, estimates committee is very busy, then in that case, their functions, if they are unable to do because of their busy schedule, some of the functions of the PAC and some of the functions of the estimates committee can be forwarded to the COPU. What is COPU? Committee on Public Undertakings. Clear, everyone? The major difference between the PAC and COPU is PAC keeps the check on government departments, COPU keeps the check on PSUs in the same way. Focus of these examination, these committees is an examination not only on individual irregularities but also on the system irregularities. And remember, if the PAC, if the estimates committee, if the committee on public sector undertaking comes to know that government ka policies are not doing well, and they need some improvement and alternative measures, then they will not think twice before suggesting it to the government. So it is not only a fault finding machine, it is also giving the relief, alternatives reliefs for the wrong done by these particular projects and all. Now, what is CNAG's role in the PSE audits? Remember one thing, when it comes to the public sector undertakings, the most of the people thinks that CNAG does the audit. No. Cnag never does the audit. Cnag never does the audit. Cnag get the audit done by the practicing CS. Cnag sits with these committees actually. If you'll see that these three committees like PAC is there, EC is there, COPU is there, Cnag sits with them and act as a friend philosopher and the guide to them. If the committees are not able to understand anything, Cnag will help them in understanding. Now see. Cnag act as a friend, philosopher and guide to committees in the PSE audits. His reports form basis for the committees but does not exclude other workings of the committee. Remember one thing, he is not performing the functions of the committee. Don't get confused. He is not performing the functions of the committee, but yes, he is helping the committees in some areas where he thinks that committees are unable to understand a particular aspect. He scrutinizes the notes which the ministries have submitted to them. Say for example, ministries have submitted estimates, some facts and figures to the parliament to get the approval of one particular project. But remember one thing, before going it in the hands of ministry, Cnag will scrutinize those projects, will scrutinize the facts, will scrutinize the figures, will scrutinize the reasonability of and estimates which are given in that particular report. If the Cnag gives the green signal, then only it will be forwarded to the committees to take care and carry on it forward to the parliament, right? It helps the committee in presenting their reports to the parliament, state legislative assembly. Cnag does not perform functions of the committee. That's what I told you. Just works as a philosopher in helping manner. Now, sir, what are the purpose? What is the objective and scope of doing the PSE audit? The objective of the PSE audit is to make sure that we can regularize the government entities. Because when we talk about the audit of the government entities, now the biggest problem is not that government entities work properly or not. The biggest problem, why the most of the government entities are declared as sick unit? They have men, they have machine, they have material, they have money. The biggest M which is missing in these entities is known as management. What is the biggest M missing, everyone? Management. That is the reason we need to regularize the public sector undertakings, right or not? Now, when we talk about the scope of PSUs, I already told you there are total 5 types of audits which we can conduct on public sector undertakings. One is called financial audit, that is given in front of you. Second one is called compliance audit, I'll discuss in detail. Third one, proprietary audit, I'll discuss in detail. Fourth one, comprehensive audit, I'll discuss in very much detail. And fifth one is the most important audit, that is called performance audit. The first 5 scope and objective which are written, I will not discuss it here because anyways we are going to discuss it in a separate manner in the further upcoming minutes, right? Next one, 6th point onwards, let us discuss. To ensure that organization decisions shall be taken by the competent authorities. Basically, the idea behind doing the PSE audit is that CNAG wants to be assured that decisions relating to expenditures, decisions relating to disbursements, decisions relating to estimates, decisions relating to public expenditure should be taken up by the expert committees or should be taken up by the appropriate committees. Next one, helping the government to improve the efficiency and effectiveness. Obviously, the CNAG will give the improvements and suggestions and recommendations to these PSUs so that their efficiency and effectiveness can be rectified. Next one, highlighting the issues of efficiency and economy in the operations. It's not that he is only going to highlight inefficiencies and ineffectivenesses. It will also highlight efficiencies and effectiveness of the government projects. Next one, fiscal and managerial accountability. Now remember one thing, PSU audits are broadly classified into two. So what are the two? In one part of the audit, we talk about the financials. Like say for example, audit of sanction is there, audit of provisioning of funds are there, audit of you can say compliances is there, or you can say proprietary audit where we check that was that expenditure done by the public entity was needful or needless. So where the money is involved, that is called fiscal audits. But other than fiscal audits, there are total major three areas in which PSU audit we concentrate. Sir, what are those three areas? EEE. Sir, what is EEE? Efficiency, economy and effectiveness of the PSUs. Now, what are the elements of the PSU? Remember one thing, PSU audit mein always three parties are involved. Sir, how many parties are involved? Three parties are involved. One is called auditor, one is called responsible party, and one is called intended user. You can see it on the left side. What is the first party, everyone? The first party is known as auditor, second one responsible party, third one is known as intended user. So what is the meaning of this thing? Auditor is the one who carries out the audit. Am I correct or not? Who carries out the audit? In India, we have a SIA, Supreme Institution of Audit. Oh, sorry, SAI, Supreme Audit Institution. Supreme Audit Institution. Under that, we have Cnag. Under the Cnag, we have IAAD, Indian Audit and Accounts Department. So they are known as the basic auditors of the PSU audit. Now question is, sir, who is the responsible party? Responsible party is the management and TCWG of that PSU. Responsible party is the management and TCWG of that PSU. And sir, who is the intended user? Intended user is the Parliament, State Legislative Assembly, President of India. For them, we do this audit. So in the PSU audit, there are three parties. First one is auditor, the one who does it. Second one is the responsible party, those who are going to address the issues and also going to welcome the recommendations given by the Cnag, that is called management and TCW. And the third one is known as intended users. Next one. In the Cnag audit, remember one thing, the three major points which you have to remember in the Cnag audit is, or PSU audit is, subject matter, criteria and subject matter information. Now, sir, what is subject matter? Subject matter means evaluation of the actual results of the PSU by comparing it with the pre-approved limits, by comparing it with the benchmarkings. Say for example, government PSUs mein there is always the most important thing is benchmarking. So suppose government audits mein there is a benchmarking relating to a particular area. Am I correct or not? And this is the actual result. We will compare the actual results and we will evaluate and measure the actual in comparison with the benchmarking. Are you getting the point? That is known as subject matter. Now, second point. Sir, what do you mean by criteria? Criteria is that benchmarking with which we are comparing the actual results. Then sir, what do you mean by subject matter information? Subject matter information is the outcome of that. Let me ask you one thing. There is one particular government project. This government project is benchmarked to be completed in 6 years. But PSU, who was taking care of that particular project, took 7 years. How many years? 7 years. So benchmarking is 6 years. How many years it took it? 7 years. So now tell me, is it efficiency or is it effective or ineffectiveness? You are unable to complete your audit on, you are unable to complete your project on time. So 6 year is what? 6 year is criteria, the benchmark which are set up by the government. Subject matter is what? Comparing the actual with that criteria. Subject matter information is what? Outcome. Let's say for example, it is 5 years mein this project is completed and benchmarking was 6 years. It means that is efficiency and that is as well as effectiveness of the government organization. It means subject matter here is what? Comparison between the 5 and 6. Criteria here is what? Again 6. And what is the outcome of that comparison? That is called subject matter information. And what is the next one, everyone? Whenever you do the types of engagement, there are two types of audit engagements for which you are being engaged in the PSU audit. First one is called attestation engagement. Second one is called direct reporting engagement. What is the first one called? Attestation engagement. Sir, what do you mean by attestation engagements? Attestation engagements are those engagements where you will act like a normal financial auditor. Management will do the comparison between actuals and benchmarking. They will do the comparison. They will only bring you the subject matter information. You will also collect some SAAE, sufficient and appropriate audit evidences, and you will give the reasonable assurance on the same. Like in the normal audit, what we do, that is called attestation. But direct reporting engagement may what? In the direct reporting engagement, auditor himself does this measurement and evaluation between actual and between criteria, that is called benchmarking. He only does the comparison between the two. He only analyzes the outcome and he directly reports it to the required authority. So there are two types of audit. One is called engagement attestation, where management does it and give it to you. One is called direct reporting engagements, where you do it directly. Next one, principles of the PSE audit. So what are the two types of principles of the PSE audit? The two types of the principle of the PSE audit are general principles. Sir, what do you mean by general principles? Same principles which we are expected to follow in our audit. Sir, ethical requirements, independence, integrity, quality control, evidence collection, materiality, engagement or team members, quality control, engagement discussions, all that thing which we generally do in the normal audit. These are the same general principles which we have to follow while doing the PSE audit. You can see that independence and ethics, professional judgment, care, behavior, quality control, and audit engagement, team materiality, risk, documentation and communication. Relating to audit process, as you all know that while in doing the normal audit, we have the three process. What is the first process? Planning stage, execution stage and reporting stage. Clear everyone? Next one, Companies Act requirements relating to PSE audit. I already told you we do the PSU audit under section 143 subsection 5, that is called government audit. But after doing the PSE audit by the firm of chartered accountants, the report will be sent to whom? Cnag. If the Cnag thinks that there is one particular area where the more focus is required, then within 60 days of receipt of the report of the normal statutory audit, the Cnag may order the such auditor or such any other person to carry out a supplementary audit under section 143 subsection 6. And at the same point of time, if the Cnag thinks that yes, test audit is also required, so Cnag also has a right to conduct a test audit on the same entity under section 143 subsection 7. So 143 subsection 5 talks about the normal statutory audit. After that, within 60 days of that report, he may direct that auditor to do the supplementary audit and also the test audit. So supplementary audit is covered under subsection 6 and test audit is covered under subsection 7. Clear? Now we are going to talk about 5 different types of audit. So what is the first audit? 1 minute audit, that is called financial audit. So what do you mean by financial audit? Financial audit is the one where the auditor is hired to express a reasonable assurance in the form of opinion on the financial statement, right or not, so that intended users' confidence on the financial statements of the PSU can be enhanced. That audit is known as what? Financial audit. And here the auditor is going to express an opinion whether financial statements are prepared as per AFRF or not. What is AFRF? Applicable Financial Reporting Framework. And are they representing true and fair meaning or not? True and fair view or not. That is called which audit, everyone? Financial audit. So in the financial audit, you don't have to worry about. Financial audit of the PSU is like a normal audit. But what do you mean by compliance audit? Very, very important. Compliance audit may the focus is to check whether the activities and financial transactions and informations, again repeating, activities, financial transactions and informations, FAI, financial transactions, activities and informations done by the PSUs are in compliance with the already set up standards or not. Are you getting the point? Or are in compliance with the rules and regulations of the constitution or not. See, remember one thing, you are a PSU, public sector undertaking. So you are bound by the rules set up by the parliament. You are also bound by the rules which are set up by the state legislative assembly. So you have to understand one fact very clearly, that whenever you are incurring any financial transaction, whenever you are doing any kind of activity, whenever you are doing any kind of information, whenever you are doing any kind of financial transaction and financial information, all must comply with the rules and regulations of the constitution. Sir, what do you mean by that? You know that what is the name of this audit? First of all, read the name of this audit. What is the name of this audit? This audit is known as compliance audit. It means you have to check the two things in that. One is called regularity, one is called propriety. What do you mean by regularity? You have to check that कि PSUs while doing the financial transactions, while carrying out the activities, they must be doing those activities and financial transaction within rules and regulation to check that actual compliances are matching with the required compliances or not, to ensure regularity in compliancing of laws and regulations. And what do you mean by propriety? In the propriety, you are observing that whether the decisions taken by the public entity, again repeating, whether the decision taken by the public entity was as per the sound financial management and by ethical conduct. Remember one thing, whenever the PSUs are going to incur the expenditure, whenever the PSUs are going to take the decision, the public interest should be the topmost priority. That is called propriety. What do you mean by propriety? Ki whenever you are incurring an expenditure, think like an ordinary person, how he would think while spending his own money. The PSUs are also expected to have the same kind of approach while spending the money, as if it is their own earned money. But unfortunately, in the PSUs, what you find, they spend generally more than what is required. And due to that, what will happen? Ultimately, they will be declared as sick units. Are you understanding what my point, what I'm saying? Clear? Now see, in the PSU audit, again I'm telling you, there are two things in the compliance audit you are going to check: regularity and propriety. Regularity means you are going to check whether the laws and regulations are actually employed by the entity are matching with the required compliances or not. In the propriety, you are checking whether the decisions taken by the entity relating to expenditure and financial transactions are as per the effective financial management and as per the ethical conduct. Right or not? Basically, identifying the cases of needless and wasteful expenditure. It can, now when we are doing the compliance audit, there are total 3 options of doing the compliance audit. Option number 1, it can be done separately as a which audit? Compliance audit. If you want to do, you can do separate compliance audit, or you can do it with the financial statement audit, or you can mix it with the performance audit. So there are total 3 methods of doing the compliance audit. One, you can do it separately as a compliance audit. You can do it by mixing it with the financial statement audit. You can do it by combining it with the performance audit. So with that, your 2 audits are over: financial audit and compliance audit. What is the next audit, everyone? Performance audit. Very, very important. So what do you mean by performance audit? In the performance audit, basically you check that the schemes and the programs which the government has undertaken, like say for example irrigation projects or national highways projects and all, whichever the scheme or program which is undertaken by the government, you have to ensure that the government must have completed their schemes and programs within the budgeted time and within the budgeted cost. Now see, it is an independent and objective and systematic examination of resources deployed by the entity. Now remember one thing, whenever the government undertakes any kind of scheme, what are the 3 major things required? Major 3 things are required: physical resources, right? Human resources, right? And financial resources. So it is an independent and objective and systematic examination of resources deployed by the public sector undertaking to provide assessment of performance of the public entities, programs and schemes. So basically in the performance audit, we go and select a particular scheme of the government. We assess that particular scheme. Right or not? After assessment of that particular scheme, so as to suggest them the improvements on the same. If you think that this scheme is meeting the criteria of EEE, what is EEE? Economy wise, efficiency wise, effectiveness, then there is no such improvement required to be done. You are doing so good. But if the schemes and the projects which are undertaken, the programs which are undertaken by the government are misutilization of resources is taking place, or underutilization of resources is taking place, or it is not economical at all, you are not unable to complete your project in budgeted time, or you are unable to complete your projects in the budgeted cost, then in that case there is definitely a scope of improvement required, for which we assess their particular scheme so as to facilitate also them in taking the corrective measures. So purpose of performance audit is not only to pinpoint the negative areas. Purpose of the performance audit is also to give you the alternatives for improvement, and at the same point of time helping you in implementing those improvements in the undertaken projects and scheme. Now, who conducts this? Obviously, it's a PSU audit. So who will conduct it? Cnag, conducted by the Cnag through the various subordinate officers of IAAD. You all know what is IAAD, Indian Audit and Accounts Department. In conducting performance audit, Cnag evaluates 3 areas. I already told you EEE. What is EEE? First one is economy. Now tell me one thing, to run a business organization, do we need physical resources? Yes, sir. Do we need financial resources? Yes, sir. Do we need a human resources? Yes, sir. Would you like to acquire these resources at highest cost or lowest cost? Sir, lowest cost. But at the same point of time, by compromising the quality or without compromising? Sir, without compromising the quality. And at the same point of time, to be delivered little bit late or to be delivered on time? To be delivered on time. Therefore, getting the best quality material or getting the best quality resources at a least cost at a true time is known as economy audit. Now, what do you mean by economy audit? It evaluates how to minimize the cost of the resources by getting the best prices but keeping appropriate quantity, proper quality and delivery in due time. What are the three things you are asking? Appropriate quantity should be there, proper quality should be there, delivery in the due time. That is what do you mean by checking what? Economy in the PSE audits. So what is the next thing? Efficiency. Now in the efficiency, let me give you a very simple example. Suppose there is one PSU which is undertaking a particular scheme, and in that particular scheme, what is required? In that particular scheme, one plant and machinery is required, and the actual utilization capacity of that plant and machinery is to run for 16 hours in a day. But you are using that plant and machinery only for 6 hours in a day. For the remaining 10 hours in a day, you are keeping that idle. It means, are you making the efficient use of the resources? Answer is no. You already have taken the loan from the bank for a particular project. Say for example, 5,000 crores of loan you have taken from the financial institution at the rate of 10% of the rate of interest. But you started utilizing that money after 6 months. But remember one thing, you are using the money after 6 months, but the bank will not stop charging the interest. Bank will keep on charging you what? Interest. Are you getting that? Again, it is inefficiency. You hired a particular civil engineer to construct, to make a plan for a particular metro rail project. Are you getting the point? But that civil engineer was hired in the January, but his services are being undertaken from the month of July. It means from January to June, you have paid him a salary free of cost. That is again inefficiency. Keeping the resources idle is known as inefficiency. So that is what inefficiencies or efficiency audit. It evaluates how to maximize the output, that is input output, by appropriate procurement practices. What do you mean by appropriate procurement practices? Now tell me one thing. You all know that in the big government projects, we need to acquire a big source of raw material. Right or not? Now, when we talk about the raw material, the first thing comes to our mind is raw material must be invited by a tender invitation system. That is called best procurement. Resources should be protected and maintained. So, it is a government's responsibility to ensure that after acquisition of resources, they should be protected and maintained. Efficient management should take place. Efficient operation procedures should take place. And at the same point of time, optimum utilization of resources should take place. What should take place? Optimum utilization of resources, reducing the overall cost. Now, the third most important E, which we check in the performance audit, is known as effectiveness audit. What is the name of the audit, everyone? Effectiveness audit. Now, what do you mean by effectiveness audit? Effectiveness audit is also about checking the budgeted time and budgeted cost. Means what? Basically, in the effectiveness audit, we are checking that the organization, the PSU, which has undertaken a particular scheme or a project, makes sure that they should complete their project in a budgeted time within the budgeted cost. Right or not? For that, we have to evaluate so many things to check out their effectiveness. Now, what are the areas we have to analyze to check out their effectiveness? First of all, we have to understand, evaluate the objectives of that scheme. Remember one thing, whenever you are checking this particular thing called effectiveness, you have to first understand the objective, you have to first understand the goal of that particular project, and you have to check that whether their objectives are meeting their criteria or not. Are you getting the point? Are they simply evaluation? You have to simply do the evaluation and understand their objective, because you are not allowed to raise the finger directly on the government's projects when it comes to effectiveness. It's a very simple thing, try to understand. Until and unless you don't know, you do not understand what kind of project they have undertaken, what is a feasibility study, until unless you do not do the feasibility study, until unless you don't know what kind of expenditure, resources, things are required to carry out that particular project, how you can raise the finger on government's effectiveness over the particular projects and schemes. So therefore, before raising the finger whether the government projects are effective or ineffective, you have to first understand and evaluate the objectives of that schemes. Next, analyze the results of your R&D. Check that whether your results which you have evaluated and the government results which are actually present are matching or not. See, checking the adequacy of the management control system for measuring, controlling, and reporting effectiveness, socio-economic impact of policy and program, effectiveness of program components, training, developing and all. You have to check that whether government is able to give the proper training to their staff or not. Because obviously, if you will not give the proper training to your staff, you will not be able to complete your projects on time. At the same point of time, suggestions. Make sure that government should always be having a plan B to complete the project on time. So you cannot always take up the projects and schemes only with one plan. You have to take up the subjects and schemes, projects and schemes with always having a backup plan. Now, factors to be considered while planning the performance audit. So I hope you all understood the performance audit. Performance audit meant triple E, we have to check economy of the government, PSUs, efficiencies, decisions relating to PSUs and effectiveness of PSUs. Next one, factors to be considered while planning the performance audit. Point number 1, understand the entity, acquiring the knowledge of client's business. You have to understand it via various sources like press release, you have to check the media coverage, you have to check the documents of entity, legislative documents by which you will understand what PSU is all about. Remember, we are only talking about the 9 factors which are required to plan a performance audit, not to execute. Defining the objective and scope. Make sure that you should define your objective of that particular scope, particular audit, and you also have to understand your area of the coverage when you are then auditor of a PSU. Next one, determining audit criteria. Sir, what do you mean by determining audit criteria? Determining audit criteria means what? You have to make sure that you are setting your own benchmarks with which you would like to compare the government's actual results. Next one, deciding your audit approach. What do you mean by deciding your audit approach? Deciding your audit approach is doing various kind of surveys on the basis of which you will decide whether you have to do the RAP, and after RAP, which FAPs you have to do. RAP means risk assessment procedures and FAP means further audit procedures. Next one, developing the audit questions. Now, what do you mean by developing the audit questions? Make a checklist of those questions on which you are looking for an answer from that PS. In the planning stage only, you have to develop that particular checklist on the basis of which you would like to ask an answer from a PSU. Next one, remember one thing, while doing the PSU audit, the approach is completely different. In the PSU audits, our focus is less on financials, but more on attitudes, operations and administrations. Are you getting the point? Less on what? Less on what? Financials, more on attitudes, operations and administration of the government. So remember one thing, while doing the PSU audit, not only you should be aware of the various guidance notes and principles which are issued by the Cnag, how to conduct the PSU audit, but at the same point of time, your whole engagement team should be competent enough and trained enough to understand that while doing the PSU audit, this is required or that is required. And at the same point of time, you also have to decide at the planning stage, will you be needing any particular help of an expert or not. Next one, preparing the ADM. Sir, what is ADM? ADM stands for Audit Design Matrix. Sir, what do you mean by Audit Design Matrix? Audit Design Matrix means what? Audit Design Matrix means an area or a particular piece of document where you will be dividing your total observations into 5 columns. What are the 5 columns? First one is audit objective. Second one is going to be audit questions. Third one is going to be audit criteria, that is your benchmarking. Fourth one is the evidences you have collected and data collection and analysis method. Now, what is the step number 8? Step number 8 is establishing the timetable and resources. Remember one thing, we do the audit planning as per SA 300 to do what? To complete our audit on timely basis, efficiently basis and effectively basis. Same thing you have to do while doing the PSU audit also. Next one, intimation of your audit program to the which committee? Intimation of your audit program to the audit entities. Remember one thing, once your planning is over, make sure that you are intimating some part or the relevant or the considerable part of your program with the PSU audit, because if you want the PSU audit to be conducted on time, well in advance, or to be completed efficiently and effectively, it is very much important for the auditor to ensure that some part of the PSU audit is already being informed to entity. This is how you plan your performance audit. So everyone, performance audit is highly important part of your PSU audit. Next one, Sir, what do you mean by comprehensive audit? Sir, comprehensive audit is basically all about checking the performance and efficiency again. Basically, this audit is generally conducted on the manufacturing entities of the public sector undertakings, where the large amount of raw material, labor and everything is involved, right or not? It covers the areas which are already covered other than internal auditor, also known as efficiency cum performance audit, varies from entity to entity. So that's what I told you. Okay, it is not that the same comprehensive audit you can perform on one manufacturing and the same program you can apply it on another manufacturing. No, entity to entity, your comprehensive audit will vary. Next one. Concentration is again on efficiency, effectiveness and economy and assist the legislation in receiving the performance of the PSUs. Basically, in the comprehensive audit, following areas are going to be covered. What are the areas going to be covered? Let me tell you orally. Remember one thing, when you are doing the comprehensive audit, you have to check that whether there is any research and development program is there or not. Whether the project planning done by the entity is what? Is adequate or not. Next one, system of project formulation and implementation is sound or not. So while doing the comprehensive audit, you're going detailed into the examination of their operations. While checking their operations, while checking their manufacturing activities, various set of questions will come to your mind as a comprehensive auditor. So as a comprehensive auditor, what is the question number one? Do they have the R&D department adequately installed or not? Whether their project formulation and implementation is sound or not. Whether their project planning is adequate or not. Comparing their overall capital cost with the planned capital cost. What they have actually spent and what it was planned, make the comparison of the both. Next one, evaluation of the capacity utilization. Obviously, there can be a chances that their machinery and labors and raw materials are being underutilized, or there may be a case of what? Shortages of that. Means you did the less stocking of that. Sometimes you may do the piling up of the stock, overstocking, that is also a problem. Understocking, that is also a problem. Adequate stocking is required. And at the same point of time, whether the cost control measures are adequate or not. Are they able to implement the cost control measures on their project or not? Next one, whether there is any undue wastage or unproductive time in that. Next one, whether products are economical and effective or not. Next one, whether planned rate of return is achieved or not. And next one, system of repairs and maintenance. So these are the various set of areas which you generally concentrate upon when you are conducting a which audit, everyone? When you are conducting a comprehensive audit. Now, last but not the least, the most important audit after performance audit is known as proprietary audit. Now, question arises, sir, what do you mean by proprietary? See, in the PSUs and in the government organizations, the biggest problem is they do a lot of wasteful expenditures as well as they do a lot of needless expenditures. So, proprietary audit concentrates, first of all, you should know that the word proprietary has come from the word called proper. Now, let's say for example, I am a earning fellow, right or no? I earn by doing my duty, by teaching and by doing the practice and other sources of incomes which I have. I earn an income. I know that that is my hard-earned income. When I spend it, I think twice before spending it. But when it comes to the PSU, public sector undertakings, they may or may not be thinking twice before spending the public money. Now tell me one thing, how do they spend the money? They never take the wise decisions. Most of the times the PSU decisions are always unwise, wasteful expenditures, needless expenditures, avoidable expenditures, infructuous expenditures. PSU entities are only allowed or should be only allowed to spend the expenditure if it is in the public interest, because what they are spending is also the public funds. Tell me, the biggest source of the government is what? Revenue from taxes. We pay the GST, we pay the income tax, we pay the other taxes. This is the biggest revenue. So that is not their money. That is public's money which should be spent on the public. But when you do it in a needless manner, when you spend it in a wasteful manner, when you spend it in a avoidable expenditure which could have been avoided but you did not do the necessary efforts, in such cases there comes the need of which audit, everyone? Proprietary audit. So proprietary audit is very different from the financial audit. In the financial audit, we only and only work on the basis of what? Rules and regulations, evidence collection, that's it. So, if I have collected a particular evidence relating to particular expenditure, I will not go to the management and ask them, okay, why did you spend it? But in the proprietary audit, you have every right to ask the government entity or the public sector undertaking, okay, why did you spend it when it could have been saved? When it could have been unspent? Why did you spend this money? And moreover, you have to read the idea behind spending the money. Is it spent for the public interest in a sound business practice manner or not, as per a custom of trade or not? That is where the need arises for proprietary audit. The word proprietary has come from the word called proper, an audit where we go beyond the rules and regulations, where we check the substance of the transaction instead of evidence. It concentrates on two areas, process and purpose. What is the purpose? It ensures that whatever the public expenditure is incurred, it must be incurred in the public interest. Real benefit should be given to the public at large. And what is the process of doing that? Make sure that expenditures incurred must be as per the commonly accepted customs and at the same point of time statement of standards of conduct. Whether PSU entities achieve financial prudence or not. This is what the basic idea behind proprietary audit. And let me tell you one thing, in the companies Act, so many areas where we have already talked about the proprietary audit. If I'm not wrong, section number 143 subsection 1 also talks about proprietary audit. Section number 143 subsection 6 and 7, just now we have done supplementary and tax audit, that is also a proprietary audit. Section number 143 subsection 12, duty to report a fraud, that is also a proprietary obligation. Section number 143 subsection 11, almost 8 to 9 clauses in the CARO are there which are also working on proprietary basis. And if you will carefully see my CARO particular video relating to CARO, you will find out that where we have talked about this particular thing, CARO is nothing but based on the proprietary element only. Are you understanding the point? Yes. Next point. In the proprietary audit, it is very much different from the financial audit where the auditor is restricted to evidences, whereas in proprietary audit, auditor is interested in identifying the cases of impropriety, needless, wasteful and avoidable expenditure. Proprietary audit is basically based on these 5 principles. So, what are the 5 principles? Now, look at these principles. Principle number 1, expenditure shall not be more than the occasion demands. Obviously, suppose the expenditure demand is 10 crore rupees, but the government is spending 15 crore rupees on that to show its profoundness. That is not required. How much is required? You should spend that much only. While spending, whether the same degree of vigilance has been applied or not, that also we have to check. Like, tell me one thing, as an ordinary prudence, as your father or mother, do they think twice before spending the money? Do they ask you, when you ask the money, mama, I need the money for the coaching and all, do they ask you the question, yes, for where, beta, where are you taking the coaching? Why this much of money is required? Is it worthwhile or not? Yes, ordinary prudence person does that only. But when it comes to the public sector undertaking, sometimes they do spend the money without thinking in a ordinary way. So that is the second principle. Next one, you should not utilize the public money for the benefit of you should not use the public money for any such kind of benefit which is indirectly and directly coming to you only. Next one, should not result into indirect benefit to the authorities. That is what I was telling you. Should not be utilized for the benefit of a particular person or group of person. Remember one thing, you should not spend any kind of expenditure which is benefiting a particular person or a particular section of persons or a particular group of persons. Because if you will, let's say for example, you have introduced one scheme which is very nice for the poor Hindu families, like giving the 1 lakh rupees to those Hindu families whose annual income is less than 2 lakh rupees in a year on their daughter's marriage. But this will provoke whom? Muslim community. If you will do it for the Muslim, it will provoke whom? Hindu community. So you should not spend any kind of expenditure for a particular section's benefit or for a particular person's benefit. Last but not the least, apart from agreed remuneration, remember one thing, most of the times what will happen, proprietary audit will be conducted on various areas which are benefiting the public servants. Most of the times government will take the decision which is directly or indirectly benefiting the public servants only. We are not talking about here for benefiting of public servants. We are talking about benefiting the public at large. It should be spent for the public, not for the benefit of the public servants. They are already getting so many things. Now see, if you are working in a government organization, you are getting a bonus, gratuity, PF, ESI, pension after getting a retirement. So there are already so many benefits to you being a government servant. You don't need any extraordinary benefits other than that. So money should be spent for the public interest, not for the public servants. Next one. Cases of propriety in company audit, I already told you. Karo mein, if you carefully see, clause number 3, 4, 8, 9, 10, 11, 13, 15, 18, they all are Karo based clauses, almost 9 clauses. And if you'll see the section number 140, the subsection 1, 6 and 7 and 12, they are all cases or all sections and subsections which are also talking about the propriety element. But the biggest problem in the propriety is what? When we actually see the expenditures which are incurred by the PSUs, we see that those expenditures are incurred within the rules and regulations. As they are being incurred within the rules and regulations, that is the biggest problem. Why? Because at that point of time, evidence is not something which will be able to prove you wrong. It will be the logic behind that expenditure which you have to explain them. Say for example, I will ask the management, sir, this 10,000 expenditure, I think it is needless. The management of the PSU will say what? No, we have incurred this expenditure as per the rules and regulations. So evidence is not a useful thing when it comes to PSU audits. It is the logic which you have to prove in case of propriety audit. That is the biggest problem in the propriety audit. Because all the expenditures, even though sometimes are incurred within rules and regulation, but may look like avoidable, may look like useless, may look like wasteful and needless expenditure. But for that, you need to prove the logic, not with the evidence. This is what the major thing which makes this particular audit different from others. Right, everyone? So that brings an end to your audit of PSUs, everyone. I hope you liked the session very well, and I hope you understood and revised the whole PSU audit in this particular 1 hour of video. So thank you so much, everyone. Thanks for lending your patient ears. I'll borrow it again. Bye-bye. Hello everyone, how are you all? Welcome to the another lecture, and here is your faculty, Pse Grover, again welcoming you to the another lecture on rapid revision batch on our paper number 3, Advanced Auditing and Professional Ethics. Now, I'm going to make you introduce today the very most important topic that we were all waiting for since long, and you all know that this is one of the biggest amendment which came in our ICAI portion. Now, when it comes to this topic, the name of the topic is known as Caro 2020, right or not? You all know everything about Caro 2016, and you all know that Caro 2016 was already replaced by the Caro 2020 2 years back. But sir, if it was replaced 2 years back, why it has been introduced today? So if I have to tell you the little bit of history and background of the Caro, first try to understand that I still remember 25th February 2020. 25th February 2020, just 1 month before the end of the financial year of 1920, the notification by the Ministry of Corporate Affairs came that Caro 2020 has come and it is going to replace Caro 2016. Then sir, what happened? Why it was not made applicable from the 1920 financial year? What happened in the very next month? As you all know that in the March month, what happened? The lockdown happened. Due to the lockdown, the Ministry of Corporate Affairs made a declaration that Caro 2020 will be deferred by 1 financial year. So instead of being applicable from 1920 financial year, it was supposed to be made applicable from 2021 financial year. Sir, after that what happened? After that, again in the March 2021 May, again MCA notification came कि Caro 2020 is not going to be applicable for 2021 financial year. Let's make it applicable from 21-22 financial year. It means Caro has been deferred by Ministry of Corporate Affairs for almost 2 financial years. So what it was supposed to get implemented from 1920 financial year, now it will get implemented from 2021 financial year. Sorry. It was supposed to get implemented from 1920 financial year. Now it is now implemented from 21-22 financial year. It means right now, today, if I'm not wrong, this is 23rd April 2020 today. 420. 23rd April means now 22-23 financial year has started. It means right now the audits of 21-22 financial years are going on. So this is the first time for all the CA fraternity who are in practicing, and as well as for the student. For the first time, it is applicable for your examination also, and at the same point of time, it is applicable first time for our practical scenario also. So Caro 2020 is not only new for you, Caro 2020 is new for us also in terms of applicability, and in terms of applicability for you in the May 22 examinations. Clear everyone? Because up to December 21, the CARO 2016 only was applicable. Now, let us understand the next topic. Now, sir, are there any major changes between the CARO 2020 and CARO 2016? Let me tell you one thing. There are no major changes at all. Only the changes have come in the clauses, little bit of clauses. 7 clauses has been introduced. Sir, if we are not wrong, CARO 2016 mein there were 16 clauses. Now CARO 2020 mein we heard that there are 21 clauses. So difference is only 5 clauses. Sir, 2 clauses also eliminated, and 2 clauses when got eliminated, it means 16 minus 2, 14, and 7 clauses got added, means 21 clauses have been added in the CARO 21. And not only that, in the CARO 2020, so many new things have been added from the proprietary point of view, which you have to understand for the purpose of your May 22 examination. So in my opinion, if I have to tell you, you should minimum expect a 5-mark question, 5 to 6 marks area going to come from this particular topic called CARO 2020, because it's been 2 years ICAI was waiting to test you people. And if you remember, in your previously printed study by the ICAI only, the CARO 2020 was made included in the material, but unfortunately due to the 2-time deferment given by the MCA, this was not yet implemented. But now the wait is over. May 22 you are going to get tested with the CARO 2020, and along with that we are also going to be implementing the CARO 2020 from our practice point of view also. So now let us understand, sir, what is CARO 2020. Now, as you all know, the section number 143 subsection 11 defines the company audit report order. It is company's audit report order 2020. Sir, why it is given under a section? Remember one thing, central government has ordered the statutory auditors. Try to understand why the word order is being written at the end. Central government has ordered the statutory auditors ki bhaiya, while doing the statutory audit, if you are doing the statutory audit of these following companies, then in that case CARO 2020 reporting also you have to do. So central government has ordered the statutory auditors to do the additional reporting on those 21 areas which the central government is looking for. But it is not applicable to all the entities. It is only applicable to those entities which are covered under section number 143 subsection 11. It means there are some set of entities which are not covered under CARO 2020. It means those companies may CARO reporting is not required. Sir, not required. Point number 1. Point number 2, sir, is CARO 100% testing? Answer is no. CARO is also a test sampling, or it is also a test checking kind of concept. Are you getting the point? Point number 3, sir, is CARO a normal audit? Answer is no. CARO derive its roots from the word called proprietary. So CARO is basically a proprietary audit. Question number 4. Sir, is CARO a separate audit report? Answer is no. CARO is not a separate audit report. You only have to issue the statutory audit report. In the statutory audit report, you are going to add one annexure at the end. That is a reporting under CARO 2020, section number 143, subsection 11. So, no separate report is required. CARO 2020 is a part of your statutory audit report which you are going to issue as per SS 700 series. Is it correct? So these are some of the clarifications which you need to have before understanding the CARO 2020. Now, let us understand, sir, when the CARO 2020 came. As I already told you, the first time the notification for the CARO came on 25th February 2020. So what is the date, everyone? The date is 25th February 2020. But sir, the first financial year from where the CARO 2020 will be made applicable is the 21-22 financial year. Sir, you are saying the date is that and financial applicability is this. As I already told you, 2 times the Ministry of Corporate Affairs have deferred the CARO 2020. That's the reason the date is different, and at the same point of time applicability is different. So what is the date you have to remember? 25th February 2020. And the most importantly, what is the first financial year when the CARO was made applicable? CARO was made applicable from 21-22 financial year. It means all the financial statements which started from 1st April 2021 ending on 31st March 2022, those financial statements are going to be reported under CARO 2020. Clear, sir? Yes, sir, very much clear. Now the question arises, sir, what are the major differences, if you can tell us, between the CARO 16 and CARO 2020, you can see that in the CARO 16 there were 16 clauses. How many clauses were there? 16 clauses were there. But in the CARO 2020 there are 21 clauses. Sir, the difference is only 5. No, the difference is so many. 7 new clauses have been added. It means 2 existing clauses were removed and so many new things have been added in the existing clauses that you are going to come across in the next half an hour, 45 minutes of discussion, right? Next one. So what is the next date? CARO 2016 was applicable from the 15-16 financial year and it is applicable from the 21-22 financial year. Sir, why you are telling us about anything about 2016? Remember one thing, ICAI has a tendency to ask you the difference between the two things when the one thing is getting replaced by the another. So that becomes my moral responsibility to make you understand कि भैया don't only talk about CARO 2020, have some little bit of information on CARO 2016 as well. तो CARO 2016 का date of notification was 29th March 2016. CARO 2020 का date of notification is 25th February 2020. How many clauses? 16 clauses. How many here? 21 clauses. What was the first financial year when it was made applicable? It was 15-16. And what is the financial year when it is now applicable? It is applicable from 21-22 financial year. So now I hope you already understood the differentiation of CARO 2020 from the CARO 2016. Next thing what you have to understand, sir, CARO 2020 is applicable to whom? CARO 2020 is applicable to all the companies including foreign companies specified under section 2 for subsection 42. So they are saying that if you are a company in India, then to CARO 2020 is applicable. But if you are a foreign company also in India, as specified under section number 2, subsection 42 of the Companies Act 2013, it means a company incorporated outside India, but having a place of business in India, acting on its own or via agent, doing the physical business or via electronic media, then in that case, being a foreign company in India also, the CARO 2020 will be applicable. So this is what the meaning of applicability on the left side. Now, sir, what is the meaning of non-applicability? So, bhaiya, if you are a Section 8 company, if you are a charitable religious Section 8 company granted a license to operate as a Section 8 company by the central government of India, then in that case, CARO is not applicable to you. CARO is not applicable to you if you are a one-person company. CARO is not applicable to you if you are a banking company. CARO is not applicable to you if you are an insurance company. And CARO is not applicable to you if you are a private limited company satisfying 4 conditions put together. All the 4 conditions to be satisfied, then CARO 2020 will not be applicable to you. Is it clear, everyone? So, sir, should we repeat the non-applicability list? Yes, sir. Section 8, OPC, small, banking, insurance, and private limited company. Sir, what kind of possibility of error we may do in the examination? Let me tell you one thing. The first possibility of error is sometimes when we use the word OPC, small, dormant, the dormant word comes to our mind. The dormant also we write in the exception list. Answer is no. You don't have to write. Then second possibility is electricity, insurance, and banking. Nowhere it is written electricity company. Only the banking and insurance companies are those companies on whom CARO 2020 is not applicable. So CARO 2020 is not applicable on Section 8, OPC, small, banking, insurance, and most importantly, such private limited company on whom 4 conditions are required to be satisfied. Sir, if I have incorporated a private unlimited company, again repeating, if I have incorporated a private unlimited company, then CARO is not applicable. Is it? No. If it is a private unlimited company, CARO is automatically applicable. Exemption is not given to the private unlimited company. Exemption from the applicability has been given to the private limited company which is satisfying the 4 conditions. It means if you are a private limited company satisfying these 4 conditions, CARO 2020 will not be applicable to you. Sir, can you please tell us the 4 conditions? Here it is. Condition number 1, that private company is neither a public neither a holding of a public company nor a subsidiary of a public company. So bhaiya, you are a private limited company, neither you should be subsidiary of any public company or nor you should be a holding of any public company. Is it clear? Condition number 1, neither a holding of a public company nor a subsidiary of public company. So no change in this point when it is compared with CARO 2016. Next point, sir, Caro 2020 का second condition in case of private limited company, your total paid up share capital plus free reserves at any point of time, total paid up share capital plus free reserves shall not be exceeding 1 crore. So third one, your outstanding borrowings in individual or in aggregate manner at any point of time shall not be exceeding 1 crore. Next one, your turnover including discontinued operations turnover, your revenue including discontinued operations turnover shall not be exceeding 10 crores. So sir, if I am a private unlimited company, Caro is applicable. Sir, if I am a private limited company, then 4 conditions to be satisfied. Condition number 1, you should neither be a holding nor a subsidiary of a public company. Condition number 2, your total paid up share capital plus free reserves shall not be exceeding 1 crore. Sir, exactly 1 crore, not applicable. 1 crore, 1 rupee, applicable. Sir, your outstanding borrowing shall not also be exceeding 1 crore and your revenue including discontinued operations turnover shall not be exceeding 10 crores. So, neither a holding or subsidiary, 1 crore, 1 crore, 10 crore, not exceeding. It means up to these limits, Caro is not applicable to you. And remember, not one of the condition you have to satisfy, you have to satisfy all the 4 conditions. Clear everyone? Yes, sir. Now, let us understand, sir, while doing the additions and deductions, while doing the calculation, what we need to take care of. When you are doing the calculation of the total paid up share capital, the formula is going to be this. Now see, total paid up share capital is equal to equity share capital plus preference share capital minus calls in arrears minus calls in advance minus share application money pending allotment. This is a formula. Sir, what do you mean by free reserve? Free reserves, they are saying that include all the reserves. Sir, either revenue, yes. Is it capital? Yes. DRR, yes. Securities premium, yes. Revaluation reserve, yes. All the reserves which you are seeing on the liability side, all you have to club it out. But if there is a debit balance of P&L, again repeating, if there is a debit balance of P&L, first adjust that debit balance of P&L from the reserves. If the debit balance of P&L is more than reserves, then only you can adjust it with the capital. Remember, if the debit balance of P&L is given, it means losses of the company for the current year is given. First, satisfy or set off those losses with the reserves. If the current year losses are more than the reserves, then only you can set off with the capital. So, first priority with the reserves, second priority with the capital. First to be set off with the reserves, again second to be set off with the capital if the need arises. You are not directly allowed to get it satisfied or directly get it set off with the capital. Am I clear, everyone? Yes. So paid up share capital, free reserve, any doubt? No doubt. Next point, sir, borrowings, what do we have to include and what do we have to exclude? Everything you have to include. Everything, sir. Small borrowing, big borrowing, secured, unsecured, short term, long term, individually, aggregately. Every type of borrowing you have to add. Every type of borrowing. While doing the overdraft facility, while checking the overdraft facility, remember one thing, you have to take the gross overdraft facility to be taken. You don't have to deduct any FDs if given as a security. Next point, even the credit card bills are also to be added. Remember everyone, all the types of borrowings to be added. All the types of borrowings to be added. Next one, turnover. So turnover ke case mein continuing the operation turnover you have to add. Discontinued operation turnovers also you have to add. Service related turnover you have to add. 2 things you have to reduce. So what are the 2 things? Remember, only and only these 2 things you have to reduce. One, if any trade discount is given, and second thing, if any sales return is given. So if the trade discount and sales return is given, you have to reduce it. Otherwise, you don't have to reduce anything. Is it clear? Yes. Next point. Most importantly, next point, ki sir, what if the GST and custom is included in the turnover? So remember, bhaiya, GST and custom is not your revenue. It is a government turnover, government's revenue, then reduce it. Sir, if it is separately given, ignore it. Clear? So these are the various things you have to understand while calculating the Caro ka private limited ka 4 conditions. So again repeating, sir, Caro ka date bata do sir ek baar fir se, 25th February 2020. Are you getting it? 26th February 2020. Next one, sir, Caro ka first financial year, 21-22 financial year. Sir, Caro is applicable to whom? All the companies, including foreign companies. Sir, Caro is not applicable to whom? Section 8, OPC, small, banking, insurance, such private limited companies which are able to satisfy 4 conditions. Sir, all the 4 conditions? Yes, sir, all the 4 conditions. Sir, can you repeat the conditions? Yes, sir, I can repeat. Point number 1, neither a subsidiary nor a holding of a public company. Second one, your total weight of share capital plus free reserve shall not be exceeding 1 crore. Third one, your outstanding borrowing shall not be exceeding 1 crore. Fourth one, your revenue including discontinued operations turnover shall not be exceeding 10 crores. Clear cut, understood. And sir, what if you have a private unlimited company? Caro is automatically applicable. Sir, what if I'm an Nbfc, non-banking finance company? Caro is applicable. But sir, I was Nbfc. Caro was made applicable to me. Later on during the financial year, I converted my Nbfc into a bank. Caro is not applicable. So from the date of application, from the date of conversion for that financial year, Caro will not be applicable onwards. Next point, sir. Sir, is Caro applicable to the consolidated financial statement? No. Caro is only and only prepared for the standalone financial statement, not applicable to consolidated financial statement, except there is one small clause, clause number 21, given under the Caro 2020, in which I will tell you to refer the financial statement. Next point, sir. Sir, it does not apply to the CFS. In case of, remember one thing, in case of branches, put together you have to see these limits. Because sometimes the company try to avoid the Caro applicability and they will divide the turnover bit among the branches. But when you are taking the branches put together, you have to see the limit. Right, everyone? Caro 2020 is not separate. It is an extra part of your audit report. Caro 2020 applies to Nbfc. I already told you, but Nbfc later on converted to bank. Caro will not be applicable. Next one, Caro 2020 has to be seen from the which point of view, everyone? Proprietary point of view. Again, I'm telling you, proprietary point of view. Like we do this kind of audit in case of PSU's audit in the last video. Here also, you have to check it from the proprietary point of view. Next one, sir, Caro 2020 mein how many clauses are there? I already told you, sir, as compared to Caro 2016, 5 extra. No, sir, no 5 extra, 7 extra, because 2 clauses of the Caro 2016 has been eliminated. So 16 minus 2 makes it to 14 plus 7 added makes it to 21. So sir, what are the 21 clauses? तो भैया बहुत सिंपल तरीके से करेंगे and I will make you understand. Your eyes should be on the notes and listen to me properly, and I will make sure that कि Caro 2020 के all the clauses will go inside your head. Now point number 1, sir, Caro 2020 का clause number 1 talks about PPE, property, plant and equipment. Sir, PPE में what is the problem? The auditor has to ask some few set of questions. Sir, question number 1, do you maintain reliable records relating to your plant, property and equipment or no? Company is saying yes, then show me. Do you have all the properties in your name? Company is saying yes, sir, some are in my name, some are in the name of other person. In whose name you have taken the property? Why you have not taken it in your name? What is the period of holding? What is the net carrying value of that property? Are you getting the point? What is the description of that property? That is what the question I am going to ask. Third case mein I am going to ask the company, okay, do you maintain the proper records? Yes, sir. They said we maintain the proper records. Do you maintain the particular location of the assets also, where they are located? Yes. Do you maintain a separate record for the intangible assets? Yes, sir. We maintain it. Then another set of questions to the entity is, okay, sir, do you do the physical verification at the regular intervals? They are saying yes, sir, we do it. Then my fourth question is, sir, what is the condition? What is the status of those pending litigations relating to the Benami properties? Is there any Benami property on which the litigation is pending? If pending, tell me the status. And what is my next question? If you have done any revaluation of the asset and the revaluation is greater than 10%, then please make me available your registered valuer's report. So my few set of questions were, do you maintain the proper records? Yes. Do you maintain the location records? Yes. Do you maintain the separate records for intangible? Yes. Can you show me the title or document of title papers for the asset? Yes. But some of the documents where I saw someone's other name is there. So I asked the company, why did you not take these assets on your own name? Why it is in the other's name? What is the description of the property? What is the period of the holding? What is the gross carrying value of that property? Is there any pending litigation relating to Benami properties going on in the court of law? Next one, do you do the physical verification at the regular intervals or not? And next question, did you do any kind of revaluation of your asset? They said yes, sir. How much? 8%. Okay. But how much? 11%. Show me your registered valuers report. So these are the various set of questions which you have to ask in the clause number 1 relating to property, plant and equipment. Sir, moving to the clause number 2. In the clause number 2, inventory, question will remain same. Do you maintain the proper records of inventory? They said yes. Sure, they said yes. Do you do the physical verification of inventory at the regular intervals? They said yes. Then my third question is, please tell me, did you find any discrepancies in the record? They said yes, sir. Sometimes we found some discrepancies, but did you get it notified in your books of accounts? They said yes. Then my most important question I asked them is, did you give your inventory as a security for a particular loan or called working capital loan more than 5 crore rupees? They said yes, sir. If the inventory has been given as a security for obtaining a working capital loan of more than 5 crore rupees, then there are two things the auditor has to check. Point number one, do you file quarterly stock statement with the lender or not? They are saying, yes, sir, we are filing the quarterly statement. And next most important thing, whether you have matched it with the books of accounts. If it is not matching, give me the details. Again, repeating, proper records of the inventory are maintained or not? Regular verification at the regular intervals, you are doing it or not? Are you finding any discrepancies? Did you note it down in a proper value or not? And if the discrepancies are more than 10%, make sure that they are properly adjusted in the books of accounts. Did you take any working capital loan of more than 5 crore rupees by giving the inventory as a security? Then do you file the quarterly statements with the bank or not? And at the same point of time, are they matching with the records or not? Yes. Clause number 3, very important clause. We can call it this as a related party loans. If the company has given any investment, guarantee, security to any person, to the entity, to the partnership firm or LLP, which is his related party, then this clause number 3 will come. In the clause number 3, I have so many set of questions. What are the set of questions? Terms and conditions are regular or not? They are saying regular. Do you get the regular repayment of your interest and interest payment? They are saying yes, regular. Do you have any irregular related party loans? Yes, sir, we have. How many days overdue? They are saying more than 90 days. If it is irregularity or overdue more than 90 days, did you take corrective measures or not? They said yes. I asked them, what corrective measures you have taken? They said that we have given the legal notice. I said them, ki corrective measures necessarily need not be a legal notice. Even a legal reminder is also enough. Don't send the legal notice, just a reminder is also enough. That is called corrective measures. Then I asked them very simple question. Can you please give me the list of those related party loans as compared to your total loans? They said that yes, sir, related party loans are 50 crores, total loans are 500 crores. Then I asked them another question. Can you please calculate the percentage? They said that 10% of the total loans. So these are the various things which I am asking from the company to give me the details of. Did you get the point or not? So sir, what are the related party loans related points? Related party loans related points, are the terms and conditions regular or not? Is there any overdue for more than 90 days? If yes, did you take the corrective measures or not? Are your interest payments and principal repayments regular or not? Next one, what is the total amount of related party loans you have given? Calculate it on the total loans and give me the percentage wise. Are you getting the point? So this is what the various questions you have to see it in the clause number 3. So sir, what was clause number 1? Plant, property and equipment related, 5-6 questions. 2-3 questions relating to inventory. Clause number 2, 2-3 questions relating to related party loans. Now, clause number 4. Sir, clause number 4 mein we can't discuss anything because it is purely and purely connected with your CA final ka law. So if you are doing the CA final ka law, then in that case, read the section number 185 over there, read the section number 186 over there. If there is a compliance or if there is a non-compliance of 185 or 186, we have to report it under clause number 4. And the very most important thing you have to tell you that, ki most of the people think that, ki sir, CARO is to be reported only when there is a negative information in the CARO report. No. Who told you that ki only in case of negative only you have to report in the CARO? Whether it is a positive information or negative information, in both the cases you have to report it under CARO. You have to mandatorily report on every clause. Either it is a positive information or it is a negative information. Is it crystal clear, everyone? Yes, sir, crystal clear. Okay, chalo, let's do the next point then. Sir, clause number 5, clause number 4, let me tell you one thing. If there is a compliance or non-compliance of section number 185, let me give you the brief idea. Section number 185 talks about loan to the directors and 186 talks about intercorporate loans. So there are some limits prescribed in these two sections. 185 says that generally loan to the director should not be given, but in some cases it is allowed. And 186 says that there's a limit on the board of directors relating to giving the intercorporate loans, and if they want to give more than their limits, then they have to pass a resolution in the general meeting. So all that you have to understand in section number 185 and 186. If there is a compliance or if there is a non-compliance of 185 or 186, then clause number 4 may you are going to report. So out of 21 clauses, I have made you understand 4 clauses. So what is the clause number 1? Plant, property and equipment. Clause number 2, inventory. Clause number 3, related party. Clause number 4, compliance of section number 185, 186. So clause number 5. Clause number 5 is related to deposits, and you know that deposit was one of the important chapter in your CA intermediate law, section number 73 to 76. So they are saying that 4 questions you ask the management. So what is the question number 1? Did you accept any public deposit? So my question number 1 to the management is, did you accept any public deposit? They said yes, sir. So if yes, did you follow the compliance of section number 73 to 76? They said yes or no, whatever the case may be. And did you follow the directions issued by the RBI when it comes to the public deposit taking or not? Yes. And then I told them, is there any order of the tribunal passed on your entity? Because sometimes the tribunal interface if you are unable to repay your deposits on time, or if you violate any of the provisions relating to 73 to 76. So these are my 4 set of questions which I am going to ask to whom? I am going to ask to the management. So tell me the 4 questions. Did you accept any public deposit or not? Second thing, did you follow the section number 73 to 76 or not? Question number 4, did you follow the RBI directions or not? And question number 4, whether any order has been passed by the NCLT or not? Yes. So clause number 6 mein, sir, clause number 6 is relating to cost records. Very important thing you have to understand this, sir. You don't have to examine the cost records. Examination of cost record is not our responsibility as a statutory auditor. We simply have to ask a very simple question to the management. Sir, do you maintain cost records? Management is saying, yes, we maintain the cost records. If you maintain, give me the WRL on that. Yes, you maintain the proper cost records under section 148 subsection 1 as per CRA1 rules. Are you getting the point or not? So, sir, examination, if it is not our responsibility, then who will examine the cost record? Bhaiya, cost auditor will be hired for that, na? We don't have to interfere our nose, or we don't have to poke our nose in the examination. We simply have to ask, do you maintain proper cost records or not? If you are a manufacturing, production, mining, extraction, assembling, processing company, so we have to just simply see that in the clause number 6. Sir, 1 to 6 ek baar revise karwa do. First one was relating to plant, property and equipment. Second one was relating to inventory. Third one was relating to related party loans. Fourth one was relating to compliance of section number 185, 186, that is loan to directors and intercorporate loans. Then clause number 5 was relating to public deposits. Clause number 6 was relating to cost records. Now clause number 7. Payment of statutory dues. What is clause number 7? Payment of statutory dues. Sir, in the payment of statutory dues, I have the 4 questions. 2 relating to undisputed dues and 2 relating to disputed dues. First of all, try to understand what do you mean by disputed and what do you mean by undisputed. I wanted to pay a tax of 1 crore rupees, but the income tax department is saying no, you have to pay the tax of 1.5 crore rupees. So out of 1.5 crore, I am also ready to pay 1 crore and IT is saying 1.5 crore. So up to 1 crore it is undisputed. Remaining extra 50 lakhs is disputed. So we are going to divide the tax into 2 parts. Dues into 2 parts. One is disputed dues, one is undisputed. It comes to the undisputed dues. I have the 2 questions to ask. Are you regular in payment of your undisputed dues or not? They are saying yes. Is there any undisputed due which is in pending for more than 6 months? So my 2 questions are over. Are you regular and are they pending for more than 6 months? Then I will come to the disputed dues, where your disputed dues are being conflicted and where the case is running right now, in which forum, in which court the case is going on. Question number 1 and question number 2, what is the amount of dispute involved? So 2 questions relating to undisputed dues and 2 questions relating to disputed. So what are the 2 questions? Can you please repeat again? Yes, are you regular in payment of your undisputed dues, and is there any undisputed due which is pending for more than what? 6 months. In relation to disputed dues, my 2 questions are, in which court or forum bhaiya your case is going on, and please tell me the amount involved in the dispute. Yes sir, over. Clause number 7. Clause number 8 is a new clause. Yes. Clause number 8 is a new clause. So what is a new clause? Unrecorded incomes. In this, there are 2 things you have to check. What are the 2 things you have to check? Thing number one, I'm going to simply ask the management, do you have any unrecorded incomes which you have disclosed while any income tax assessment happened on you? Sometimes क्या होता है, company tries to hide some income. So that unrecorded incomes which they have disclosed during the income tax raid or income tax assessment, I am asking them, is there any such kind of amount? If they agree this, yes, ki during the income tax assessment we came to know and we got to know or we disclosed some income, then my second question, did you make the proper recording of that unrecorded income now in your books of accounts or not? The first one is, did you disclose any income, unrecorded income to the IT assessment order or not? And if yes, did you make a proper recording of that in the books of account or not? That is clause number 8. Very simple clause related to unrecorded income. Now, clause number 9. Clause number 9 is relating to default in the repayment of dues. So, bhaiya, if you have taken any borrowings or loans or any kind of debt instrument from the financial institution, the responsibility of the entity is to ensure that there is a proper repayment of the dues. Now, in this case, what you are doing? In this case, you are simply asking the entity, ki, did you repay your dues? They are saying yes. Are you any willful defaulter? They are saying no. If you are a willful defaulter, give me the lender-wise detail and amount-wise detail. Next one, are you a willful defaulter? They are saying no. Next one, whether the loans were used for the purpose other than, it means basically in this particular clause, we are checking the end use of the borrowing. Suppose you have taken the borrowing for some one purpose, but you are utilizing it for some another purpose. So that we are going to check it here. What is the next point we are going to check here? If there is any short-term loan, you are using it for the long-term purpose. And the next point we are checking that if the company has paid any loans relating to its components, if the company has paid any loan relating to its components, means what? The obligation was the components obligation, but the holding company paid on that behalf. Or if the company has raised any kind of loan by pledging the securities of its components. So my total 6 questions are there. Point number 1, if you have taken the borrowings, give me the lender wise and amount list. Are you a willful defaulter? Are you misutilizing the funds for the purpose for which you are using for the purpose other than for which it was raised? Next one, are you using short-term loans for the long-term purposes? And fifth question, did you repay any obligation of your component? And did you take any loan by pledging the securities of your component? Clause number 9. Clause number 10, application of funds. So, bhaiya, if you have, my very simple question is, so bhaiya, if you have raised the money via IPO, FPO, private placement, preferential allotment, debt instruments and term loans. Again, repeating situation, if you have raised the money via IPO, FPO, if you have raised the money via IPO, FPO, preferential allotment, private placement of securities and convertible debentures, then in that case, make sure that you are not using the money for the purpose other than for which it was raised. Is there any default in the making the use of the money? Is there any delay in using the money, or is there any subsequent rectification? And next point, while taking the private placement ka money, did you follow the section number 42 and further issue of capital ka 62? Then in that case, if the money not utilized for the purpose for which it was raised, please report it. And if not utilized, detail and nature of the non-compliance. So basically, I am asking the management, if you have raised any money via IPO, FPO, private placement, right shares, preferential allotment, or term loans, or any kind of debt instrument, convertible debentures, then in that case, make sure that you should not have defaulted. If defaulted, tell me the details. Make sure you should not have delayed. If delayed, tell me the details. Make sure you should not have done subsequent rectification. If done, tell me the details. And if you have used that money for the purpose other than for which it is, then it is to be reported under clause number 10. तो सर टोटल 10 क्लॉजेस की रिवीजन करवा दो सर एक बार. क्लॉज नंबर 1 वाज रिलेटिंग टू प्लांट प्रॉपर्टी इक्विपमेंट, 2 वाज रिलेटिंग टू इन्वेंटरी, 3 वाज रिलेटिंग टू रिलेटेड पार्टी लोन्स, 4 वाज रिलेटिंग टू कंप्लायंस ऑफ 185, 186, 5 वाज रिलेटिंग टू पब्लिक डिपॉजिट, 6 वाज रिलेटिंग टू कॉस्ट रिकॉर्ड, 7 वाज रिलेटिंग टू पेमेंट ऑफ स्टैट्यूटरी ड्यूज, 8 वाज रिलेटिंग टू अनरिकॉर्डेड इनकम्स, 9 was relating to default in the payment of repayment of borrowings, and 10 is related to application of funds. Now clause number 11, fraud reporting. Bhaiya, 143 subsection 12. So we are simply asking the 3 questions to the management. Is there any fraud reporting under section 143 subsection 12 to you or to your audit committee? If they are saying yes, is it being reported by the auditor under section 143 subsection 12 as per the form number ADT4 within 60 days to the central government, or to you within 2 days? They are saying yes. Then do you have a whistleblower policy? They are saying yes. Did you obtain any whistleblower complaints and did you resolve them or not? Yes. So these are the 3 my simple questions relating to fraud reporting. This whistleblower wala point has been added in this particular clause. Clear everyone? So point number 1, any reporting 143 under section 12, under subsection 12. They are saying yes. If yes, as per ADT 4 or not, they are saying yes. And make sure that if there is any whistleblower complaint, did you observe that complaint or not? Clause number 12 relating to Nidhi company. So bhaiya, in the clause number 12 relating to Nidhi company, my simple 3 questions are there. Point number 1. Is the Nidhi company maintaining the ratio 1:20? Sir, what is this 1:20? 1:20 means own funds means 1, outside fund public deposit means 20. Nidhi company is not allowed to raise 20 times of its own funds. It is not allowed to raise more than 20 times its own funds. So if its own funds are 100 crores, you can maximum raise 2000 crores. So 20 times of your own funds only you are allowed to raise the public deposit. Condition number 1. Condition number 2, every Nidhi company has to maintain 10% of its total assets in the liquid form. Third question, if the Nidhi company has accepted any public deposits, is there any default in the repayment of deposit and repayment of interest? If yes, then briefly explain me or briefly give us the detail. Now, next one. Clause number 13. Clause number 13, bhaiya, related to related party loans. You all know that in the CA final law, there is one very important section called section number 188, related party transactions, not loans. Clause number 3 is dedicated to related party loans, but clause number 13 is related to related party transaction. So, bhaiya, if you are doing any related party transaction under section 188 with any related party, ensure that audit committee approval is mandatory. That is omnibus approval in case of listed entities. Under the LODR regulations, audit committee and corporate governance chapter mein. Are you getting the point? So section number 177 compliance and section number 188 compliance. If you are doing any related party transaction, make sure that audit committee ka approval must have been taken under section 177 if you are doing the transaction of section number 188. That is what clause number 13. तो सर 13 clauses का quick revision करवा दो जल्दी से. तो सर plant property and equipment है, inventory है, then related party loans है 3, then 4 है अपना compliance of 185, 186, 5 है public deposit, 6 है cost records, 7 है सर dispute statutory dues, 8 है unrecorded income, 9 है default in repayment of borrowings, 10 है application of funds, 11 है fraud reporting, 12 है निधि company, 13 है related party transactions. Sir, clause number 14. Clause number 14 is also the new one. If you remember, there was earlier clause number 14 relating to money raised via private placement. That has been merged with the clause number 9, clause number 10 now, and clause number 14 was empty. So they introduced one new clause, maintenance of internal audit system. So bhaiya, my question is very simple to the company, कि according to the nature and size of the entity, commensurating with your nature and size of the entity, do you have any good internal control system installed in your entity or not? They are saying yes. Is the external auditor thinking of using, is there any external auditor of your company thinking of using or the work of internal auditor or not? Is he expecting to consider the work of the internal auditor or not? If yes, give me the details. So what are my 2 questions relating to internal audit system? Is there any good internal audit system installed in your entity or not? And what is my next question? Whether internal auditor are considered by the statutory auditor or not. So in total 14 clauses are over. Clause number 15, everyone, non-cash transaction, section number 192. Again your CA final ka section in the law. If the company is doing any non-cash transaction with the director or the director is doing any non-cash transaction with the company, compliance of section number 192 is mandatory. If the transaction of non-cash transaction, if the transaction of 192 is not being carried out as per 192, then in that case what will happen? Then in that case you have to report it under clause number 15. Now, what is clause number 16, everyone? Clause number 16 is relating to NBFC. भैया हमने NBFC chapter में क्या पढ़ा? हमने NBFC chapter में ये पढ़ा था कि भैया being an NBFC, you have to take a certificate or registration from RBI. Without obtaining the certificate or registration under section 45 IA, you are not allowed to commence your business activity. So we have to check that. And most importantly, if you are a CIC NBFC, sir, core investment company NBFC, where the 90% of the investment should be in the investment assets, then in that case, if you are a CIC, you have to maintain the criteria, either you are exempted one or the regular one. And how many CIC NBFCs are there in your group? These are my total questions. So whether it is registered or not, whether conducted any activity without obtaining the registration certificate or not, if you are a CIC core investment company, then maintain the criteria. Even if you are exempted, then also maintain. And how many CICs are there in the group of the total NBFCs? So sir, up to 16 clauses we are done with. So total 21 clauses are there. Now 17, 18, 19, 20, 21. Again repeating. 17, 18, 19, 20, 21. All these clauses are what? These are the new clauses, completely new clauses. So sir, where the change has come? Clause number 8, newly added unrecorded incomes. Clause number 14, newly added internal audit system. And now the next 5 clauses are completely going to be new. So sir, what is clause number 7? बहुत ही simple clause है, cash losses. What is the name of the clause? Cash losses. So in clause में what we are asking? We are simply asking of 2 questions to the management. Do you incur or have you incurred any cash losses in the current year and in the immediately preceding financial year? So this year and last year, did you incur any cash loss or not? That is what my question number 1. Question number 2, if yes, mention the amount of the cash flow. That is what clause number 17. तो जल्दी से clause number 17 द क्विक रिवीजन कर लेंगे सर. प्लांट प्रॉपर्टी एंड इक्विपमेंट है, देन इन्वेंट्री है, देन रिलेटेड पार्टी लोन्स है, देन कंप्लायंस ऑफ 185 186 है, देन डिपॉजिट्स है, देन कॉस्ट रिकॉर्ड्स है, देन पेमेंट ऑफ स्टैट्यूटरी ड्यूज है, देन 8th one is unrecorded income, that is a new clause है, 9th one is repayment of deposits, repayment of borrowings है, default in that, and 11th one है application of funds, 10th one is application of funds, 11th one is fraud reporting, 12th one is nidhi company, 31 is related party transaction with the prior approval of central government. So sir, one clause eliminated, that is called managerial remuneration, which was there in clause number in the CARO 2016. So clause number 14 क्या है sir? 14 number clause is new internal audit system. This is also the new clause. 15 number clause, non-cash transaction by the company with the directors and directors with the company, and that is compliance of section number 192. And 16 clauses relating to NBFC registration, certificate of registration, without which you are not allowed to commence any business activity, and how many CICs are there. Now clause number 17, just now I told you relating to cash losses. Which losses everyone? Cash losses. तो भैया मेरा 2 questions to the management is कि did you incur any cash losses in the current year and previous year? If yes, give me the detail. Clause number 18, resignation of previous year's auditors. Remember one thing, if your previous year ka auditor has resigned, if your previous year ka auditor has resigned, I'm asking the question to the management, can you please tell me any auditor of the previous year, last year ka auditor has resigned or you have removed them? They are saying resigned. Then did he give, or what are the reasons of his resignation? Because remember one thing, 811 clause is also there in our professional ethics, clause number 8 part 1 schedule 1 mein, ki when you replace someone and become a statutory auditor of an organization, the incoming auditor has a responsibility to communicate with the outgoing auditor to understand the reasons of his removal or the reasons of his resignation. Same concern is being shown here, whether the statutory auditor resigned during the year, last year or not. If yes, whether the incoming auditor consider the issues, concerns and objectivity of the outgoing auditor. I'll tell you why. As an incoming auditor, try to understand one problem. As an incoming auditor, you may face the same problem what the outgoing auditor faced. Say for example, outgoing auditor was trying to give a modified opinion, but the company forced him not to give. He better thought to leave the company. So if the company can force the old auditor, they can also force you also. Suppose the last year ka auditor ka undisputed audit fees which was agreed upon between the auditor and the entity is not being paid. Undisputed one. If they have not paid the audit fees to that auditor, that may happen to you also. So it is for your benefit only कि भैया, if you come across that कि last year auditor has resigned, understand his objectivity, understand his concerns, understand his issues before accepting the current year audit. So this is what the purpose behind clause number 18. क्लॉज नंबर 19 क्या बोल रहा है कि कंपनी इज एबल टू मीट द लायबिलिटी, इसे हम सॉल्वेंसी क्लॉज भी बोलते हैं. तो भैया क्लॉज नंबर 19 में व्हाट द ऑडिटर इज डूइंग, ऑडिटर इज सिंपली गोइंग टू द ऑर्गेनाइजेशन, he is talking to the management, he is talking to the TCWG, he is verifying the financial statement, he is calculating some financial ratios. All that homework why he is doing? He is doing all that homework to understand ki whether the entity is capable enough to pay off all its liabilities on the balance sheet date and exactly within the 1 year of the balance sheet date. It means, is the company solvent enough कि on the spot also if they have to pay their all liability, is it capable enough to pay its liabilities without any problem? And not only today, in the coming 1 year also, whether the company from that balance sheet date, at least for 1 year from the balance sheet date, is the company capable enough to pay its liabilities or not? Did you understand the point? So that is what the major 2 ideas. So what the auditor, how the auditor is able to raise the opinion on the basis of that, on the basis of financial ratios, aging of asset, expected date of realization of fixed assets, payment of liabilities, financial statement, and knowledge of board of directors and management plans. Whether the auditor having an opinion that there is no material uncertainty that company is capable to meet its all liabilities on balance sheet date, and when they fall due within the 1 year from the date of balance sheet. So basically it is a solvency clause. So we are testing the company on the solvency area. Now clause number 20 relating to CSR, everyone, corporate social responsibility. Here section number 135 ka point is being raised. Ab last and the most important point, सबसे important point है C. Suppose if there is an ongoing project of the CSR is going on, if there is an ongoing project of the CSR is going on, and if it is unspent money, if the project is going on and if it is an unspent money, the regulations, the particular amendment is already there in the CSR. But they are saying that whether the company has transferred the unspent amount to a fund specified under Schedule 7 of the Companies Act in respect of other than ongoing projects. Suppose there is a non-CSR project. There's a unspent amount. Let's say, for example, you all know that 2% of the average of last 3 years net profit the every company has to spend. Suppose you are unable to spend the total amount. Then in that case, what they are saying, if it is an other than ongoing project, then make sure that you should hand over the project money which is unspent back to the government. Because you can't keep the unspent money with you. Are you getting the point? You can't keep the unspent money with you. For keeping the unspent money with you, you have to make a declaration to the central government that yes, we will spend it next year. But if you think that that amount cannot be spent next year also, it is completely unspent, it is your responsibility to raise or refund that money to the central government to make sure that you are not allowed to hold the CSR subsidy if the central government or state government has given to you. If you are able to spend it, spend it. If you are unable to spend it and you give the assurance that yes, I'll be spending it next year by mixing with the next year CSR, then you can keep it with you. Otherwise, you have to return this money to the government. So these 2 points are relating to the CSR only. CSR ke ongoing, other than ongoing projects ke related, these 2 points are there. Then clause number 21, everyone. So what is the clause number 21? So remember one thing, you are a parent company auditor and you were asking the parent management ki in your total group, is there any company in your total group, either your associate or joint venture or subsidiary, in whose caro any adverse or negative remark is given by their auditor. So I am a parent company auditor. I'm asking the parent company management ki in your total group, is there any component whose auditor has given any adverse remarks in their caro report or not? If yes, please indicate the details of those companies where the negative report has come and what is a para number where they have given the adverse remarks. So that brings an end to your clause number 21. So remember one thing, everyone, total 21 clauses are there. Sir, last time quick revision karwa do. Sir, clause number 1 was plant, property and equipment. Clause number 2 was inventory. Clause number 3 was related party loans. Clause number 4, compliance of 185, 186. Clause number 5, public deposits. Clause number 6 is relating to cost records. Clause number 7, statutory dues. Clause number 8, unrecorded income. Clause number 9, default in repayment of borrowings. Clause number 10, application of funds. 11, fraud reporting. 12, Nidhi company. 13, related party transaction in accordance with the audit committee permission. Clause number 14, new one, the internal audit system. 15, non-cash transactions with the director, between the director and company. 16, Nbfc. 17, cash losses. 18, any previous year auditor has resigned or not. 19, solvency clause, where you are capable enough to pay your liabilities or not. 20, relating to the CSR ka amount transferred to another account under Schedule 7 on the projects other than ongoing projects. And last but not the least, any adverse remarks in any of the company, in the group. If yes, what is list the name of the company and the paragraph in which their auditor has given an adverse or qualified remarks in their Caro report. Now, what is the most important thing you have to understand in the Caro? Bhaiya, Caro may be reporting paragraph is there. So, in the Caro, whether you are getting an evidence, you are not getting an evidence, you are getting an positive opinion or you're getting a qualified opinion, you always have to report on each and every clause. So see what is being written. It is mandatory report on every matter whether positive or negative remarks are there. Second one, if it is negative remarks, if you are giving the negative remarks in the CARO, then you have to specify the reasons for the same. That we already know, we have a duty to give the reasons in case of modified opinion. And most importantly, if the auditor fails to express an opinion, अगर मान लो auditor opinion ही नहीं दे पा रहा in particular of the clause, then he shall indicate the fact कि he is unable to express an opinion and along with the reason why he is unable to express an opinion. With that, your CARO 2020 is over. I hope you all understood CARO 2020. So very important amendment. Make sure that you can revise. This is just hardly going to be a 55 minutes of the video, so make sure that you can revise it again and again whenever you want. Revise it 1 to 21, 21 to 1, and then talk to yourself, okay, if this question will come, what clause I have to remember. And most important thing, whenever any question on the CARO clause will come, remember the clause number you have to quote. Para number 3. So all the 21 clauses are in the para number 3 of CARO 2020. So clause number, say for example, they have asked you the question कि company has not paid its GST on time. So sir, clause as per clause number 7, para 3 of CARO 2020 specified under section 143 subsection 11. If you will write this line in your answer, the examiner will go flat. So that is it from my side, everyone. I hope you are liking the RRB videos. So thank you so much. Please share it with your friends if they are looking for, and do let me know if they are in need of these videos. Thank you so much, everyone. Thanks for lending your patient ears. I'll borrow it again in the next video. Bye everyone. Hello everyone, how are you all? My name is Pse Audit. I am your faculty for CA Final, Advanced Auditing and Professional Ethics. And I welcome you to the RRB batch, and this RRB videos are useful for the students who are writing the exams in May 22 as well as in the December 22. Now, as you all know that previously I have already made available to you so many videos relating to various chapters where we generally try to understand and cover the each and every concept of the chapter in a very specified and a very limited period of time. So here I am coming with a very important new topic, and obviously a very important topic from the examination point of view. The name of the topic is known as investigations, due diligences and forensic audit. Now, in this chapter, basically there are 3 things you have to understand. So what are the 3 things we have to understand? We have to understand a lot of things relating to investigation. We have to understand a lot of things relating to due diligence, and at the same point of time, we have to understand so many things relating to forensic audit. So let us start with the first thing called investigations. Now in the investigations, first of all, you have to understand that what is the major difference between the investigation and auditing. Remember one thing, auditing is all about independent examination. So auditing never starts with a suspicious mind. Whereas in the investigation, you started with a suspicious mind. Now nowadays, chartered accountants, gone were the days when they were only limited to the practice of auditing and taxation and accounting and all. Now today, the chartered accountant in practices are flying in the sky like anything without any limits. Let it be investigations area, or let it be due diligence area, or let it be forensic audit area. Now chartered accountants in practice, along with the other professionals, of course, practicing CMAs and CS, we all are being engaged in the various other activities also, which few years back were considered very irrelevant and where very small presence of chartered accountants used to be there. Now, one of the most important field which we should think of after getting qualified nowadays is known as investigation. Now, let us understand what do you mean by investigation. Now, what do you mean by investigation, everyone? Investigation starts with a suspicion mind and required an investigative mentality approach towards certification of the facts and figures. Now, sir, now the question arises, sir, what kind of investigations the chartered accountants are going to do? Remember one thing, chartered accountants are now being hired by so many regulatory authorities, so many banks and insurance areas and all, where if they are conducting an investigation on a particular area, obviously to understand the financial aspects of that entity, they were looking for the help of chartered accountants in practice. Now, when you are being engaged as a chartered accountant in practice for a subject called investigation, for a term called investigation, you have to understand that in the investigation also, like an auditing, you will find that there are so many steps which you have to follow. Step number 1, you have to determine your scope and objective. So like we determine our scope and objective in a normal audit, In the investigation also, you have to determine your scope as well as what? Objective. So you have to determine your scope as well as what? Objective. Next thing, like in the like auditing, we formulate our planning, strategy and program. Again, here also you have to do the formulation of strategy, planning and investigation program. Next thing, obviously, execution stage will also come in the investigation. So in the investigation, you have to, examination and study of the various records to obtain the SAAE. Next one, once we obtain the sufficient and appropriate audit evidence, what do we do in auditing? Same thing we do it in the investigation also. We do the analysis of those evidences, processing of those audit evidences, and we'll do the interpretation of those findings. And after the analysis, processing and interpretation of those findings, ultimately here, instead of audit report, you're going to use the word called preparation of report and drawing up of the conclusions. So basically, investigation is broadly classified into 5 steps. So bhaiya, first of all, define your scope and objective, then make a strategy, planning and program. Then obviously you have to start doing the investigation. In that you will do the examination and analysis of the records, and you will obtain sufficient and appropriate audit evidences in this field also. And at the same point of time, you are going to analyze them, process them, and finally you are going to draw the conclusions in the form of report. So it is very similar to obviously auditing, but auditing never starts with a suspicious mind. In the investigation, little bit of suspicion, little bit of more level of professional skepticism is basically demanded when it comes to the investigation areas. Now, next one, what are the major issues you will generally find in the investigation? So mostly people say that, sir, is investigation a 100% checking or it is a test checking? Remember one thing, it all depends upon the case to case. If the case demands a 100% checking, we'll do the investigation for 100%. If the case demands the test checking, then we'll do the test checking. But remember one thing, when you are following the test checking or audit sampling technique, ensure to follow statistical sampling always in the investigation. Next point, whether investigations are out of disputes and conflicting claims? Yes, so many investigations come out of disputes and conflicting claims. So that is also covered under your area. Next one, sir, whether the audited financial statements are of any use while doing the investigation? Yes, audited financial statement is basically going to be a base for starting off our investigation. And remember, when we talk about the audited financial statements, we have to understand one fact that you have to take a representation of the management that they say that whatever the AFS audited financial statement they are providing you, they are true and correct. Next one, sir, whether the investigation can be on the basis of speculation and futuristic statements? Answer is no. Like the auditing is based upon the futuristic statements and auditing is based upon the speculation opinion. In the investigation, there cannot be any kind of speculative opinion or it cannot be based upon any kind of futuristic statement. It has to be based upon the present facts and all. Next point, sir, whether experts required is necessary? Yes, it again depends upon the case to case basis. So there is no harm if the investigators will take the help of the experts. Next point, so whether he has to retain the working papers or not? Yes, as per SA 230, like the auditor has to retain the audit working papers as per SA 230, here investigation maybe you have to retain the audit working paper as per SA 230. Next point, special aspects in the investigation. Sir, what do you mean by special aspects in the investigation? Investigation may remember one thing, like in the auditing, we acquire the knowledge of a client's business. Here also you have to acquire the knowledge of the client's business. So say for example, you have been chosen as an investigator to investigate into a firm where your client has got a proposal to be an incoming partner. So in that case, you have to acquire the knowledge of the client's business also while doing the investigation. Examine the P&L statement. And later, like say for example, in the investigation also we examine their P&L statements. We will also examine their balance sheet items. In the P&L statement, what is our major focus is going to be on the turnover, wage structure, depreciation, repairs and maintenance, managerial remuneration, and more focus on the exceptional and non-recurring items. And last but not the least, if your profits got sudden increase due to any unusual transaction, you have to ignore that transaction while doing the investigation, because on the basis of that unusual trend, you can't say that yes, company's working results and profitability are genuine. Now, when you go to the investigation, you also go for the investigation of balance sheet. In the balance sheet, whatever focus is going to be on the investment, fixed assets, inventories, debtors, other liquid assets and idle assets, of course, liabilities and provision for taxation as well as what? Capital. So, you can see that there is a very thin line of difference between the investigation and auditing. The most important difference is one does not start with a suspicious mind, one starts with a suspicious mind. Next important thing, which is the difference between the auditing and investigation, is auditing is purely based upon persuasive evidences mostly, whereas the investigation is believing upon conclusive evidences. Reporting in the auditing is towards the intended users, but in the investigation, the reporting is towards the appointing authority. Scope also in the auditing is determined by the act under which you have been appointed, whereas in the investigation, your scope is determined by the party who is appointing you as an investigator. So these are the few differentiations between the investigation and auditing. Next one. Sir, in this chapter, there are two types of investigation. Let me give you a very important information here. So what are the two types of investigations we are going to do? We have the statutory investigations. We also have the non-statutory investigation. But let me tell you one thing, statutory investigations you have already covered in one of the most important chapter of your company law at CA final paper number 4 mein. You have already covered that. Sir, where we have covered that, there is one chapter called inspections and investigations. Same investigations, you have to copy paste from there and you have to do it here. That's why I'm not going to utilize any of your time or not going to waste any of your time in making you understand the statutory investigation. Statutory investigation, half of the investigations are the same which you have already done, at your which level? At your CA final company law level mein there is one chapter called inspections and investigation. From there you have to borrow. Just let me tell you the reference of the sections which you have to also equally do it in the auditing subject is section number 210 investigation, 212 investigation, 213 investigations, which talks about investigations into the affairs of the company. Then section number 216 investigation also you have to do, which talks about the investigations into the ownership of the company by the registrar or the central government or by SFIO. What is SFIO? Serious Fraud Investigation Office. So all these statutory investigations, I'm not going to utilize your time or not going to waste your time on that. So let's directly come to the non-statutory investigations. Now, there are total 6 types of non-statutory investigations which are there in your portion. Investigation for incoming partner. Suppose there is one partnership firm which has offered opportunity to your client to become an incoming partner. So, as an incoming partner, that client has hired you. Who hired you? Incoming partner has hired you as an investigator to go there and do the investigation of that partnership firm which has offered them a partnership. Next one, investigation for the valuation of the shares in the shares of the private limited company. Remember one thing, for the listed companies, there is a available market called NSE, BSE, where the shares can be easily tradable and marketable. But unfortunately, if you have done a huge investment in the private limited company, there is no open available market. Therefore, there is no market forces in case of private limited company. Therefore, it becomes very difficult to understand what is the actual valuation of the share. So you can hire an investigator to determine the share value or per share value of the private limited companies. For that, we will do the 2 methods. One is called net worth method, how to calculate the share value as per net worth method, and yield method. That is this investigation. Then sometimes, suppose there is one big borrower who has applied to the bank for particular borrowing or who has applied to the bank for particular advance or loan. So bank, before giving the advance and loan to that borrower, banker will hire you as an investigator to go that borrower's place and do the needful investigation on his creditworthiness and repayment capacity of that borrower. Sometimes you have been hired as an investigator to understand fraud investigations like overstatement of the cash, understatement of the cash, overvaluation of the stock, undervaluation of the stock, misappropriation, basically 240 related frauds like FFR fraud, fraudulent financial reporting related, as well as the MOA frauds, misappropriation of assets fraud. Next point, for buying the business. What do you mean by for buying the business? Say for example, you are thinking of buying a particular business, let it be a sole proprietorship business or let it be a partnership business. You are hiring an investigator. You are particularly hiring an investigator to go there and do the necessary investigation on that particular targeting company or targeting business which you are thinking of acquisition. Next one, review of profit and future forecast. Sometimes you have been hired as an investigator to go and do the review of the various forecasted figures and profits for the basically you have been hired as an investigator for the project related works, right? Now, these are the various 6 types of non-statutory investigations which are there in your portion. Statutory investigations, I already told you, I'm not going to waste your time. You can easily refer that from your law material, chapter investigations and inspections, something like that is there. Next one. Now, let us understand first investigation on the behalf of the incoming partner. What is the reason behind this kind of investigation? Check whether the terms offered are reasonable or not. Whatever the partnership is offering the terms and conditions, so how much goodwill he has to bring, how much share of asset he has to bring, how much share of capital he has to contribute. So incoming partner wants to know that whether the terms and conditions are reasonable or not, whether contribution would be safe or not. So he is worried that I am paying a lot of money to become a partner in that particular firm, so whether my money is going to be equally safe or not, and whether the funds will be applied usefully or not. They are asking that yes, we are looking for expansion, that's why we are asking for your funds. So you have to want to see that actually what they are asking, are they going to apply your funds for that particular purpose or not. So basically these are the various issues you have to carry out in your investigation on the behalf of incoming partner. Now, what are the areas to be examined? Now, suppose you will go to that firm now. As a chartered accountant in practice, you have been hired by your client. You will go to that firm now, and in that firm, after going, you will check there what? You will check the history of that firm, position of assets and liabilities of that firm, profitability of that firm, capital employed of that firm, goodwill of that firm, term loans taken by that firm, checking whether regular in payment of the repayment of the loans or not, reputation of the partners. Who are the existing partners? Are they reputed enough in the market or not? Are their reputation is good or bad? Partnership deed may you are going to check their terms and conditions regarding the profit sharing ratio, capital sharing ratio, remuneration to the partners, interest on drawing, interest on capital. All these things you will cover under the partnership deed. So these are the very necessary investigative areas where you are going to do an investigation. Next one. You will also check areas of specifications which your incoming partner has specifically told you to investigate. Range of customers, you would also like to see that whether the range of customer is good when it comes to your incoming partner's partnership firm or not. Reasons for admission, why they are offering you a partnership firm, why they are offering you to join as an incoming partner. So your incoming partner is very much interested in knowing the reasons what they are saying. Yes, we want you to be as our incoming partner. Are those reasons are genuine, terms and conditions are regular or not? And most importantly, what are the contractual obligations of that firm? Whether that firm is basically good enough to be joined as not. So these are the various areas. And remember one thing, I am just telling the main head points. In these head points, you have to equally draft a 1 or 2 particular line. Nowadays, questions are only coming for 5 to 4 marks and for maximum 4 marks or 5 marks. So I don't think so that they are going to ask you so many investigations. They may ask you a particular investigation. So if you can remember thus 8 to 9 points also out of that and make a 1 sentence out of it, that is going to be a equitable answer for a particular 4 mark or 5 mark question. Now, what is the next type of investigation you can be hired for? You can be hired as an investigator on the behalf of a bank which is proposing to give a particular loan. So what is the reason the banker is hiring you? To evaluate the credit worthiness of the borrower and to evaluate the repayment capacity of the borrower. So bank is really interested to know that the person to whom I am going to give a loan, is he going to repay my loan back safely or not? And at the same point of time, is he worthy enough? Is his credit score, is his CIBIL score, or is his credit worthiness in the market is good enough that I can give him the loan? Now, here also the chartered accountant in practice will go as an investigator and he is going to check he is going to check so many things. He is going to check in credit score of that borrower if he is an individual, otherwise doing the market research if the borrower is a company. Next one, ITR files properly or not by that borrower, KYC documents of that borrower, past history of the loans of that borrower, whether he was good in repayment of his past loans or not, purpose of loan of the borrower, project is growth worthy or not, whether the project is having a little bit of growth in the market or not. By doing some market research and queries, he'll come to know. Integrity of the management, are they honest and sincere management to whom you are giving a loan? Next one, value of the activities. What do you mean by value of activities? Means what? Whatever the securities, not activities, value of securities. So obviously when the bank is giving the loan to a borrower will give some securities to the bank. So basically as an investigator, you're going to check whether the securities are good enough for the bank and is the value appropriate as compared to the amount of loan which is asking for. Market image of that borrower also you will check. You will check his income statement. You will check his repayment schedule also, which the borrower has told to the bank ki I will pay your money in these installments. Financial position of the borrower, you have to check. Past records of the borrower, you have to check. Government policies, you have to check. Various ratios you have to calculate relating to the borrower. What are the ratios? Current ratio, debt equity ratio, turnover ratio, GP and NP ratio. So basically you are checking the solvency, liquidity, profitability and activity ratios of the particular borrower. So this is how you will do the investigation on the behalf of the bank which is proposing to give an advance. Now next one, valuation of the shares in case of private company. As I told you that there is no available market for the shares of the private limited company. So there are two methods of calculating the value of the shares of the private limited company. One is called net worth method and one is known as what? One is known as yield method. In the net worth method, we will calculate the net worth of the company. What is the formula of the net worth? Assets minus liability. That is the formula of the net worth. Net worth divided by number of equity shares will be equivalent to the price per share. And in the yield approach method, you are going to calculate average of last 5 to 6 years profit of that particular company and you are going to multiply and you are going to calculate it as a present value with a good suitable rate of interest or with a good suitable rate of growth as a PV factor, and you will calculate the present value of that profit, and again that value you are going to divide it with the number of shares. But remember one thing, when you are taking the profits, in the yield method, you have to ensure that profits are based upon the future maintainable profits. These are which profits, everyone? Future maintainable profits ka you will calculate the present value. And again, when you are taking the net worth also, in the net worth while adding the goodwill, make sure that goodwill is also valued as per the future maintainable profit method. So this is how you will do the investigation in the private company to evaluate or to value the shares of such private limited company. Next one. You can be also hired by the company on the behalf of an individual firm proposing to buy the business. So suppose there is one of your client, he comes to you that ki, Rohit, I am thinking of buying one particular business. So can you go on my behalf to that particular business and do some necessary investigation ki whether it is worthwhile to buy that targeted company or the targeted business or not? So yes, obviously you will go over there. So what is the reason? To collect information which would enable the purchaser to decide whether it is worthwhile to buy that business. If so, what amount is required. So what are the areas you are going to examine? If the particular business which your client is proposing to buy is a sole proprietorship or partnership business, then you will first of all check the reason of the sale. You will check the length of the property or lease. Means, say for example, that business is established on a lease property and the lease is about to end. Are you getting the one? So there is no point of buying that business whose lease is about to end. Next one, unexpired period of patents. You are also going to check that the patents of that business are still valid enough to run the business in a proportionate manner or not. Because if the patents and the various intangibles of that business are going to get expired, there is no point of buying that particular business. Next one, you will also check managerial staff. You will also check the customer base of that business, whether he is having a good customer base or not. And along with that, you are also going to check the goodwill. Same these 6 points, you are also going to check if the proposed business which your client is thinking to buy is a company. So these 6 points the same you have to write below also. But if it is a limited company which your client is proposing to buy, so these 6 points plus these 7 to 8 points you have to write extra. Now what are the points? You have to check the capital structure of that company. You have to check the class and price of that shares. Means what? What is the class of shares that company has issued? Is it equity shares with differential rights or equity shares with voting rights? Next one, is there any uncalled capital, if any? Is the company running with the only partial called up money, or if there is any uncalled capital, if the company requires in the future? What is the dividend history of the company? Was company perfect? The proposal of buying a company, that particular company is perfect in paying the dividend in the past history or not? Mortgages and charges is very important. You have to check that from the ROC, whether the mortgages and charges on the assets have been created or they are freehold assets. Next one, market research. You have to carry out the market research on that particular organization, whether it is good to buy that particular organization or not, and check its external environment, how legal and political environment is affecting the decision making of that particular company. Credibility of that company in the market, whether the company is having a good credible terms in the market and people and customers and suppliers are having the trust and confidence on that particular entity or not, and major customer and major suppliers of that company. So these are the various 8 to 9 points which are in addition to the above 6 points. So with that, out of 6 investigations, your 4 investigations have been revised. Now, most important thing I would like to tell you that ki, let's not waste the time on this area. If you know the 240, somebody 240, if you know SA 240 frauds and responsibility of the auditor in relation to the frauds found in the audit of financial statement, then it is fine. So frauds, you all know that fraud is an intentional act by the particular person where the management can be involved, TCWG can be involved, employee can be involved, and any officer or employee can be involved with the intention of deceiving the other party and gaining an undue advantage or illegal advantage, that is called fraud. So fraud can be FFR frauds, it can be MOA frauds. What do you mean by FFR fraud? Fraudulent financial reporting. MOA, misappropriation of assets. In the FFR kind of frauds, top level management is engaged into, and in the MOA kinds of fraud, lower level management is engaged into. So frauds, what are the basic areas where the frauds may take place? Inventory में fraud may take place, supplier ledger में fraud may take place, credit customer ledger में fraud may take place, cash receipt में fraud may take place, cash payment में fraud may take place, teaming and lading is also one of the fraud, window dressing is also the fraud. So it means whatever the fraud related things you have understood so far in the auditing subject, all that you can write here. So out of that, some of the few examples I have taken. So please read out the various things which you have to check while doing the investigation of the basic frauds, right or not? And what is the sixth investigation, everyone? Sixth investigation is when you have been hired for the review of profit and financial forecast. Now, what do you mean by profit and financial forecast? Remember one thing, when you are investigating any profits or financial forecasts, at the same point of time, you have to make sure that you are investigating the assumptions they have used in giving the forecast, sources of information they have used in the forecast, and the basis of their forecast. If you are able to check all these things as an investigator, yes, your purpose is served. So basically, all the 6 non-statutory investigations we are done with. So this is what the kind of questions they may maximum ask you from the investigation. And now I already told you the difference between the investigation and audit. What is the major difference? Objective. Investigation का objective है inquiry into the facts. Auditing का objective है expression of opinion. Periodicity, there is no particular fixed period for the investigation. Audit is basically half yearly, yearly or quarterly. Next one, limitation. There are no limitations on investigation. It is boundaryless particular activity. And auditing mein, yes, your scope is quite limited. Next one, evidence mein, investigation is purely based upon conclusive evidence. Audit is based upon persuasive evidence. Nature mein involves detailed examination, and yahan pe involves what? Sampling. Are you getting the point? Because investigation cannot be done on the basis of sampling. I am not saying 100% cannot be done, but mostly investigation is always carried out into a particular area. So most of the examinations in the investigations are on detailed basis. Next one, reporting. You are going to report it to the appointing authority. Here you are reporting to the intended users. So this is what all about the investigations in one of the very important chapters you have to do, right? Now, hello everyone. Hi, how are you all? This is your faculty CA Rohit Grover, and welcome to the another video lecture on RRB videos applicable for your May 2022 and December 2022 examinations, right? So as you already know that in the previous video we have already completed about investigations. Now in this video we are going to concentrate upon what? We are going to concentrate upon due diligence. What is the next topic, everyone? Due diligence. Now try to understand, sir, what do you mean by due diligence? Remember, due diligence is basically a critical examinations of particular areas which are required to be examined by a practicing CA or a professional accountant when a acquiring company is thinking of acquiring a particular target company. Now, if I have to tell you the major difference between the due diligence and investigation is, investigation can happen at any place, at any area, whether the due diligence is basically a focused area. Due diligence is basically required in which areas? Where the amalgamations, venture capital fund investments are taking place, or mergers are taking place, absorptions are taking place, restructuring are taking place, corporatizations are taking place. So these are the areas where the due diligence is becoming very, very popular nowadays. And obviously for the due diligence, who is better than a practicing chartered accountant? So due diligence is little bit different from the investigation. So investigation can be done in any way. In the due diligence, you are not going with a suspicious mind. In the due diligence, you are going there, means you have been hired by the acquiring company. Say for example, Reliance Geo Communication is going to acquire a Vodafone Idea. If say for example, Geo is thinking of acquiring the Vodafone and Idea. Suppose the deal has been set out. What is the deal? Okay, Geo has to pay almost 10 to 15,000 crores to the Vodafone to acquire the Vodafone and Idea. Now question is, Geo wants to know that the 15,000 crores of deal which is that it has made with the targeting company called Vodafone and Idea, is it worth to pay 15,000 or not? So what the Geo will do, Geo will hire a chartered accountant in practice. They will tell that chartered accountant in practice to go to that Vodafone and Idea office and do the due diligence. So due diligence mein kya aayega? Here absorption is going to take place. So the targeting company mein CA will go and he will do the due diligence on tax due diligence, he will do commercial due diligence, he will do legal due diligence, he will do environmental due diligence, he will do human resource due diligence, he will do. Are you getting the point? Legal framework due diligence he will do, financial due diligence he will do. So these are the various types of due diligences he will do, and ultimately he'll prepare a report and give it to the acquirer company, and the acquirer company will take the decision and will see whether the negotiations are possible at the end or not. So these are the various things which generally takes place in the due diligence. So this is a major difference between due diligence, investigation and auditing is given. So please read out before leaving or before starting the due diligence. Now, which areas where the due diligence is very important, everyone? I already told you, corporate restructuring is the area, venture capital financial things is the area, lending is the area, leveraged buyouts are the area, public offerings are the area, divestment, disinvestments are the area, corporatizations are the area, mergers are the area, demergers are the area. So these are the various areas where the due diligence is highly important. Now, what is the purpose behind doing the due diligence? Why company hires a chartered accountant to do the due diligence? What are the reasons of due diligence? To confirm that the business is what it appears to be. Means what? Acquiring company wants to know that whatever the target company is saying that I am this and I am that, whether the target company, what it is saying, what it is showing, actually it is from inside. From outside, the targeting company is saying, yes sir, I am a very good company, it's just that there are some issues, that's why we are selling our business to you. So acquiring company wants to know that whether the targeting company is what showing, what it appears to be or not. Is it actually what it appears to be or not? Second thing, to identify the potential deal killers which defects the targeting company and avoid a bad transaction. Now try to understand that. What you have to understand here is, here see, try to understand this point. Now, if I have to tell you about this point, say for example, the Vodafone Idea was telling to the Geo that our customer base is this, we have almost 1.5 lakh towers where our network base is very good in this particular state. But when after the due diligence, they came to know that the number of towers which they were claiming they have already installed, so they are not that many numbers which they were talking about. So this is nothing but one of the reason called deal killers. These deal killers are the major reasons why a due diligence is carried out on a targeting company. Next point, to gain the information that will be useful for the valuing assets, defining representations, warranties and negotiation price concessions. Remember one thing, once the price has been decided or once the terms and conditions have been on the proposed way, so before getting it finalized, it is very much important to get the due diligence done, so that you will come to know that what you are offering to the targeting company, is that particular offer which you are making to the targeting company is having any scope of negotiations or not. So this is the another reason why the due diligence is required. Next one, to verify that the transaction complies with the investment acquisition criteria. Means we have to check that acquisition and investment is very much possible in this particular transaction or not. So this is what the basic idea behind doing what? Behind doing investments and acquisitions. Next point, areas of the due diligence and the types of due diligence. So broadly speaking, there are total 7 types of due diligence. What are those? Commercial operational due diligence. It is an evaluation of commercial, strategic, operational perspective or proposed mergers. Now we would like to see that whether the commercial activities or areas like commercial production, whether this particular area or strategic decision making, operations, effectiveness, efficiency and economies are being met by the targeting company or not. So basically this is a particular due diligence on evaluation on effectiveness, economy, and the efficiency of the operations of that targeting company or not. Second one is called financial due diligence. Financial due diligence is nothing but like an audit. You will go there, you will check their balance sheet, P&L, contingent liabilities, investment assets, loan, regularity in payment of taxes, legal laws and regulations are applied or not, working results, inventory, sale, purchase, income, expenditure, everything you are going to cover in the financial due diligence. Then the third due diligence is taxation due diligence. In this area particularly, you are checking that whether your particular client is very much regular in payment of undisputed taxes or not, or is there any dispute which is going on somewhere, and if what are the areas and for how long the dispute is going on, is it an actual liability or contingent liability. Then IT related due diligence means that you would like to check that whether the entity which you are going to acquire is fully automated or a combination of manual or automated environment. If it is fully automated, is its IT security policy and IT environment is sufficient and good enough commensurating with the nature and size, and are there any needful changes required when you will acquire that company to bring any updation in their internal control system and IT environment or not. So you would like to know about their information technology environment. Then the fifth due diligence is known as legal due diligence. In the legal due diligence, you have to check that the company should not be doing any violations or non-compliances of applicable laws and regulations, whether the company is aware of the fact, the targeting company is aware of the fact that to which kind of companies it is applicable, which statutes are applicable to their company, and are they on time doing the regularity in filing up of the forms and various compliances, laws and regulations they are following properly or not. Environmental due diligence means we are checking the compliance with the rules and regulations framed internally as well as internally. Means what? We are basically going to check the SWOT of the entity, strength, weaknesses, opportunities and threats, all those things we are going to check in the environmental due diligence. And last and the most important one is known as personnel or HR due diligence. Here we are going to check that whether the same workforce I can absorb or not, or do I have to do the various layoffs or not, whether the same whether the human resource will be able to meet my performance standards or not in the targeting company. So all that comes under the due diligence of personnel. Now, what are the steps involved in financial due diligence? Very important thing, you have to understand one fact that when you will open the ICAI material or any author's material, you will find that they have not explained all these due diligences at separate place. They have given one big question on the financial due diligence, and in the financial due diligence only they have added the other due diligences to be covered up in a more elaborated manner. Now you can see that it covered almost all the due diligences in it and carries huge list of areas to be covered. Ensures to explain each area. Remember one thing, again I'm telling you, I'm going to give you the main key areas list only, but when this question will come in the examination, you have to ensure that 2 to 3 lines, by drafting 2 to 3 lines on each area, you have to justify that in the examination. So what are the areas to be covered in the financial due diligence? In the financial due diligence, the first one is survival strategy of the target. Means what? The targeting company ka survival strategy kya hai? What is the survival strategy of the targeting company? How it is able to survive so many years? Next one, change in accounting policies. Generally, we ensure that accounting policies are consistently followed. So if the targeting company's accounting policies are not the same as acquiring company, then in that case, whether these are required to be changed or not. If changed, if they have changed from the last year to this year, what was the reason of such changes? All and everything will come under this point. Next one, extraordinary items in the P&L. Make sure that in the targeting company's financial statement, you have to be more focused upon the extraordinary items, unusual, abnormal and exceptional extraordinary items. Next one, hidden liabilities. Hidden liabilities को नीचे अपन full detail में explain करेंगे. Cash from operating and financing activities. So we are going to evaluate their cash flow statement, how they generate their cash from the operating activities and how they generate their cash from the financing activities. Compliance with the rules and regulations. So we are going to basically check here the legal framework, are they complying with the various rules and regulations which are surrounding this particular entity or not. Next one, perform the tax due diligence, employee due diligence and legal due diligence. तो यहाँ पे tax due diligence में check क्या करेंगे? We will check that whether they are regular in the payment of taxes or not. And employee due diligence में what we are going to check that whether employees I'm going to keep that same employment force or not, or is there any requirement of revision of the force, or whether I have to give them the on-the-job training to get it merged with my existing force or not. Next one, legal due diligence mein we are checking ki whether they are properly doing the compliances of rules and regulations within which it is operating or not. Next one, check on the management techniques and MIS. What do you mean by management techniques? Unka management ka criteria you have to understand. You have to understand their management structure, hierarchy, organization structure, MIS reports, how do they generate it. Statutory compliances mein you have to check that whatever the laws are applicable to them, are they properly following that one on. And financial projections, how their projections are being shown by the targeting company and are they achievable, measurable and attainable or not. Now, hidden liabilities mein what we can check in the targeting company, undisclosed guarantees. Ki bhaiya, you have any undisclosed guarantees, letter of comfort. They might be, you might have issued some letter of comfort to the bank for some particular guarantee. Next one, company may have sold some business with a promise. Yes, suppose the company has sold some business in the recent past and they promise the purchaser that we will acquire this business again, and at that point of time we promise that we will pay you the money. We will pay you the money. It means that is their contingent liability or hidden liability. Warranty liabilities we are going to check. Product discount and liquidity damages we are going to check. Agreement to buyback of the shares we are going to check. Future lease liabilities of the targeting company we are going to check. Tax liabilities and pending litigation. Sir, why we are concentrating that much on this thing? Because bhaiya, after acquisition, these all hidden liabilities will become your liabilities. So you want to know that are you taking a good decision in acquiring that company or not? Next point. Unfunded gratuity lease salaries. What do you mean by that? Say for example, it's been so long you have not paid the lease rentals, or you have not paid the gratuity, bonus, EPF, ESI to one of their labor unions, to the laborers and factory workers which are working in your factory, and huge and pending labor claims under the negotiation. Suppose it's been so many years that the cases are being imposed on you that there is a non-payment of business, non-payment of bonus, non-payment of bonus, non-payment of gratuity, non-payment of ESI, all these things we are going to verify in the hidden liabilities. What next thing we are going to verify? Overvalued asset. So sometimes you will find out that sometimes the targeting company pump up its balance sheets to such an extent that acquiring company would like to know that whether what it appears to be, is it actually what it appears to be. Point number one, we are going to check their intangibles. What we are going to check, everyone? We are going to check their what? Intangibles with no benefits. So remember one thing, you all know as per AS 26, if there are intangibles in your balance sheet which are not providing you any kind of economic benefit, what the AS 26 says that reduce it to nil. But when you saw the balance sheet of your targeting company, you are seeing that they are still showing those intangibles. Next one, investment valued at cost where market price is low. You all know that market price or cost, whichever is lower for the current investments, you have to check. Market price, say for example 20 crores, but you are showing it at 80 crores because you bought it at 80 crores. That is also wrong. Overinflation of assets. Capitalization of revenue expenditures. You all know that revenue expenditures are becoming the part of debit side of the P&L account. What they are doing in balance sheet, they are being unnecessarily added in the balance sheet to overinflate their balance sheet. Next one, slow moving inventories means what? You all know that slow moving inventories may or debt stock may mostly the net realizable value is very much negligible or zero. So as per AS2, it should be cost or NRV, whichever is lower you have to do, but they are showing it still at a cost. Obsolete plant and machinery. What do you mean by obsolete plant and machinery? Some plant and machinery are so outdated and obsolete that you can't even make a use of it, but they are showing it as a plant or machinery having a good book value. Next one, group company balances with the pending reconciliation. So these are the various overvalued assets you have to check. Now, what are the qualities you expect from a person who is carrying out a due diligence? He should be an open-minded person. Remember one thing, in due diligence, assumptions does not work. You should be an open-minded person. You should be clear and your purpose should be clear. Next one, you should make a comprehensive report. You won't believe, there's a huge report required on the due diligence. Huge report, so many areas to be covered. Next one, get best team of people. Remember one thing, while doing the due diligence, you might be verifying there's so many areas, so many operations, so many activities. So you can't expect yourself to be an expert in all these areas. So you should have a good team of people in your, good people in the different level of expertise in your team. Next one, coverage of all important areas. Remember one thing, you are expected to do the 360-degree coverage. All the important areas you have to cover. Talk to the customer, suppliers and partners and employees. Because if you will communicate with them, then only you will come to know about some hidden information when you will talk to them. So this is also one of the important quality the due diligence chartered accountant who is doing that must be having. Next one, follow right management approach and obtain the evidences. Obviously, due diligence is also based upon the SAAE. What is SAAE? Sufficient and appropriate audit evidences. What is your work approach in due diligence? Purchase of the business in many instances is the largest and the most expensive asset purchase in the lifetime, and therefore some caution should be exercised during the due diligence process. So what they are trying to tell that is sometimes acquiring a company is the biggest decision of any particular acquiring company. Therefore, due diligence may you have to be very, very careful while doing the due diligence. Therefore, assessing the business on the fair value passes through the many tests. Next one, discovering the correct strategy is always challenging because each situation is what? Unique. Very well said. There are various variables to be taken into consideration like company's age, company's market, geography, price levels, competitive dynamics, etc. Remember one thing, if the Jio is acquiring the Vodafone idea just because they belong to the same industry, it doesn't mean that it will be a rightful decision for the Jio to acquire the Vodafone and idea. There are so many due diligence areas which the chartered accountant in practice has to bring it to the notice of the acquiring company so that they can see that whether it is worthwhile to buy a particular company with the terms and conditions correct or not, or is there any scope of negotiation. And due diligence, the person who is doing the due diligence must bring out the list of deal killers in front of the acquiring company. Next one, therefore the 6-dimensional process work is provided. Refer the diagram in the study material. In the study material you will find one diagram relating to define, devise and delivery. All the diagram, there is a big diagram. Just 100% consume that diagram in your head, and in the 6th point you can write that particular diagram. Now, how to conduct a due diligence, everyone? Due diligence is also converted into 3 stages. What is the first stage? Pre-due diligence means planning stage. So, isme what you will do? Gain the understanding of the transaction means acquiring the knowledge of the client's business. Assessment of work and methodologies, apna work and procedures and techniques and methodologies you have to select. Coordination of the project team, have a discussion with your engagement team, have a discussion with your due diligence team and do the proper coordination of the work with them, and prepare due diligence request list. What questions you are going to ask, what information you are going to look for, uska ek full list you have to prepare. That is called pre-due diligence stage. Process and negotiation phase, work off-site and on-site. Remember one thing, you have to do the working on-site and off-site. Q&A process to be carried out, means question and answer process is to be carried out. Give the questionnaire to them and tell them to fill up the answer. After a certain period of time, go there and collect those answers. Report drafting. Remember one thing, you are not allowed to make a final report at the very beginning. First of all, you have to prepare a draft report. Preparation of negotiation terms. If you think that yes, some scope of negotiation is there, so write down the notes on which the negotiations can take place, and regular updates. What do you mean by regular updates? Remember one thing, you should always be in touch and ensure that you are doing your due diligence in a proper updated manner. Next one, post-closing process. What do you mean by post-closing process? Preparation of review of closing documents. So, bhaiya, now your review is over, now your due diligence is over, now summarize your all documents. Next one, post-closing transaction review. Whatever the transactions you have seen, you have to properly analyze and review them. And involvement in the price adjustment procedures. Sit with the management of the acquiring company and make them understand on what basis and on what areas they can go for a particular level of negotiation. Now, what are the contents of the due diligence report? Bhaiya, contents of the due diligence report starts with the executive summary. You have to give the summary like what this due diligence report is all about. Introduction, you have to give the background of the target company. You have to give the objectives of the due diligence. What is the purpose behind that? Scope of verification, what areas you have covered. Brief history of the targeting company. Shareholding pattern of the targeting company. Observations on the review. Comments on various important areas. What areas? What are their future projections? What are their SWOT? You have done the SWOT analysis on the strength, weaknesses, opportunities and threats. And what is the structure of charges and liens, whether the targeting company ka assets are freehold or charged. Then suggestions, you are going to give them the suggestions also on ways and means, on contingent liabilities, on various areas to be taken care before or after the merger and acquisition. You are going to tell this all to the acquiring company. And you also have to do the assessment of their management structure. You have to include your views on the assessment of their financial liabilities, valuation of assets, operating results, taxation and statutory liabilities, possible liabilities, and net worth. So these are the various areas where you have to give the assessment to the acquiring company. So you can see that it is a very detailed. One of the point here we have done now, it should be a comprehensive report. Comprehensive means you can see that how many points we are basically going to cover in the due diligence report. So this is all what the contents of the due diligence. I hope you all understood what due diligence is all about. Very thin line of difference if you compare it with the, this thing, investigation. But yes, very, very important in the areas like corporate restructuring and mergers and amalgamations and absorptions and restructuring areas, right? So that is what all about the due diligence, everyone. So I'll see you guys in the next video relating to forensic audit. Hello everyone, good evening to all of you, and this is your faculty CA Rohit Grover for your subject paper number 3, Advanced Auditing and Professional Ethics. Now today I'm going to share with you another small video on the forensic audit. Like you all know that we have already completed due diligence, we have already completed investigation, and now it's time for us to understand what do you mean by forensic audit. Now, first of all, sir, what is the area, what is the requirement of this particular audit, and can you please throw some light on the introduction? Yes, nowadays you all know that corporate scams and scandals are happening. At that point of time, earlier what used to happen, the departments like, CID, CBI, these kind of departments used to handle these kind of cases. But nowadays they are looking for a need of a person who is having a knowledge of finance, knowledge of accounting, knowledge of an auditing, which means chartered accountants in practice, who is also able to apply some investigative mentality. Are you getting the point? So knowledge of finance, accounting, auditing with the concept of investigative mentality. If the mix of all these 4 qualities are there, that particular audit is basically known as forensic audit. You might have seen that in so many, television series also, like CID and all. There we used to use the word called forensic lab. Like whenever any murder or any criminal site pay, people go there with the gloves on their hand. They go there and pick up the evidences, go to the forensic lab. They will prepare a report and will give it to you, whether that particular evidence is corroborative evidence and are you able to prove the particular crime or not. Same is the case here. So here, instead of CBI, who is going to do the criminal retrospective examination of the total scam and scandal? That is nothing but the chartered accountants in practice. So that is the basic area where you have to understand about the forensic audit here. Now question is, sir, what do you mean by forensic audit? You can see that the word forensic has come, or it means suitable for use in the court of law. As you all know that nowadays, it is very difficult for us to make sure that in the court of law, it should be accepted. In the court of law, it should be accepted that yes, particular crime has taken place. But court never believes anything other than evidence. So in the forensic audits, our focus is more on collecting the evidence relating to corporate scams and scandals. Forensic audit can be conducted in the audit to prosecute a party for fraud, embezzlement, and other financial issues. So if there is any fraud, embezzlement, or any financial issues have taken place in a particular area, then in that case we can prosecute with the help of the which audit? Forensic audit. Next point. What do you mean by forensic audit? It refers to comprehensive use of your accounting skills, auditing skills, investigative mentality in identifying the reasons of fraud or misappropriation took place in the corporate concern. So remember one thing, in the forensic audit, you don't only need the accounting skills, not only you need the auditing skills, you also need a investigative mentality. Like here, you have to start your examination with a suspicious mind. Right or not? Like in the auditing, we conduct a normal examination, but here you have to start your examination with a suspicious mind, because you already know that a fraud and error has already happened. A particular fraud or an error has already taken place, and you are there to take it out. You are there to dig it out. So investigative mentality is also required, and to identify the reasons of fraud, misappropriations took place in the corporate concern. So this is what the special branch of audit, where the investigative mentality along with the financial knowledge, along with the auditing, and along with the accounting knowledge is required. Next one. What is forensic auditing, everyone? Forensic auditing, or we call it as a forensic accounting, or we call it as a forensic investigation. It does not make any difference between these three words. So either it is forensic auditing, forensic accounting, or forensic investigation. But there is one word you will find that in our ICAI material, that is called fraud auditing. Sir, what do you mean by fraud auditing? Now try to understand. Now, in the fraud auditing, when you suspect that a particular fraud or ethical lapse is there, and you want to suppress that fraud or that ethical lapse on that spot only, you don't want it to grow. In such cases, you will conduct fraud auditing. Now, what do you mean by fraud auditing? I'm not talking about the forensic auditing. I'm using the word fraud auditing. It is all about freezing the fraud or ethical lapses identified if there is any suspected or misappropriation is there in the business concern. It means when you suspect, when you think that something big is going to happen, at that point of time when you would like to freeze that particular fraud, that is called fraud auditing. Forensic auditing means when the subject matter, when the damage has already been done and you have been hired to understand what was the reason of that damage. That is what the major difference between the fraud auditing and forensic auditing. Now, what is the difference between financial audit and forensic audit? As you all know that the objective of the financial audit is to express the opinion on the truthness and fairness of financial statement, whereas a forensic audit may whether the fraud has taken place in the books of accounts or not. What is the techniques here? The technique is substantive compliances sample testing, but in the fraud auditing, it is substantive, investigative and detailed testing. To look at the difference there, in the normal financial audit, it is sample testing, but here it is detailed testing. Next one, period. Generally limited to a financial year. Generally, the fraud period, the financial year audit is generally limited to a financial period, that is accounting period. But when it comes to the fraud auditing, when it comes to forensic auditing, it is not having any particular time period. So it may take number of years or a week. There is no such specified time period. For vouching and verification, we generally rely upon persuasive evidence which is given by the management. But in the forensic auditing, we are only and only going to concentrate upon conclusive evidence. Of the balance sheet items used to check arithmetic accuracy, checking regularity and propriety of the transaction. Adverse findings. So if we find generally in the audit adverse finding, we generally give a adverse opinion, disclaimer opinion and qualified opinion. But here we particularly do the investigation, collect the fraud, we identify who has done the fraud and obtain that evidence and keep that evidence to be put up in the front of court of law to be acceptable as an evidence, right? So this is what the major differences between the financial audit and forensic audit. Next one. Who is a forensic auditor? A forensic auditor is the one who analyzes, interprets, summarizes and presents the complex and financial business issues. The one who analyzes, summarizes and interprets the complex and financial issues. Means what? Sometimes you all know that management is very clever nowadays. They are more indulged into window dressing kind of acts or acts like teaming and leading. So forensic auditor is the one who analyzes their acts, interprets their acts and would like to summarize them and present the complex and financial business issues in a very simplified way. Generally, which areas may the forensic auditor is very much popular? Forensic auditors are very much popular in the areas of lawyers, police force, banks and insurance company, governments and courts. So these are the major areas where they generally hire the forensic auditors. Now, next one, forensic auditor is oftenly involved in what? We are oftenly involved with the fraud detection. What do you mean by fraud detection? Investigating and analyzing evidences detected financial frauds and tracing the misappropriation of funds. So basically, this is the major area where we are being hired for. What is the area? Which industries are hiring us? This is different question. And for what purpose we are being hired? This is the different one. So what is the first function we have done? Fraud detection. Which detection, everyone? Fraud detection. We are also being hired nowadays for the computer forensics. What do you mean by computer forensics? Like say for example, the client has deleted a data which was very sensitive and confidential information. They did not want their auditor to come across that. So there comes the need of forensic auditor. We have various tools in our IT environment which we can apply and we can recover the data even though it is being deleted from the particular books of accounts. So that is what you mean by developing a computerized application to assist in the recovery, analysis and presentation of which data? Financial data. Next one, nowadays we are also being hired not for the fraud detection, for the fraud prevention also. Means what? Either reviewing the internal control systems to verify their adequacy, providing consultation in the development and implementation of good internal control framework aligned according to the risk profile. देखो क्या होता है, fraud detection means fraud has happened and you have been hired to detect the same. Fraud prevention is you are suspecting that there is a fraud which may happen due to the poor ICS or due to the poor bookkeeping system or due to the poor accounting system. So you have been hired to identify the reasons in which area they are lacking in their internal control system, accounting system, bookkeeping system, and what are your recommendations to improvise the same. So this is called fraud prevention, this is called fraud detection, this is called computer forensics. What is the next one? Providing expert testimony. Nowadays, when these scams and scandals go beyond the considerable size, then these are going to be taken up in the court of law and all. And in the court of law, as a forensic expert witness, you are also being hired nowadays to testify, to give the testimony or to become a witness as a forensic auditor. Now, assisting in legal proceedings in including testifying in the court as an expert witness and preparing visual aids to support the trial evidence. So these are the areas for which you have been hired for. What are the areas? Fraud detection, fraud prevention, computer forensics, and providing expert testimony. And who are the people who are hiring you nowadays? Lawyers are hiring you, police force is hiring you, bank, insurance company hiring you, government is hiring you, and courts are areas where we are being used. Now, their services are in great demands in the following areas. What are the areas? Professional negligence cases came in. Now, whether the auditor of a particular company is guilty of professional misconduct or guilty of gross negligence or not, the another practicing CA can only detect the same. That is what they are saying. So nowadays, in case the company wants to know that whether our auditor was involved in the negligence case or not, so they will hire the forensic auditor to make them understand yes, whether he was involved in that particular area or not. Fraud investigation and risk control services, you all know, just now we have discussed, he is being hired now. We are being hired nowadays fraud prevention and fraud detection as well as risk and control areas. Next one, arbitration services. What do you mean by arbitration services? For out of the court settlement or for identifying the areas whether the fair judgment has been taken place or not. Or sometimes if you don't want to go through via the route of the court, where you don't want too much technical legal things to happen to your case, you can also hire a forensic auditor for the arbitration services. Like he's the one who will be passing an award, he's the one who will be telling that whether the particular fraud has happened or not. Dispute settlement, in case there's a dispute settlement between the two organizations or any kind of dispute, we are being hired for the dispute settlement also. Settlement of insurance claim. Nowadays, though, it is very popular area where the forensic auditors are being hired. Say, for example, there is one entity and that entity is looking for, some company has made a claim of 300 crores. Their 300 crores of stock got burned due to fire. Now that insurance company really wants to know that whether that was done intentionally or the fire has happened accidentally, whether the 300 crore valuation, what the client is asking is genuine or not. For that, they may hire the fraud investigator or the forensic auditor, and he will help the insurance companies in understanding whether the claim made by them was genuine or not. And most importantly, criminal investigations. So you are also being hired nowadays for the criminal investigations. Next one, services rendered by the forensic auditor. What are the services? Crafting questions to be posed. Next one, responding to the questions posed. Next one, identifying the documents to be requested and summoned. So nowadays we have been hired to identify the documents, and those documents which are required to be furnished, we can also help the preparator in the services of summoning those documents, identifying the persons to be the most knowledgeable of the facts and figures. So nowadays we have been hired for taking the services. What do you think that out of these persons, who is going to be the most knowledgeable person? For that services also we can be hired. Next one, conducting relevant research. So we can be hired for conducting the R&D, research and development. Identifying and preserving the key evidences. Yes, that is also one of the things. Very simple point it is. There is nothing required to be told to you in detail. Next one, Evaluating produced documentation and information for completeness means what? Say for example, we asked for some evidences, they provided us evidences. Now we have to evaluate the evidences provided by them was genuine, is complete in each and every respect or not. Next one, evaluating analyzing produced records and other relevant facts, identifying alternative means to obtain the key facts information. Suppose you should remember that as an auditor, when your plan A fails, you should always be ready and you should always be available with the plan B. So if the plan A is not working, you should always be ready with the plan B. Next one, identifying alternative means to obtain key facts and information, providing questions to be answered, and cross-examination of the facts and expert witnesses. So he can also be hired for the cross-verification of the witnesses and action, like an advocate. So we are not less than a police inspector, we are not less than nowadays a CBA officer. We can also cross-verify the witnesses who are coming there to witness the particular event. So these are the various services nowadays forensic auditors are being hired for. Next one, forensic auditor के characteristics क्या है? What kind of skill set is required from a forensic auditor? Forensic auditor के characteristics क्या है? You should have the out of the box thinking. It means you should start thinking from the area where the other people stop thinking. So you should have an out of the box thinking. Next one, curiosity. What do you mean by curiosity? Curiosity mein you can say that yes, you should always be curious to look at the things from the curiosity point of view. Now, why this has happened? I want to know. Like next one, persistence. You should be very much focused upon your area which you have taken up under your audit and forensic investigation. Detailed oriented. Remember one thing, not like an audit, we are not going to believe whatever is being said by the management, because management may also get involved in that. So we have to go for the detailed testing. Next one, inquisitiveness. Inquisitiveness means what? You are very much prone to inquiries. Just for a small thing also, you would like to make a inquiry. Like if you have a little bit of suspicion also, you are going to make a inquiry. So these are the various qualities. Next one, creativity, imaginative figures. You should have discretion. Discretion means you should be having a particular right to say no. I mean, it should be your right whether you want to show your documentation, like in the 230, like this kind of discretion. Skepticism, obviously you should be a questioning mind throughout the particular forensic audit. Next one, confidence level. It should be very much high, because let me tell you one thing, forensic audit is more of a behavioral sciences rather than, you have to play with the people, you have to play with the minds of the people. So you have to be have a very much confidence, right? Next one, sound professional judgment. That is very much required. So half of the characteristics are the personal qualities of an auditor, and remaining half which are required by a person who is starting his particular project with a skeptical mind. So these are the various characteristics which are expected from you in your character. Now, what are the skill sets you require? Compliance of the procedure, standards and methodologies. Even though you are a forensic auditor, you should never forget that you have some various set of standards to be followed. The next point, accounting and business reporting system. You should also have a skill set of understanding the accounting and business reporting system of an entity on which you are doing the forensic audit. Information technology, data analytics. You should know the data mining techniques, how to retrieve the information. You should be having a knowledge of criminology, because if you want to catch a criminal, you have to think like a criminal. Legal framework. You should know that what are your parameters, what are your boundaries beyond which you should not cross. Litigation process, you should have the knowledge of the legal process also, how to get an evidence, how to submit it in a particular court, and what is the process of proceeding with the litigations and claims. Next one, investigative technology means what? You should have the investigative techniques, you should have approach of investigative mentality. Evidence gathering, because you are going to produce something which is acceptable in the as an evidence in the court of law. Next one, network of professional contacts on related fields. Remember one thing, as a forensic auditor, you have to have a good network of lawyers, good network of IT professionals, good network of people in the courts. So these are the mixed group of people with whom you should have a good networking. So these are the various skill sets which are expected from a which auditor? Forensic auditor. Next one, forensic audit mein what is the process and techniques? Forensic audit karne ka what is the technique, what is the process, what is the steps to be included in the forensic audit? Step number 1, initialization. Now it is important to have a clarity, no doubt, must know the real purpose and utility of the assignment before obtaining client's knowledge of business and facts. So they are saying that being a forensic auditor, you have to understand one fact, that you should be very clear and you should be very much thoughtful. You should be knowing the purpose. You should be knowing the why you are doing this forensic audit before acquiring the knowledge of the client's business. This is the preliminary homework which you have to do. Next one, develop a plan. Like an audit, you have to develop a plan, meet initially with the client, and carry out some initial investigation, understand and take the information you want, and decide your methodologies. That comes under developing a plan. Then obtain a relevant evidence. Now the execution stage has started. Depending upon the case, location, documents, locating the documents, where the documents are being held. Economic information must be alert to the documents. Evidence may get falsified. You should also know that yes, they know that forensic auditor has been hired, so they will try their level best to falsify the documents and all. That you should not allow. Next one, amount involved in the fraud. These are the things you have to carry out. Perform analysis, calculate economic damages, right? Summarizing the large number of transactions, performing tracing of assets, right? Walkthrough test, right from the starting point to ending point. Performing the present value PV factor का करके देखो. Calculation using discount rates, performing regression and sensitivity analysis, utilizing computer applications such as spreadsheets, it will ease your work, and utilizing charts and graphs to explain your analysis. So like in a normal audit, we do the initial preliminary engagement and then develop a plan, then execution. Same here also, initialization, develop a plan, and evidence collection. Now perform the analysis. Now finally you have to report. Such reporting includes the information detailing the fraud activities. Shall discuss now the fraudster setup of scheme and controls required to prevent it. So he should report that how the fraud has happened, how the fraudster has conducted his scheme, and how it helped him in doing a particular fraud. Next one, court proceeding. The evidences gathered will be presented to a court, and team members may be called upon the court to describe the evidence they have gathered and to explain how the fraud was identified. So this is also one of the feature which makes the forensic auditor different from the normal auditor. Normal auditor is not required to have this set of skill, but the forensic auditor must know that how to go to the court, how to testify as an expert witness. These are the various qualities which are properly asked from the forensic auditor. Next one, what are the techniques of forensic audit? This is one of the chart which is given in your ICAI notebook. So techniques, I'm leaving it on you. There are total 3 types of steps you follow. One is called analytical steps, technology steps, and investigative steps. Right or not, you just make sure that you should be very good with these arrows when you're reading it. It's a very simple thing. General audit techniques. What do you mean by general audit techniques? If you want to catch it, you have to think like it. Means what? If you want to catch a criminal, you have to think like a criminal. So testifying defenses, like creating a situation to defend yourself, that is requires you to put yourself in the shoes of suspect and think like him. Statistical and mathematical techniques like ratio analysis and trend analysis. These are various substantive analytical procedure techniques which will also help you in the forensic audit. Next, technology based techniques means what? Carry out the computer forensics or digital forensics. Like many open source digital forensics tools are available. Like say for example, NCASE, MD5, free log tools are available for live analysis, deleted files, stenography. All these various tools are available in the IT environment, which will help the forensic auditor in getting the deleted information from the client's computer also. Every transaction has a digital footprint in the computer society. As you all know that every thief leaves his footprints when he does a stealing and theft and all. Same is the way. Even if the fraud is being carried out, on a IT basis, on like criminal scene has taken place on the digital basis. Now digital tools are available, which we call them as card techniques also, CSL techniques also. Right, card techniques, that's what I was telling you. Refer to automated environment audit. There we have already discussed about the card techniques. GAS, what do you mean by GAS? Generalized audit softwares are available like ACL, IDEA, PAN audit, like automated command language, and IDEA may interactive data extraction and analysis. And PAN. These are the various techniques which are to be used in the forensic audit. CSTs, common software tools, more popular due to the GAS shortcomings. Example, spreadsheets, RDMS, relational database management system, and crystal reports. Data mining, data analytics techniques, you already know. This also we have already understood under the audit in automated environment. So these are the set of assisted technology to automatically mine large volume of data for a new or hidden expected information. Categorized into discovery, predictive modeling, deviations and link analysis. Explains various affinities, associations, trends and variations with the conditional logic. So these are the various techniques nowadays which are required to be used by the forensic auditor. Next one, forensic audit report mein what should be there? Remember one thing, forensic audit report, before drafting the report, you should have a clear thought process, clear thinking is required. You should keep the readers upmost in the mind. Make sure that your forensic audit report should not be looking like a boring to the reader. Reader should be your topmost priority while drafting the report. And unbiased approach. Make sure that you are giving your unbiased approach while issuing the forensic audit report. Impact of report, facts and figures based on the conclusion to be provided. What will be the probable reaction of the report? So these are the various 4 things which you have to keep it in mind before drafting a report. When it comes to your report, what are the major factors you have to write in your report? Your nature of the business you have done the fraud forensic audit for. Now, nature of the business for which you have done the forensic audit, nature of the subject for which you have done the forensic audit, for whom the report is intended, purpose of report, management's attitude and directive needs, and next one, forensic auditors' approaches and caliber. Make sure that these are the factors to be considered in written reports, and extent of details required by the management and auditing. Next, what are your contents? Executive summary. Give us the summary like what this report is all about. Risk analysis. And next one is audit process which you have followed. Evidence of the risk events. Next, audit recommendations. What are the recommendations by you to rectify those various areas which you have carried out? And next one is governance on recommendation implementation. So whatever the recommendations you have given, whether the particular entity has implemented those recommendations or not. So these are the various things which are required to be done when you are issuing a forensic audit report. I hope you already got an idea about the forensic audit, and with that our investigation, due diligence and forensic audit is also over. So see you guys in the next video. Bye everyone. Hello everyone, how are you all? Welcome to the another video. So this is your faculty Pse Audit for your paper number 3, Advanced Auditing and Professional Ethics. Now this video is going to be on the automated environment audit. So first of all, we have to understand, sir, what do you mean by automated environment? Now, automated environment means the integration of processes, initiation, recording, authorization, everything when it happens, when the man-machine material, everything is automated in a particular environment. It's an ecosystem where the people, process and technologies are going to work together in an automated way. That is called automated environment. For example, Amazon, if we'll take Amazon ka, so when we select any item on the Amazon, we just place an order, amount also will be deducted automatically. Suppose the size you did not like, you just place the refund order, refund also takes place automatically. Replacement order, the person from the shipping department will come and will pick up the order from your house, that is also going to take place automatically. So basically automated environment is what? The automated environment is an ecosystem. Now see, what is automated environment? It is an ecosystem that combines people, process and technology. That combines again what? People, process and technology with an overall business environment. So when your complete business is being carried out with the people, process and technology integrated in such a manner that everything is automated, that is called what? Automated environment. For example, today if you'll see that section number 128 says that yes, every company has to maintain their books of accounts in a which form? In a very automated environment form. So here you can see that package softwares are there. For the small and micro and small enterprises, nowadays Tally, QuickBooks is nothing but various kind of software which are available. So those big companies which are running on the accounting system, they use the softwares like small ERPs, Tally ERP, SAP Business One, Focus ERP, BAN. So these are the examples of the various business applications which nowadays companies are using for their automated environment of accounting system and all. Now, what do you mean by the components of automated environment? Now, what are the things you need to carry out the automated environment? To carry out the automated environment, the very important thing is database, where your total data will be secured and saved. Second one is operating system, Microsoft, Mac, iOS. The operating system what you are using is also going to be heavier nowadays. Next one is storage devices, hard disk, SSDs, various. So these are the components. Fourth one, network devices. You need routers, modems, switches, for your internet connectivity. You need a network, you need an internet. Internet itself is also very, so internet and devices which are providing you the internet services, both are two different components. And physical environment, environment like access to the IT facilities, CCTV cameras are required, temperature control, firefighting equipment. All these are the various things which are nothing but part of the your ecosystem of automated environment. So what are the components of the automated environment, everyone? The components of the automated environment are databases, operating systems, storage devices, the internet service, as well as the physical environment. Next point. What are key concepts of auditing in the real-time environment such as e-commerce, ERP, core banking? Now, you know that in the banking system, if I have to give you the example, you go to any corner of the world, if you use your ATM or credit card or debit card, now tell me one thing, do you immediately get a message that this much of amount is debited from your account, and do you immediately be able to generate the mini statement? Or will you be able to immediately download the like account statement, and immediately everything will be done on the spot? So that is called online real-time automated environment. What do we call it as? Online real-time automated environment. So that is, what do you mean by what? Real-time environment. So real-time environment basically nowadays very much useful in the banking. So as and when you make a, say for example, you made an order on Swiggy, are you getting the point? And immediately when you made the payment, automatically when you will check your app of ICICI Mobile, you will come to know that yes, the message or the deduction has already taken place. So it is not even a difference on nanosecond. This is called online real-time. Real-time basis, the changes are taking place. Now, a real-time environment is a type of environment where the business operations and transactions are initiated, processed, and recorded immediately as they, just give me 1 minute. So what do you mean by real-time environment, everyone? A real-time environment is a type of automated environment where the business operations and transactions are initiated, recorded, and processed immediately as and when happen without any delay. So the moment when your Swiggy payment or Zomato payment will be deducted, automatically you will get a message that your account has been debited with 200 and 500 and 600, whatever the order you have placed. That is called real environment, everyone. And this is very much popular in the e-commerce, ERP systems, and core banking system nowadays, CBS, right? Now, what are the real-time environment? What are the real environment components? Now, in the real environment components, like just now we have understood, in the automated environment, you need a hard disk, database, and all. The same components are required in the real-time environment also. Like first, most important thing in the real-time environment is what? Applications, everyone. What is the most important thing required? Applications like ERP, SA, Oracle, R1 to core banking applications. So these are the various areas where you need the real-time environment. Next one, middleware. You need websites like Apache ATM switches and all. This is what the website is also one of the components, middleware. Networks, you need a good internet connection, LAN, WAN, and internet hosting, and VPNs and all. Next one, hardware. Obviously, you need the data center to store your data and backup facility, storage facility, and power supply. So these are the various things you need in the real environment and its components. Next one, consideration of automated environment at each phase of the audit cycle. Remember one thing, like we normally do an audit and we do the planning, execution, and reporting. In the automated environment audit also we do the planning, execution, and reporting. Now see, in the planning stage, what we should know? In the planning stage, what we should know? We should identify significant accounts and disclosures, quantity and qualitative consideration, relevant financial statement assertions, identify likely sources of misstatement, consider risk arising from the use of system. So these all considerations you have to keep it in mind at the time when you are starting the audit in automated environment. You should know about their quantitative and qualitative aspect. You should know that what is the risk associated with more and more dependence upon the IT system. You should know the assertions to be tested. Obviously, now you are going to test the assertions in an automated environment way, not in a manual way. Then the execution stage will come. Under the execution stage, understand and evaluate. Now, like we do the audit in a normal, in a manual kind of audit. We understand their internal control system, we evaluate their internal control system, and then we test it. Here also, you are understanding their controls. You are understanding their controls, right? You are evaluating their controls. You are understanding their controls. You are evaluating their controls. You are testing for their operating effectiveness. So under the understanding and evaluation, what comes? Document understanding of the business process using flowcharts and narratives. So remember one thing, in the automated environment, the biggest challenge is walkthrough test. That is not possible generally in the automated environment. Why? Why? Because in the automated environment, everything, the input processes and output takes place in an automated way. You can't open the computer and check it what is happening inside. That's the reason here your techniques of evaluation and understanding also will be automated, like using the automated internal questionnaires, automated internal checklist, automated narratives. So these are the various methods by which you have to understand and evaluate their internal control system. Then prepare the risk and control matrices. Understand the design of the controls by performing walkthrough test. Now remember, I said that like in the manual audit, walkthrough test is little bit difficult in case of automated environment, but I never said that walkthrough test is impossible. Like in the manual, right from the journal, we can go to the ledger to trial balance to financial statement. That walkthrough test is very much visible when it comes to the manual environment, but in the automated environment nowadays it has been made possible with the techniques like card techniques, data mining, with the techniques like scarf, snapshot, RAID. These are the various card techniques available which helps us in doing the walkthrough test right from the beginning till the end. So it's not that the automated environment nowadays cannot be done properly. It can be done rather more efficiently as a manual audit, because the chances of frauds and errors, chances of miscalculations and miscomputations will be very less when you're doing the audit in automated environment. And nowadays, try to understand one thing. If you're a qualified chartered accountant alone, that is not of any use. After getting qualified, you have to mandatorily do the concept or do one post qualification course called DSAT, Diploma in Information System Audit. Let it be practice or let it be service. Either you are a member in practice or member in service. These are the basic requirements nowadays that corporates and entities are looking for in their employee as a CA or looking for in their auditor as a CA, right? Now, understand the design of controls by performing the walkthrough test. Then process-wide consideration for entity level controls and segregation of duties. Same thing which we do in the manual. Do we check the internal control, internal check system, and we check that properly duties are segregated or not? Same way, restricted access should be given, entity level controls are there or not. So all those things we are checking, proper SODs are there or not, segregation of duties. Next one, IT general controls, application controls, and IT dependent controls. This one you already have done that at your intermediate level. Next one, test for operating effectiveness. Now you have understood and evaluated their internal control system. Now it's time for you to do the testing of that. Assess nature, timing, and extent of controls. Assess reliability of source, completeness of population. Testing their key reports and spreadsheets. Sample testing, consider the competence and independence. After testing only you will decide whether you can rely or not. See, you already understood it, you evaluated it, you thought of relying, but you cannot rely directly on their controls without testing it. So you have to decide your nature, timing, and extent of your controls. Testing, you have to also assess the reliability of the source of their data and completeness of the population. Test their key reports. Do some sample testing. Consider competence and independence of the staff who is preparing and giving you those reports. And finally, in the normal audit, what do we do? What is the end product of every audit? Reporting. Here also the end product of the automated environment is going to be reporting. Evaluate the control deficiencies. By after understanding evaluation and testing, you definitely came to know about the various kind of deficiencies in their internal control system. So evaluate them, and if you think that they are significant enough, if you think that they are significant, that is required to be communicated to those charged with the governance, obviously as per SA 260. And not only you have to report, you also have to give the recommendation how to rectify the same. And along with that, internal controls memo and management letter. That is basically, we call it as, what do we call it, everyone? Please tell me, what do we call it? Immediately, please tell me. What do we call it? We call it as letter of weaknesses 265. Communicating the deficiencies in their control system with the TCWG. Yes, you have to send a letter of weaknesses. Next one, finally, you have to report it in your audit report. So these are the various areas which you need to do. So what are the three stages into which automated environment is useful in every phase of the cycle? In the planning phase, in the execution stage, and in the reporting stage. Clear, everyone? So it's just like a normal manual audit only. It's just that you have to see that everything is now taking place in an automated manner. Next one, Enterprise risk management overview, everyone. Today, you all know that our business is surrounded by the various types of environment. One is called micro environment and one is called macro environment. When I take this particular topic now, I sincerely get to know about our intermediate days when the strategic management used to be there. Micro environment, macro environment, cosmic and Pestle. Same thing happens in our businesses which are running on the automated environment. So automated environment are not protected from the environmental influences. They also do get affected by the key environmental influences which are there. Point number one. Today's business operates in the dynamic environment. Yes, we know today's business operates in the dynamic environment. Next point. Volatility, unpredictability, and the pace of changes that exist in today's environment is far greater than past. Now, you know that today, as and when the technology is increasing, obviously the risk associated with the technologies are also increasing. So, the environment is developing, the risk scenario is also developing. So, you know, it is happening in a very balanced way. Wherever the advantages are going up, at the same point of time, disadvantages are going up. Because of this dynamic environment, associated risks to the business have also been increased, and companies have a need to continuously manage these risks. Now see, what are the type of risks we are associated with? Market risk, regulatory risk, technology risk, security risk, financial reporting risk, operational risk, credit risk, business risk, project risk, and product risk, and environmental risk. One of the most important framework, and nowadays, you know, India has also started relying upon the various frameworks which are introduced in the other international market like COSO, Committee of Significant Operations, sponsoring organizations. Now, this COSO is a particular, you know, internal control system in the IT environment developed by the Committee of Sponsoring Organization in 2004. Because you remember one thing, when you come to know that there is a particular risk which is associated with your automated environment, would you like to keep your hands folded? No. You would like to mitigate it. You would like to reduce it to the lowest acceptable level. And nowadays, every company has to make sure that their risk should be reduced to the lowest acceptable level. So that's the reason most of the companies are nowadays using the COSO framework. What is COSO framework? Committee of Sponsoring Organization, which was developed in 1992. Again redeveloped in 2004, again re-amended in 2016, because environment is dynamic. And as the environment is dynamic, at the same point of time, technology is also becoming dynamic. At the same point of time, we have to make so many changes in the present scenarios also. Now, risk assessment process. Here, risk assessment process is same like RAP, which we have in the manual audit. What are the steps involved in the RAP? Define your business objectives and goals. Identify the events that affect the business objectives. Then assess the likelihood of and their impact and respond and mitigate the risk, and assess the residual risk. So this is what we do in the normal RAP. Risk assessment, but this is, remember, this is a RAP of the entity. So when the entity is into the automated environment, what should be the risk assessment procedure? They should define their goal and objectives and should see that what is going to become a barrier in their goals and objective. Then assess the likelihood of those barriers and what is the impact they are going to give on the goals and objective. Then try to mitigate them and reduce it to the lowest acceptable level, and do not ignore the residual risk. Now, when you are verifying the RAP of an entity, these are the following considerations you have to keep it in mind. Qualitative and quantitative factors. Definition of KPRIs means key performance risk indicators. Risk appetite, how much company can digest, how much company can eat the risk. And always give the score and scale and maps to your risk. Like, are the risks in your entity from 1 to 10 are on 8 level, means high level of risk, or are on 1 level, means you have reduced it to the lowest acceptable level. You were successful in that. Use of data and matrices, and always remember to set your what? Benchmarking. So these are the various matrices, these are the various considerations you have to use while assessing your risk assessment procedure. Now, evaluating the risk and control and entity level and process level. Now remember one thing, first of all, what do you mean by entity level controls? Entity level controls are those controls which are going to take place right from the bottom level management to top level management. These are controls which are going to be present at every level. It can be at bottom level, or it can be at the top level, it can be at the management level. So see, entity level controls are such control that operates across a company at all the levels, that is from the board to the top level of management, also at the transaction level, are known as what? Entity level controls. Now, what are the features of the entity level controls? Feature number 1, also known as what? Entity level controls are also known as what? Pervasive controls. They are also known as which controls, everyone? Pervasive controls, since they operate at all the levels. Now see, also known as pervasive controls since they operate at all the levels. What do you mean by pervasive controls? Very important from the auditor's point of view to be examined for. Next one, part of the company's overall internal control framework and relate to internal control components other than what? Control activities. Remember one thing, do you remember we have done the components of internal control system in our SA 315? What are the components of internal control system in SA 315? There should be a control environment, there should be monitoring activities, control activities, risk assessment process, and the information system and communication system. So other than control activities, risk entity levels are also a part of components of internal control system. So it's a part of companies. Look at this, it is a part of companies overall internal control framework and relate to the internal control components other than control activity, and subjective by nature, hence require an application of more judgment in their evaluation and testing. The auditor has to be very much more careful. His more professional judgment is required whether to understand and evaluate and test कि their risk or entity level controls are good or not. Now, when we talk about the entity level controls, there are basically two classifications. One are direct entity level controls and one are indirect entity level controls. Now, what do you mean by direct entity level controls? Direct entity level controls are those controls which are affecting your transaction level, which are affecting your process level, which are affecting your business level. But indirect entity controls are those which are not at all affecting your transaction level, not at all affecting your sub-process level, not affecting your process of business, not affecting at any level, but they are required to be taken up by everyone. Say for example, code of ethics and code of conduct. This is a policy which is used to be used by the everyone, but it does not affect your entity directly. But let's say for example, internal control system. Internal control system is that entity level control which directly affects the entity. So that is what the major difference between direct ELC and indirect. So what do you mean by direct ELCs? Bhaiya, direct ELCs are those ELCs which directly affect the process level, business level, and the transaction level, which does not affect are known as what? Indirect ELCs. Next one, testing using the relevant analytical procedure by data analytics. You all know that data analytics. What do you mean by data analytics? When we apply the data analytics on a full-fledged raw data to get a meaningful information out of that raw data, that is called data analytics. Now, in the data analytics, try to understand one thing very clearly. Very clearly. Now see, data analytics is like a data mining. If you really want to understand now, data analytics is like a data mining. Imagine that there's a big mine in front of you. There's a big mine in front of you. Now, in the big mining, are we interested in the total mine? No, we are interested in the gold in that mine. So that gold is known as useful information, meaningful information. So when we apply the data mining, there's a crores and crores of transactions in front of you, but you are not at all interested in every transaction. You are interested in the meaningful information. So we apply data analytics to filter the meaningful information out of all the raw data. So gathering and generating and preparing the meaningful information from the raw system data using process, tools and techniques is also known as data analytics. Auditors can apply this concept for several aspects of an auditing, including the following. What is the first one? Preliminary analytics, risk assessment, control testing, non-standard journal, evaluation of deficiencies and fraud risk assessments. Also known as CART techniques. These are the various steps that should be followed to achieve the success with the CART and any of the supporting techniques. Now see, what is your approach? What is your approach while doing the automated environment? What should be your approach while using the data analytics? Approach should be understand the business environment, including entity. So these are the 8 steps, out of which step number 1 is you have to acquire the knowledge of the client's business, including their IT environment. Then define your own objectives and criteria. Define the auditor's objective and define the auditor's criteria. And criteria, if you remember in the audit of PSUs, I already told you criteria means what? Establishing a benchmarking. So you have to define your own objective, what purpose you are doing this data mining for, and your benchmarking. Next one, identify the source and format of data. Identify the source and format of the data. Extract the data. What is the fourth one? Extract the data. Tell me the 4 steps. Sir, I have to acquire the knowledge of the client's business, including its what do you say, business environment, including its IT environment. Then I will define my objectives and criteria. Then identify the source and format of data. Then do the data mining, that is called extract the data. After extracting the data, you can't take it as it is. Bhaiya, you have to verify the completeness and accuracy of the data now after extraction. Yes, sir, I did it. Apply your criteria. Now apply your benchmarking on that extracted data. Are they matching or not? Is the deviation within the expected deviation or not? After that, validate and confirm the results, and finally report and document the results concluded. So this is what do you mean by the data analytics and the approach to apply the data analytics. Now, assessing the IT related risk. Now, what do you mean by assessing the IT related risk? As you all know that 315, 330 helps us in identifying and assessing the risk of material misstatement in the financial statement through understanding of the entity, its environment and its control system. Same 315 and 330 also helps you in identifying, assessing the risk of material misstatement in their IT environment through understanding their automated ICS, automated entity and automated environment. Same 315, 330 wala. Now, like entity level aspect of risk that related to the entity level risk that related to the governance, operation and mitigation of IT, management of IT. Now see, remember one thing, when you have finally analyzed the IT or automated environment of your client, you have to start asking yourself some set of questions. What are the set of questions you have to ask? Whether the management has established an IT security policy or not. Okay, I asked the management, they said that yes, we have an IT policy. Next one, is it communicated to everyone in the entity? Because until unless you not communicate it to everyone in the entity, there is no use of having the IT policy. Okay, so they said that yes, we have IT policy, we communicate it to everyone. Whether relevant training is given to the staff to handle that IT controls? Yes. Fourth question, whether the management monitors those relevant standards, are they matching according to the requirements of the market or not? So what are the four questions I'm asking? Do you have an IT policy? Did you communicate it to everyone? Did you give them the specified training to understand that IT environment? And are they meeting your relevant standards or not? Next question, are the unauthorized changes to IT system have been prevented and detected on timely basis? You remember one thing, data is the biggest important asset nowadays in the automated environment. If you will allow any unauthorized access, or if you will allow unlimited access to various computers and everything, remember one thing, you will lose this is the biggest loophole going to be in your IT environment. So remember one thing, your internal control system in the IT environment should be such that it will be able to prevent and detect the unauthorized access to the data. Next one, is user access to system commensurate with the role and responsibility? Remember one thing, you should allocate the segregation of duties. You should do the segregation of the duties. What do you mean by segregation of the duties? Who is going to do what work? At the levels also. Remember one thing, the access to the data, the access to the information, the access to the environment should be according to the roles and responsibilities allocated to a personnel. If the role and responsibility of the personnel is at lower level, he should not have unlimited access, he should have the limited access. But if his roles and responsibilities are at top level management, he should have an access over what? He should have an access over he should have more access control. So access control should be divided according to the roles and responsibilities. Small role, less access. More role, bigger role, more access. Right, everyone? Yes. What is the third point? Are the direct data changes to the database prevented? What do you mean by direct data changes to the database prevented? You should not allow anyone to have a direct access to the master file, because if you allow anyone to have a direct access to the master file, then in that case, what will happen? They can easily do the manipulation in the data. Next one, are strong passwords used in the operating system? These are the various set of questions as an auditor you have to ask when you have done the audit of their automated environment. And finally, we are going to understand using the relevant frameworks and best practices. Remember one thing, India mein, so far there are no special dedicated standards on auditing has come when it comes to doing the audit in the automated environment. So being in India, we nowadays only are following essays issued by ICAI. But remember, there are some international standards which are available in the market. Like first one is ISO 27001 2013. This is called ISMS. Information Security Management System. So obviously this particular controls environment are available in the market, which completely ensures that your systems are properly secured, your information is properly secured. So they provide the framework guidelines for the implementing information security related controls. Example, password security, they protect application security, they protect physical security, they protect backup security, they protect and what do you say, all these kind of information related securities they provide. ITIL, information technology infrastructure library, this is ISO 20000. They provide the frameworks relating to problem management, IT operations, IT asset management, change management, incident management. Like in the SA3 internal control system and risk assessment chapter mein, we have the COSO, COCO, COBIT, SOX 2002, SOX 404. All those are same here. So in this one also, in the automated environment also, you have some international standards, especially connected to IT environment. Next one, payment card industry. Now this is what this provides a framework to those industries which are issuing you the debit card or credit card security. You all know that when you get a debit card or credit card, generally when they deliver also, they don't hand over it to anybody else other than you. You have to produce your KYC documents, then only they will give it to you, because it includes your every information, card number, CVV number, including sometimes the security pin also. So remember one thing, this is purely dedicated standards, PSIs. What is PCIs? Payment card industries. These are also known as DSS, data security standards. So basically useful for those industries which are involved in the storage, retrieval and transmission of handling of debit card and credit card, requires to implement security controls. Next one, AICPA, American Institute of Certified Public Accountants, have issued 3 standards on that: SOC1, SOC2, SOC3. It is basically very much connected with your SA 402. So if you'll see it, you will understand it. And the last but not the least, CSF, Cyber Security Framework. Nowadays, you all know that every entity which is in the automated environment is infected with various cyber security risks. So to mitigate and reduce those risks to the minimum acceptable level, we have some international cyber security framework. So basically, you have to just remember the name. That is more important. First one, standards issued by the ICAI. Second one is what, the ISO 27001 2013. That is called ISMS, Information Security Management System. Then is ITFL. ITFL means what? Information Technology. IFTL. ITIL. Sorry. ITIL, that is called Information Technology Infrastructure Library. Yes. Next one we have PCA. PCA stands for Payment Card Industry. Then we have AICPA, American Institute of Certified Public Accountants, whoever is SOC, SOC2, SOC3. Then CSF. You have Cyber Crime or Cyber Security Framework. So these are the various international standards relating to automated environment. So these are the major questions they may ask you in the automated environment, not more than that they may ask you. So these are the areas where generally the question will be drafted. So I hope you understood the revision of the automated environment also. So see you guys next time with another video. Bye bye everyone. Take care. Hello everyone, welcome to the another video on CA Final Auditing RRB batch for the May 22 examination students, and it is also applicable for the November 22 examination students. So as you all know that we have previously completed so many other topics on the revision. So today I'm going to take up a very important topic for the revision, that is called audit under fiscal laws. Remember one thing, when we talk about the audit under fiscal laws, basically there are 3 types of audits we have to understand. First, it is the public trust audit. What is the first audit? That is a public trust audit, right or not? Second audit which we have to understand, that is called tax audit. That is 3CA, 3CB or 3CD form. Are you getting the point? 3CA, 3CB and 3CD form, and along with that some other provisions also we are going to understand. So basically in this particular chapter there are 2 major audits which have been talked about. One is the tax audit and one is the public trust audit. So without any further delay, let us understand this topic called audit under fiscal laws. Now what is the first audit we are going to talk about? The first audit we are going to talk about is the audit of public trust. So section number 12A audit it is. So what is the name of the audit? Audit of public trust, section number 12A. Now remember one thing, public trust need not get their books of accounts and financial statements audited if they do not have an income, exceeding the basic exemption limit. So if their income does not exceed the basic exemption limit, but remember one thing, which income? That income which is without taking section 11 and section 12 ka exemptions. Are you getting the point? Without taking section 11 and without taking section 12 ka assumptions, that income does not exceed the basic exemption limit. In that case, you need not get your books of accounts and financial statement audited. That is the condition number one. Condition number two, you must have applied to the Commissioner of Income Tax within 1 year from the creation of the trust. If you have applied to the Commissioner of Income Tax within 1 year from the creation of the trust and without taking any exemption under section number 11 and section number 12, your total income does not exceed the basic exemption limit, you need not get your books of accounts audited. But if your total income without taking section number 11 exemption and without taking section number 12 exemptions exceeds the basic exemption limit of the Income Tax Act 1961, then in that case you need to get your books of accounts and financial statement audited by a practicing chartered accountant. Next point, sir, when we are going to do the audit of the public trust, basically what we are going to do the audit is basically classified into 4 parts. What is the part number 1? Preliminary checks. What is the part number 2? Routine checking. What is the part number 3? Accounting principles. And what is the part number 4? Others. Now, what do you mean by the first part? Preliminary checks. In the preliminary checks, what we have to understand, same thing which we do in the normal audit. There's nothing extraordinary you have to understand over here. I will make sure that whether the resolution copy has been given to me or not. Means what? Whenever a chartered accountant in practice, whenever the auditor is going to be appointed for the public trust, basically in the normal company also, what do we check? Ki bhaiya resolution copy for my appointment is made or not, which is defining my scope and objective. So I will first obtain the resolution copy from the public trust, which is relating to my appointment, which is relating to my determination of scope and objective. Next thing, I'm also going to take the appointment letter from the public trust, whether I'm suitably appointed or not. Next thing, I'm going to take a certificate on opening and closing balances of the public trust. Obviously, this is the starting point. Certificate on opening and closing balances of the public trust and assets and liabilities. Next one, I will also obtain the list of books of accounts. Next one, I'll also obtain the certificate of accounting system and internal control system, which is applicable in that public trust. And I'll also obtain the copy of the trust deed. So these are the first preliminary checks which you have to do when you start doing the audit of a public trust. So what are the preliminary checks you are doing? Point number 1, I'm taking the resolution copy, which is talking about my scope, my objective, and my appointment. I'm also taking the appointment letter. I'm also taking the list of list of books of accounts which are maintained by the trust. I'm also taking the certificate on the opening and closing balances of the assets and liabilities of the trust. I'm also taking a certificate on their accounting system and internal control system. And I'm also taking the copy of their trust deed. So these are the preliminary things which you have to do when you're doing the audit of a trust. Now, what is the routine checking you're going to do in the trust? Well, it comes to the routine checking. I will tell you to simplify it in a very simplified manner. Now see, tell me one thing. First of all, what takes place? First of all, bhaiya, transactions takes place. What takes place? Transaction takes place. Transactions are later on converted into what? Books of accounts. Books of accounts are later on converted into what? Trial balance. Trial balance is later on converted into what? Financial statement. So are you understanding the point? So we are going to verify 4 routine checkings in the public trust. What are the 4 routine checkings? So bhaiya, transactions, we are going to check books of accounts, we are going to check trial balance, and we are going to check the financial statement. So see, what is the first thing we are going to do? We are going to watch the transactions within the ambit or not. So first of all, what you're going to check is that the transaction carried out by the public trust must be within its ambit. Sir, what do you mean by must be within its ambit? Within its scope and objective. Next one, whether the transactions done by the public trust are authorized or not. Next one, income is properly accounted or not. Expenditures are properly recorded or not. Funds are properly applied for the objects of the trust or not. So these are the various types of vouching of transactions we are going to do. So first of all, we have to understand transaction ka routine checking. Then we have to do the books of account ka routine checking. Then we have to do the trial balance ka routine checking. And then we have to do the assets and liabilities ka routine checking. So in the transaction, what we did, whether the transaction within the ambit of the trust or not, whether the incomes are properly accounted or not, whether the expenditures are properly recorded or not, whether the transactions are carried out in a proper authorized manner or not, and whether the funds are applied for the objectives of the trust or not. Now vouching of the transaction is over. Now we will come to the books of accounts. We are going to check the books of accounts and other records. Now we'll come to the trial balance, obtain the trial balance on the closing date of the company, and most importantly in the balance sheet and P&L, obtain the copy of the both balance sheet and P&L and see whether it is matching with the trial balance or not. This is what you basically check in the routine checking of the audit of the public trust. Now, what is the next thing we are going to do in the audit of the public trust? Accounting principle. So, bhaiya, accounting principle are nothing but we are going to check the assertions. Am I correct or not? तो assets में क्या verify करेंगे कि assets are properly existing or not, properly owned or not, properly valued or not. And assets में also we are going to check whether they are properly valued or not. Liabilities में क्या check करेंगे कि भैया properly nature and extent is properly accounted in the financial statement or not. Investments in the balance sheet में क्या check करेंगे कि properly classified or not and properly valued or not. Debtor के केस में क्या check करेंगे कि भैया properly outstanding debtors are properly accounted or not and adequate provision has been made or not. So these are the following items in the balance sheet of the public trust we are going to check. And last में बच गया others में क्या करेंगे, we will also obtain the list of persons under section 13 subsection 3 that is trustee certified. What do you mean by this point? तो भैया we are going to go to the public trust and to the public trust we are going to say that कि please give us the list of those people who have made the donations to you more than 50,000. तो those people का list is known as section number 13 subsection 3 का list. So we are going to take that list from the public trust, but make sure that that list must be certified by the trustee of that public trust. Next one, explanatory and supporting documents also we are going to check. Next one, if there is a no list under section 13 subsection 3 provided by the trustee, then make a note against the section number 1, section number 2 and section number 3. तो अगर आपको उन्होंने ट्रस्ट की लिस्ट नहीं दी, if they are not provided you the list of those people which are covered under section number 13 subsection 3, then in that case you are going to make a note against the section number 2 and section number 3 and make sure that audit report of the public trust is always given in form number 10B. So this is what all about the audit of public trust. So हमने क्या पढ़ा सर? How to do the audit of public trust? First of all, the audit of public trust is covered under section number 12 capital A. Now, a public trust need not get its books of accounts and financial statement audited if the total income without taking the exemption under section 11 and under section 12 is not exceeding the basic exemption limit. But at the same point of time, you have to make sure that you have already made the application to the Commissioner of Income Tax within the 1 year of its creation. What is the audit program? Basically, we designed to do the audit of the public trust. There are total 4 things we are going to check. Preliminary checks we are going to do. Then we are going to do routine checking. We are going to check the accounting principles and we are going to check the others. Preliminary checks में क्या करेंगे? I'll obtain the resolution copy which is defining my appointment, which is defining my objective, which is defining my scope. फिर उनसे appointment letter also I'll take. I will also take the certificate on the opening and closing balances. I will also take the list of the books of accounts they are maintaining. I will also take the certificate on their accounting system and internal control system. And at the same point of time, I will take the certificate or I will take the copy of that trust deed. So from the copy of the trust deed, you will come to know about the various terms and conditions within which that trust is being created. Next point. Next routine checking में what we are going to do, we are going to first verify the transactions, then we'll verify the books of accounts, then we'll verify the trial balance, then we'll verify the financial statement. तो पहले ट्रांजेक्शन में क्या चेक करेंगे कि भैया ट्रांजेक्शन मस्ट बी विद इन द एम्बिट ऑफ द ट्रस्ट. व्हाट आर द सेकंड थिंग वी आर गोइंग टू चेक कि ट्रांजेक्शन मस्ट बी ऑथराइज्ड. व्हाट आर द थर्ड थिंग वी आर गोइंग टू चेक? इनकम्स आर प्रॉपर्ली अकाउंटेड. What are the 4 things we are going to check? Funds are properly applied within the objects of the trust. Point number 5, expenses are properly accounted and recorded. Next point, transactions are over. Next, books of accounts. Books of accounts में what we are going to check? In the books of accounts, we are going to check whether the proper books of accounts are maintained or not, and we'll check the other records. उसके बाद trial balance में, well, we will take the trial balance on the balance sheet date, and with the trial balance, we'll match their financial statement, whether the financial statement are in agreement with the trial balance or not. Next thing, accounting principle में what we are going to check? Assets में we are going to check existence, ownership and valuation is being properly carried out or not. Basically testing of assertions. liabilities mein we are going to check whether liabilities are properly accounted, properly nature and extent is properly defined or not. Investments mein what we are going to check, properly classified and properly valued. Debtors mein what we are going to check, account outstanding balances of the debtors are properly accounted and the provision for doubtful debt is made. Next one, we are going to obtain the list of the persons under section 13 subsection 3. If they will give the list, it is well and filed, but make sure that the list which is provided by them should be trustee certified. If they do not give you the list, then make a note against the section number 2 and section number 3. And most importantly, also check their various explanatory and documentary evidences, and audit report of the public trust is required to be given in form number 10B. So these are the various things you have to do while doing the audit of a public trust. And at the same point of time, this is the one MCQ question which they may ask you relating to audit form of the public trust. I hope all of you understood. Yes or no? Yes. Now, the next audit we are going to do, audit of the accounts with respect to section number 35D and 35E. First of all, this is a very small audit. This is a very small section given somewhere in your ICAI notebook. Now, what do you mean by section 35D? Section 35D बोलता है preliminary expenditures के ऊपर. Those preliminary expenditures which the company has incurred before commencement of its business. Now, what is section 35E? It talks about those companies which are involved in the extraction of minerals and all. Right or not? Now, see. What is 35D? 35 talks about the preliminary expenditures which the company has incurred before the commencement of business activity, allowed to be amortized when the business is commenced. So, matlab, if you have incurred any preliminary expenditure before the commencement of the business, then in that case, you are allowed to amortize these expenditures once the business is commenced. Now, what is section number 35E? Section number 35E relating to the entities which are involved in the extraction of oils, minerals, and various other products from the mining activity. Manner in which the deduction are allowed on the expenditure on operations relating to certain specified minerals. So, inko jo whatever the expansion, whatever the deductions they get, that is dependent upon the what kind of minerals they are extracting. But there is nothing relevant in this whole section number 35D and section number 35E. There is only one thing relevant you have to understand, that they are going to get audited under the audit report form number 3AE. What is the form number, everyone? 3AE. So tell me the audit report form number of the public trust. The audit report form number of the public trust is section 10B. Are you getting? Sorry, form number 10B. And audit report form number for the section 35D and 35E ka company is 3AE. Is it clear, everyone? Now we are going to expend, or we are going to spend almost the next 1 hour on this section number 44AB ka audit. Now, what do you mean by section number 44AB ka audit? It is known as tax audit. Before moving into the form number 3CA, 3CB and 3CD, there are so many other things also in the section number 44AB tax audit you have to understand. I know that you might be aware about all the provisions relating to section number 44AB, but today I'm going to tell you something new about the section number 44AB. Some things I will tell you new about the section number 44AB, which you might not have heard earlier. Now see, now first of all, section number 44AB क्या बोलता है? क्या बोलता है कि भैया, if you are a business, if you are doing a business and your sales or gross revenue or gross turnover exceeds 1 crore rupees, अगर आपका gross receipts or gross turnover exceeds 1 crore rupees, then in that case, and you are doing a business, then in that case, tax audit under section 44AB will become what? Compulsory. So are you understanding the point? So if you are doing a business and your gross turnover or the gross receipt exceeds more than 1 crore, then in that case tax audit is compulsory. But what is the recent amendment? Recent amendment में क्या हुआ? Income Tax Act 1961 has increased this 1 crore limit to 10 crore limit. मतलब now your tax audit will only happen when your gross turnover exceeds 10 crore. But there is also one condition. What is the condition? Your 95%, minimum 95% of the transactions done under the business must be done through the banking channels. Only the maximum 5% of the transactions are carried out in the cash or other cash equivalent manner. Are you getting the point? If your maximum 5% of the transactions are done in the cash manner, and 95% of the transaction of your total business are being carried out. Now, when I'm talking about the 95% and the 5%, I'm talking about the outflow and inflow. Both I'm talking about. Cash receipts and cash payments shall not be more than 5% of the total receipts and total payments which have taken place during the previous year. अगर आपका cash payment and cash receipt put together is not more than 5% of the total receipt and payment which has taken place during the financial year, then in that case, your tax audit limit from 1 crore will increase to what? 10 crore. So आपको 10 crores की limit पे cross होने के बाद ही tax audit करवाना पड़ेगा. So you need to get your books of accounts audited. You need to get your tax audit done only when your gross turnover or gross receipt exceeds 10 crores. But what is the condition? Minimum 95% of your total receipts and total payments must have been carried out through the banking channel. Or if you want to say in the another manner, maximum 5% of the cash receipts and cash payments must have taken place through the cash manner. Otherwise, the limit of 1 crore only will be applicable. Let's say, for example, you have done 6% of the total cash receipts and cash. You have done the total of 6% of the cash receipts and cash payments in the form of cash. Then in that case, this 10 crore wala limit will not be applicable to you. Then in that case, only 1 crore wala limit will be applicable to you. But if your total cash payments and cash receipts are not exceeding 5% of the total cash payments, total receipts and payments during the financial year, then in that case, your 1 crore ka limit has been increased to 10 crore. Is it crystal clear? So other way around, what I'm trying to tell, 95% of your business transactions, 95% of your receipts and payments must have been carried out through the banking channels, through the banking ways like UPI or IMPS, NEFT or RTGS. Crystal clear? So this is the first thing you have to understand. Second thing, if you are involved into any profession, then in that case, if your gross receipts are exceeding 50 lakhs, तो आपको tax audit under section 44AB becomes what? Compulsory. Next one, 44AE. 44AE में क्या बोलता है? When the 44AE will be applicable? 44AE basically covers the 3 sections. What are the 3 sections? 44AE, 44BB, 44BBB. What is 44BB? Relating to NRIs which are into the business of extraction of minerals. What is 44BBB? Relating to foreign company which is into the civil construction. Now see, इनको 44AB के अंदर ऑडिट कब करवाना है? If these sections में, if 44AE, 44BB, 44BBB में you are opting a presumptive scheme, that is 8% or 6%, then 44AB audit is not required. 44AB audit is only required if you are declaring your income below, if you are declaring your income below the presumed income, or if you're declaring your income below the deemed presumptive income, then only tax audit under section 44AB is required. So if you are covered under 44AE, if you are covered under 44BB, if you are covered under 44BBB, then in that case, if you are opting for the presumptive basis wala income ka criteria, then in that case you can continue with that. No audit under 44AB is required, but audit under 44AB is required when you are not following this criteria of presumptive income and you are declaring your income below the deemed presumptive income. Are you getting the point? Even if your turnover does not exceed 1 crore, then also 44AB audit is required. Say for example, your turnover is 80 lakhs and you are not opting the presumptive income. तो भैया इनकम टैक्स डिपार्टमेंट क्या बोलता है कि 8% और 6% पे मामला सेटल कर दो. Do the settlement at the 8% or 6%. Tell us that कि your income is either 8% or 6%. But you are declaring that no, my income is less than 8% or 6%. Then the income tax department is saying you need to get your books of accounts and financial statement audited under tax audit. तो तुम्हारा tax audit होगा. Are you getting the point? Even if your turnover does not exceed 1 crore. Did you all understand the very important point here? Yes. Now, if you are under section 44 ADA and if you claimed your income lower than the deemed income, then if the income is more than what basic exemption limit, then also you have to get your then also you have to get your टैक्स ऑडिट डन। तो समझ में आ रहा सर? तो आपको टैक्स ऑडिट कब करवाना पड़ेगा? इन केस यू आर अंडर सेक्शन 44 ADA and you are declaring the income lower than the deemed income plus your income is more than the basic exemption limit, then in that case 44 AB का audit is going to take place. 44 AD very important. 44 AD क्या बोलता है? 44 AD is also talking about the presumptive income. Now 44 AD says that if you have once opted for the presumptive income, you have to better opt it for continuously 5 years. If you have once opted for the presumptive income under 44 AD, it's better you should continue for the next 5 years. But during those 5 years, if any year you are not following the presumptive income criteria, you are declaring the income below the presumptive income, then in that case, for the next 5 years, you cannot follow the presumptive income under section 44 AD criteria again. Are you getting the point or not? What I'm trying to tell that 44 AD ka criteria you have to opt for 5 years, but in case during those 5 years you have declared the income below the presumptive income and you have broken the chain of that 5 years, then income tax department says that we will not allow you to again follow 44 AB for the next 5 years. So see what they are saying. If claimed in some years and then does not cover under 44 AD, can't opt 44 AD again for the next 5 years. तो भैया अगले 5 साल तक 44 AD भूल जाओ. If you have once claimed the income less than the presumptive and your 44 AB audit is done, you are not allowed to opt the 44 AD for the next 5 years. Is it clear about the 44 AE, 44 ADA and 44 AD? Yes or no? Yes. Now, tax audit under section 44 AB not applicable to 44B and 44 BBA. Now remember one thing, I'm not talking about the BB and BBB. BB and BBB pe it is applicable if you are not following the presumptive income wala criteria. Section 44 AB ka audit, tax audit is not applicable on 44B and 44 BBA. Now, what is 44B and 44 BBA? 44B talks about NRI doing the shipping business and 44 BBA talks about aircraft business of an NRI. तो अगर NRI किसी shipping business में है और NRI किसी aircraft business में है and you are covered under section 44B and 44 BBA, then 44 AB का tax audit is not applicable to you. I can guarantee you these notes are going to be the best notes you can ever look at on the whole channels available on the platform. Are you getting the point? Make sure that you are downloading these notes, and especially these notes I'm going to put it below. Are you getting the point? If you really want to buy the notes of the other chapters, all the chapters which I have made the handwritten notes, almost 700 to 800 pages I have made the notes, handwritten notes like this only. If you really want, I will put the description below. You can contact that particular number and the notes will be made available to you. Obviously, a minimal amount of some charge we are going to take for obtaining these notes. That is for your benefit and our benefit also, because it takes a lot of pain, lot of hard work to make these kind of notes. So if you really are looking for these notes, you have to make a little bit of payment for these particular handwritten notes. But let me tell you one thing, these handwritten notes are not less than 100%. Everything is going to be covered in these handwritten notes. Is it clear up to this point? Yes, sir. We are clear up to this point. Now, 44 AB also applies to individual HUF and partnership firm other than LLP. Does not apply to the commission income unless the turnover is greater than 1 crore. So what they are saying that 44 AB individual के ऊपर भी apply होता है, HUF के ऊपर भी apply होता है, and partnership firm also gets covered other than LLP, and it does not apply to the commission income. It does not apply to the commission income unless the turnover exceeds 1 crore. If the turnover exceeds 1 crore, then in that case, this is going to be applicable. Then definitely in that case this is going to be applicable. But normal commission income के case में 44AB tax audit is not at all applicable. Is it clear to all of you? Yes, sir. Next point. Those companies which have taken the special deductions under section 80 IA, IB, IC. Again repeating, those companies which have taken the special deduction under section 80 IA, 80 IB, 80 IC, then assessees claiming these deductions under section under these particular sections, on them 44AB is applicable. Already the tax audit is applicable. But remember one thing, if you are claiming the deduction under section 80 IA, IB, IC, then a separate additional audit report is also required to claim such deduction. Matlab, those companies which are following the section number, which are claiming the deduction under section number 80 IA, 80 IB, 80 IC, on them the tax audit is already applicable, but they also have to get the audit done separately to claim that 80 IA, IB, IC ka deduction. Did you all understand this point? Yes, very, very important. And why I wrote these points in this manner, so that you can understand this from the MCQ point of view also. So tax audit under fiscal laws were so many MCQ. People, majorly focus upon the 44 clauses. I do agree with you. All the 44 clauses are very important, and we are going to understand each and every clause in a very simplified manner. But at the end of the day, you also have to understand that these are the other relevant areas also in the section 44 AB ka tax audit, which may also come in your examination. So I hope this video is going to be very, very useful to you. Make sure that you should share this video with your friends, and make sure that make it available to your each and every friend. And in case they are looking for the regular classes, those who are writing in the November 22 or those who are writing in the May 23, the fresh recorded classes are available for both November 2022 students and May 23 students. And RRB videos, rapid revision batch videos, are also applicable. The fresh full regular batch of 170 to 180 hours, where I'm going to provide you the 3 modules of the material, along with that 800 pages of handwritten materials, along with that 180 hours with 2 views I'm going to provide you at a very nominal fees. So I will also leave the contact number in the description. Make sure that you are approaching for the classes by dialing that number, and you will be getting the full information on those particular details. So fresh recordings are available for the CA Final Advanced Auditing, CA Inter ka Law, CA Inter ka Auditing, and CA Final ka Final Auditing. Right, everyone? Now, who is going to be the tax auditor, everyone? So remember one thing, tax audit can only and only be done by a chartered accountant in practice. वहाँ पे specially लिखा हुआ है, only the chartered accountant in practice can do the tax audit. But remember one thing, when a chartered accountant in practice is doing the tax audit, he also has to undergo through various disqualification under section 141 subsection 3. Let me tell you one thing, same disqualifications which we have done under section 141 subsection 3 relating to the statutory auditor, all those disqualifications are equally applicable to the tax auditor under section 141 subsection 3. But do you remember that goods and services ka indebtedness wala? Do you remember the guarantees and securities ka indebtedness wala point? And do you remember the securities held by the wala point? In these 3 points, you have to do little bit extra. Relatives may hold the securities up to ₹1 lakh of face value. That to equally applicable to whom? Equally applicable to the cost, or equally applicable to the statutory auditor. At the same point of time, relative indebtedness is also greater than equals relative indebtedness also should not be exceeding what? 1 crore in case of tax audit. If your relative is indebted to the client for more than 1 lakh, if your relative is indebted to the client for more than 1 lakh rupees, then in that case tax audit you can't do. You are disqualified to do the tax audit. And in case your relative has given any guarantee or security on the behalf of your client or to your client more than 1 lakh, so then also you are disqualified to do the tax audit. So these are the 3 extra points you have to understand in the tax audit ka disqualification. Rest remaining all the disqualifications are same. Relative shall not hold the securities more than 1 lakh of face value. Relative shall not be indebted to a client for more than 1 lakh. Relative shall not be indebted to a client for guarantees and securities for more than 1 lakh. So this is what you have to understand here. So who can only be the tax auditor? Only the chartered accountant in practice can be the tax auditor. Is it clear, everyone? Yes. Now, internal auditor of the company can't be the tax auditor, but statutory auditor of the company can be a tax auditor. So remember, if you are an internal auditor in the company, you can't be the tax auditor, but if you are a statutory auditor of the company, you can be a tax auditor. On 99.99% of the cases, may we know that statutory auditor and tax auditor are going to be the same persons. Next one. Remember one thing, either you are a tax auditor or a statutory auditor. 811 Clause 8, Para 1, Schedule 1 of Chartered Accountants Act 1949, Code of Ethics, Professional Ethics में हमने क्या पढ़ा कि whenever the new auditor comes as an auditor, as a member in practice, it is your responsibility to communicate with the which auditor? Previous auditor. तो भैया same provisions are applicable to the tax auditor also. So tax auditor has to make sure that he should communicate with whom? He should communicate with the previous auditor. Are you getting the point? To identify the reasons of replacement. कि भैया उसे क्यों replace किया? Why you have replaced that person? Why I was brought in? Because remember one thing, as per clause number 8, part 1, schedule 1, you have also read that if the last auditor's undisputed audit fees has not been paid, or if the last auditors wanted to give a modified report, or if the last auditor was not removed as per section number 140 and you were not appointed as an auditor under section 139, then in that case these are the various reasons where you should not join, where you should not take up the assignment. So you would like to know the reasons of replacement. That's why this one point is being added. Next one, appointed by the board of directors. So bhaiya, tax auditor is not appointed by the shareholders in the AGM. That is statutory auditor under section 139 subsection 6. Here we are talking about the tax auditor. The tax auditor is always and always appointed by the board of directors. Can there be a possibility of joint tax audit? Yes, sir, allowed. But remember one thing, SA 299 will be applicable on both of them. If you remember SA 299, audit of the joint financial statement, in that we have understood at the last point that if they all agree to the same decision, they can issue a one report, but if they do not agree to the same position, they can issue the separate audit report as well by giving a reference to each other's audit report, including the OMP para. Clear, everyone? Now, can we remove the tax auditor, everyone? Yes, we can only and only remove the tax auditor on the reasonable grounds. Sir, can you please give the example of any reasonable grounds? Yes, I can give you the example of the reasonable grounds. Suppose he has delayed in submitting his tax audit report, due to which the company suffered a penalty. Are you getting the point? So this can be the reasonable ground. Next point, you cannot remove if you wanted to give the adverse report. So as I already know, in the code of ethics, we have already discussed, you cannot remove an auditor if he or she is trying to give you the qualified or modified report. If that is the reason, then in that case, that removal will be completely unjustified and ethical standard board will interfere in this case. Crystal clear, everyone? Yes. नेक्स्ट पॉइंट, अपने टैक्स ऑडिट का सीलिंग लिमिट कितना है सर? अपने टैक्स ऑडिट का सीलिंग लिमिट है 60 टैक्स ऑडिट्स पर प्रैक्टिसिंग सीए. What is the ceiling limit? 60 tax audits per practicing CA. When part of the firm, what do you mean by when you are a part of the firm, can all audit reports can be signed by the 16, can all tax audit reports be signed by the single partner? Say for example, in your firm, there are 20 partners, 20 partners into 600 makes it to what? 20 partners into 60 makes it to what? 1200 audit reports. Yes, yes, yes. Even a single partner can also sign all the 1200 audit reports. Remember one thing, if once you become a member of a firm, your individuality does not matter. And remember, if you are eligible for 44AB ka tax audit, if you are eligible for 44AB ka tax audit, but you do not get it audited, तुमने अपना tax audit नहीं करवाया, तो तुम्हारी पेनल्टी क्या है? 0.5% of your turnover or rupees 1,50,000, whichever is lower. And remember one thing, UDIN तो mandatory है भाई, UDIN तो definitely mandatory है. So in case UDIN, unique document identification number, also required to be mentioned on the tax audit report. Clear, everyone? Yes. गला खराब हो गया थोड़ा सा. I hope all of you are understanding whatever the points I'm taking here. Yes. फिर उसके बाद one question they also may ask you कि sir, what is the definition of turnover here? We have just now understood that turnover should exceed 1 crore, turnover should exceed, gross receipt should exceed 50 lakhs, all that point. So what is the definition of the turnover? Now, definition of the turnover is very, very simple. If you will listen to me for the next 2 minutes very carefully, I will make sure that 100% this definition will get permanent cemented in your head. Now, what is the definition of turnover? Remember one thing. If in the question you will find discount allowed point, which allowed point? Discount allowed point. Which allowed? Discount allowed point on the turnover. Make sure that if it is given in the sales invoice, अगर वो sales invoice के ऊपर mentioned है, if it is given in the sales invoice and what is written? Discount allowed, you have to subtract this particular thing from the turnover. Next thing, generally cash discounts we do not subtract, but as per the 44 AB का tax audit के purpose के लिए, make sure that if the cash discount allowed in cash memo or sales invoice, then it has to be deducted. Next point, turnover discount. Turnover discount you only have to deduct if you are seeing that ki turnover discount is very much equivalent to trade discount. So if it is equivalent to trade discount, then only you have to deduct. Next one, special rebate or discount. Special rebate or special discount also you have to deduct if it is in the nature of, again, which one? Trade discount. So remember one thing, if the discount allowed is given or if the cash discount is given, you have to check that it is should be mentioned on the sales invoice. Then only you are allowed to deduct, otherwise do not deduct it. Next point, you have to check that if it is a turnover discount or if it is a special rate or rebate or special discount, then in that case you have to check that in the nature of trade discount it is being provided. Next one, sales return. Sales return ke case mein, remember one thing, it doesn't matter for which year sales they are getting returned. Say for example, the sales of 17-18 financial year is getting returned in 22-23 financial year. So remember one thing, in the 22-23 financial year ka, while calculating the turnover, you can deduct that sale. Are you getting the point? So sale of any year may belong to, it can be deducted. So what are the 5 things you have to deduct? Discount allowed you have to deduct if it is mentioned on the sales invoice. Cash discount you have to deduct if it is mentioned on the sales invoice. Turnover discount you have to deduct if it is in the nature of trade discount. Then special discount and special rebate you have to deduct if it is in the nature of the trade discount. Next one, sales return belonging to any year you have to deduct. Next one, special turnover. What do you mean by special turnover? Means what? If you have a turnover relating to sales of any shares, securities or fixed assets, it is not required to be considered in your turnover. अगर आपका सेल ऑफ शेयर्स है, सेल ऑफ सिक्योरिटीज और सेल ऑफ फिक्स्ड एसेट्स का टर्नओवर है, that turnover is not going to be added in the 44 AB का turnover. But if that shares, if that securities, if that fixed assets, you were holding it as a stock in trade, if you're holding these 3 things as what? Stock in trade, then in that case it will be treated as a turnover. Which turnover? Special turnover. Is it crystal clear to all of you? Yes or no? Yes. And in case of speculative business or speculative transaction, only the difference between the buying and selling price is going to be treated as your turnover. Did you all understand the point? Only the difference between buying and selling price is going to be treated as a turnover. Total selling price will not be treated as a turnover. Only the difference between the buying and selling price is going to be treated as a turnover. Now, in the DT, you might have heard about ICDS. What is ICDS? Income Computation and Disclosure Standards. I hope you all know Income Computation and Disclosure Standards. They are total 10 in number. ICDS 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Am I clear or not? Remember one thing. ICDS mein you only have to remember these 2 sections. 145 subsection 1 and 145 subsection 2. 145 subsections 1. What does it say is that ki ICDS is only applicable to those incomes which are covered under PGBP head or which are covered under IFOS. What do you mean by IFOS? Income from other sources. Required in computation of income under the following heads only. So ICDS are applicable to those incomes which are either covered or calculated under PGBP, or it is covered or calculated under IFOS. If it is other heads, then in that case ICDS will not be applicable. That is section number 145 subsection 1. You have to understand what is 145 subsection 2 is saying. Applicable to accessee, applicable to the assessees. Which accessees? Except individual or HUF who are not required to get audited under 44AB. So it is applicable to all the assessees except individual and HUF, but it will also be applicable to the individual and HUF in case they are required to get audited under section 44AB. If they are not required to get audited under section 44AB, then in that case 145 subsection 2 says that the ICDS are not applicable to individual and HUF. Is it crystal clear, everyone? Everything is sorted now. Next point. What is a major stress? What is a major focus of ICDS? ICDS stresses or focus is on method of computation, not the method of accounting. This is also one of the MCQ they may ask you. कि ICDS का focus क्या है? What is the purpose behind introducing income computation and disclosure standards? The purpose behind that is to make sure that it is not talking about the method of accounting. It is talking about the method of computation. And which two heads computation are going to be considered? PGBP and IFOS, income from other sources. Rest, nothing else you have to understand about the ICDS, because you have already covered that in detail 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 in your direct taxes. Is it clear? So up to this, whatever we have done, that is called the MCQ part, that is called the very, very important part relating to audit under the fiscal laws. Is it clear, everyone? Yes or no? Is it clear, everyone? 100% clear? Yes or no? Yes. So this is what brings an end to your ICDS. Clear, everyone? Now, अभी अपना main tax audit report start होगा. What is our main tax audit report? In the main tax audit report, what do we see? 3CA, 3CB and 3CD. Now the question arises, sir, when the 3CA and 3CD form is required, when the 3CB and 3CD form is required. Remember one thing, 3CA and 3CD form is required in the tax audit report if your entity is liable to get audited under any other statute. If it is not liable to get audited under any other statute, then 3CB and 3CD will be applicable. So 3CA and 3CD will be applicable when the taxpayer is carrying on any business or profession and already got his accounts audited under any other law. But if the taxpayer is not getting any books of accounts or financial statement audited under any other law, then in that case 3CB and 3CD will be there. Now look at the major point here. 3CA mein we are going to attach statutory auditor's report. Why? Because statutory auditor has already done the audit. So that statutory auditor ka report we are going to attach with the 3CA. And 3CD too, you all know that various 44 clauses ka certification of facts. 3CB is required when, everyone? 3CB is required when the taxpayer does not get its books of accounts or financial statement audited under any other law. It means in the 3CB, tax auditor only has to do the statutory audit as well as the tax audit. What is the meaning of 3CB? 3CB means that tax auditor now will do the two assignments. He will only do the statutory audit and he will only do the tax audit, because the audit is this taxpayer has not got it audited under any other law. So there is no available audit report which we can attach like in the 3CA. So in the 3CA we can attach the statutory audit report, but that is not available here, na? Why? Because in the 3CB the taxpayer did not get it audited under any other law. When he did not get it audited under any other law, it means what? It means that 3CB mein tax auditor has to do the statutory audit also as well as the tax audit also. Is it crystal clear to all of you? Yes. Now, sir, 3CA क्या है? 3CA is simply a audit report. Sir, 3CB क्या है? 3CB is also an audit report, but here the tax auditor does that audit. Are you getting the point? But in the 3CA के case में, we can attach the statutory auditors का report. That is what the meaning of 3CA and 3CB. और sir 3CD क्या है? Most of the people say that कि 3CD is a separate audit report. No, 3CD is an annexure to 3CA and 3CB. So 3CA and 3CB are the audit reports where the truthness and fairness will be talked about. Whereas the 3CD is a certification of the facts wala report. Therefore, the words used are true and correct instead of true and fair. So what are the words we use in 3C and 3CB? True and fair. What are the words we use in 3CB? True and correct. And remember, it is an annexure. This is required to be attached with the 3CA and required to be attached with the 3CB. It is not a separate audit report. Like Caro is not a separate audit report. Same way, this is also not a separate audit report. Is it clear, everyone? Yes or no? Crystal clear to all of you? Yes or no? Yes. So, next one. Along with the 3CA, attach the copy of audited financial statement and audit report given by the statutory auditor. Right or not? Now, listen to this point very, 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 very carefully. Now see. In case of more than one business, if the tax auditor is called upon to give his report only in respect of one or more business and the books of accounts of the other business are not produced, the tax auditor shall mention the fact that audit has not been conducted for those books of accounts which have not been produced. Let's say for example, भैया मेरे 3 business थे, business A, business B, business C. So this taxpayer has appointed me for doing the audit of A and B only. So he did not produce me the books of C. So when he did not appoint me for C business, when he did not produce me the books of the C business, then I have to mention that fact that my audit report is limited to what? My audit report is limited to tax audit of A business and tax audit of B business. My audit report does not include which business? C business, for which the books of accounts has not been produced to me. Is it clear, everyone? Yes. But while checking the financial statements, if I find out that C business is also included in such financial statements for which books of accounts are not produced to the tax auditor, in that case I will qualify my 3CB report. Are you getting the point? I will qualify my 3CB report. So are you understanding the point? If A, B and C businesses are there, he only appointed me for A and B business. So I will mention in my tax audit report that my tax audit report is limited to the A and B business only, because C business ka books of accounts have not been produced to me. Then why should I give the opinion? Why should I give the truthness and correctness opinion on that particular C business? But while checking the financial statement, if you come to know that this taxpayer is doing some gadbad, this taxpayer is trying to do some fishy activity by not giving you the books of accounts of C, but in the financial statement C's turnover is also included, then in that case you will simply going to qualify your audit report, that is disclaim your audit report accordingly in the form number 3CB. Did you all understand this point very carefully? Yes or no? Yes sir. Up 2 exceptional cases where the 3CB is required to be attached. Now listen to this point very carefully. अब इसको ध्यान से सुनना. Say for example, my accounting year is January to December and my financial year is April to March. So I am doing the audit of the tax audit as per April to March. But financial statements available to me are from January to December. It means January, February, March, these 3 months ka audit has not taken place. Are you getting the point? Because I needed it up to 31st March, but I was provided up to 31st December. So 3 months ka audit is not done. So when the 3 months ka audit is not done, when the statutory audit is not done, there is one point coming to my mind. Therefore, tax auditor only has to do the statutory audit as well as the tax audit. So iska matlab, in this case, even though its audit is done from Jan to December, Even though the statutory audit is done from Jan to December, generally 3 CA is required, but here tax auditor will file 3 CB. Sir, why 3 CB? क्योंकि भैया January, February and March का audit tax auditor has to do, because accounting year is getting ended on 31/12 and financial year is getting ended on 31/3. तो सपोज 31/12/2021 तक का ऑडिट इज ऑलरेडी डन, बट टैक्स ऑडिट तो 31/3/2022 का होगा ना. तो इट मींस जनवरी मंथ, फेब्रुवरी मंथ एंड मार्च मंथ का ऑडिट इज नॉट टेकन प्लेस. बट सर दिसंबर तक तो ऑडिट हो गया ना, बट दैट इज इनकम्प्लीट ऑडिट ना. जैन फेब्रुवरी मार्च का ऑडिट तो वी हैव टू डू. तो इट मींस इंस्टेड ऑफ 3 CA इन दैट केस आई हैव टू गिव व्हाट 3 CB इन दिस केस. Are you understanding my point? Yes or no? So 3 CB is specially required in this case in place of what? 3 CA. Did you all understand the point? Very important point, everyone. Very important. Clear, everyone? Achha, there is another case where the 3 CB is required. Say for example, statutory auditor was doing the audit. Abhi statutory audit will be completed, then only the tax audit can be done or not. Do you all agree with me? First, what audit takes place? Statutory audit. Then what audit takes place? Tax audit. So, bhaiya, if the statutory audit is done, then only the tax audit will be applicable. Yes, sir. You are saying 100% correct. So, if the statutory audit is not yet completed and statutory auditor is saying, bhaiya, mere ko 2-3 months aur lagenge, I will not be able to complete the statutory audit on time. So, but as a tax auditor, you have a deadline. As a tax auditor, you to have a deadline. You have to complete your audit on time. So, bhaiya, you are going to take the responsibility of doing the statutory audit plus tax audit, because you to have to complete the audit on time na. तो statutory auditor ने तो बोल दिया फोन करके, सर मेरे को तो 2-3 months एक्स्ट्रा लगेंगे, अगर आपको ऑडिट करना है तो कर लो. तो I will do the statutory audit and I will do the tax audit. And when the tax auditor does the both statutory audit and tax audit, so instead of 3 CA, we will give 3 CB form number. Did you get the point? So these are the two cases where the 3 CB is required to be given specifically. Did you get the point? Yes. Next point. So what if the tax auditor is different from the statutory auditor? अगर tax auditor is different from the statutory auditor, तो SS 600 का compliance आएगा. Very simple, using the work of the another auditor. Cross reference. तो भैया where the two clauses are talking on the same subject, mention the cross referred clause here. What do you mean by that? कि suppose say for example total 44 clauses है tax audit 3CD report में. Suppose clause number 17 में there is something and clause number 44 में there is something. So they are talking about the same thing but at the two different places. So while reporting under clause number 17, we'll mention the clause number 44, and while reporting the clause number 44, we'll mention the clause number 17. Are you getting the point? So if the two clauses are talking about the same subject matter, mention the cross reference clauses there. Did you get the point? Difference in opinion between टैक्स ऑडिटर एंड असेसी. अगर टैक्स ऑडिटर और असेसी की ओपिनियन मैच नहीं होते तो टैक्स ऑडिटर को क्या करना है? तो इनकम टैक्स एक्ट 1961 says that कि ऑडिटर shall state both the point of views and let the authority decide who is right. Auditor will not only mention his point of view, he will write both the points of view and let the authority decide who is right. Next point, clause not applicable. अगर कोई भी clause applicable नहीं होता तो make sure that you use the word not applicable there in the 3CD form. If no particular clause is applicable to that entity, use the word NA over there. Next one, applicable law. Audit is to be done as per the relevant year applicable law, even though the form of audit report is not amended. So even though the form of the audit report is relating to previous law or previous year, but this year so many amendments have come. But remember one thing, just because the form is not updated, it doesn't mean that you will not do the audit in an updated way. You will do the audit only and only in a which way? Updated way. Is it clear, everyone? Yes or no? Yes. Missing information. What do you mean by information is missing? In case of the missing information, auditor shall not withhold the total audit, rather qualify his report and proceed. So, bhaiya, there is one information which is not available to me. there is one information which I was looking for, but that information is not available to me. So in that case, what should I do? In that case, what should I do? In that case, क्या करेंगे? In that case, हम लोग अपनी report को qualify कर देंगे. We will not wait for that information to come. We are not allowed to wait, or we are not allowed to withhold the total audit just because that information is not available. हम लोग उसे qualify कर देंगे and we will proceed further. Clear everyone? Next one, judicial pronouncement. Wherever the tax auditor is making the use of any judicial pronouncement, so it is his responsibility to include that and mention the fact that कि भैया I have taken the help of judicial pronouncements. भैया I can guarantee कि minimum 3 to 4 marks are going to come from this 1 hour भी नहीं, exactly 57 minutes का discussion which we had just now so far. From this discussion you will definitely get minimum 3 to 4 marks. So it's not always about the clauses, it's sometimes about other than clauses also. So I hope I justified your revision in this audit under the fiscal law so far, right everyone? So let me take a break of 1 minute and we'll continue. Okay, chalo, let's continue everyone. Now clauses of 3CD everyone. So clauses of 3CD, first of all, so you have to understand that it is not a separate audit report. It is not a separate audit report. It is just an annexure to your 3CA and 3CB. And remember, it is not at all an audit report. It's a statement of certification of facts. तो यहाँ पे हम लोग truthness and fairness नहीं लिखेंगे. We are going to use a word called true and fair. तो clause 3CD में total 44 clauses are there. How many clauses are there? 44 clauses are there, right everyone? So clause number 1 क्या है भाई? Clause number 1 is talking about the name of the assessee. What is the clause number 1? Clause number 1 is talking about the name of the assessee, and that name which should be provided as per the PAN allotted to that assessee. What is clause number 2? Clause number 2 talks about the address of the assessee. That address which you have filed with the income tax department, which you have communicated to the department, that address of the assessee is to be given. Clause number 3 talks about your PAN number. What is PAN number? Permanent account number, which is allotted to you by the income tax authority. So first वाला clause होगा name of assessee, second हो गया address of the assessee, third होगा permanent account number. Clause number 4 किसके बारे में है भाई? Clause number 4 किसके बारे में है? If you have got registered under any indirect taxation, अगर आपने इनडायरेक्ट टैक्सेशन के अंदर कोई रजिस्ट्रेशन करी है, इफ योर असेसी इज लायबल टू गेट रजिस्टर्ड अंडर इनडायरेक्ट टैक्सेस लाइक जीएसटी, ऑब्टेन द WRN ऑन द सेम from the assessee कि you have got registered or not, obtain the registration certificate, and in case liable to pay the taxes but not registered, then modified your report. मतलब he is liable to pay the GST but he has not yet got registered under the GST department or not get registered under the GST Act. So in that case, तो भैया modify तो करना पड़ेगा. You have to modify the opinion. Is it clear everyone? To obtain the WRN on the same, obtain the indirect taxes का registration certificate. It can be import export, or it can be IEC code, or it can be GST registration. And finally, in case you are liable to pay, in case your assessee is liable to pay but he has not paid, then do modify the report. In case of pending issued certificates, no modification, check online portal and returns. Let's say for example, you are asking them कि please give me your GST IN, GST registration number, but they are saying that sir, so far GST certificate has not come. तो भैया, just because certificate has not come, it doesn't mean that tax auditor will modify the report. Now tell me, where is another option where you can check the certificates? Where is another option where you can check the GST IN or GST registration number of the client? You can simply take the user ID and password, go to the online portal and check what is the GST IN number. So just because certificate they are not able to produce, just because it is pending from the department side, they have delayed in issuing the certificate, it doesn't mean that you are going to modify. So in case of pending pending issued certificates, no modification, check on the portal and returns. Is it clear everyone? Yes sir, it is perfectly clear. Next one, clause number 5. Clause number 5 किसके बारे में बोलता है सर? Clause number 5 talks about the status of the assessee. What is the status? Either you are an individual or a company or a BOI or a AOP or judicial person, whatever the case may be, right or not? Clause number 6 talks about what? Clause number 6 talks about किसके बारे में? Clause number 6 talks about previous year. Clause number 7 talks about assessment year. The first one talks about the name, second address, third PAN, fourth indirect registration, fifth one status, sixth one previous year, seventh one assessee. Now, clause number 8, very important clause. What is clause number 8? Clause number 8 talks about relevant clause of 44AB under which the audit is conducted. So, bhaiya, we have to mention in the clause number 8 कि you are getting audited under 44AB because of which reason? Is it because your business turnover is more than 1 crore? Is it because your professional turnover is more than 50 lakhs? Is it 44AE, 44BB, 44BBB, or is it 44AD? Is it clear, everyone? Yes or no? Yes. Now, next point. What is clause number 8A? It is a newly inserted clause. So what is the clause number 8A is saying that whether the assessee has opted for taxation under section 115BA, 115BAA, 115BAB, 115BAC, 115BAD, then this clause is applicable to that company assessee only. If the reply is no, if the assessee bolta hai ki no, I have not opted for any of such scheme, then not required to take any further steps. But if the assessee is saying yes, I have opted for the special tax regime under 115BA, 115BAA, 115BAB, 115BAC, 115BAD, back, bass, bab, ba, BA, right or not? In that case, if the reply is no, then in that case no further requirement, and if the reply is yes, then make sure then obtain the copy of their audit report under 10 IB ICID. What is audit report copy? Under 10 IB ICID, filed by the assessee. If not filed, modify the report. Simple. So again repeating, 115BA, BAA, BAB, BAC, BAD. If you are following this any particular specific tax regime, if the reply is no by the assessee, no further requirement of investigation. But if the reply is yes, then obtain the copy of 10 IB ICID filed by the assessee. Clear, everyone? If not filed, then directly modify. Clause number 9 talks about what? If the assessee is a partnership or AOP. अगर तुम्हारा assessee partnership firm है और AOP है, obtain the name of the partners and members of that partnership firm or AOP, and any changes in the member partners or profit sharing ratio, and obtain information on such changes. So obtain the name of your partners and members and profit sharing ratio, and if there is any change in their membership, if there is any change in the members, partners, or profit sharing ratio, obtain the information on that changes. Clause number 10, nature of business. So bhaiya, how many types and how many number of businesses you are entered into, how many businesses and how many professions you are engaged into, any changes in such business or profession as compared to the last year. This is what clause number 10. Is it clear, everyone? So this is what up to clause number 10. So 10 gone, 34 to go. राइट नेक्स्ट क्लॉज नंबर 11. क्लॉज नंबर 11 किसके बारे में है भैया? बुक्स ऑफ अकाउंट्स के बारे में है. तो हमें 3 क्वेश्चंस कंपनी को पूछने हैं, हमें 3 क्वेश्चन एसएससी को पूछने हैं कि वेदर यू मेंटेन द बुक्स ऑफ अकाउंट एंड वेदर वेयर इट इज केप्ट, whether you maintain the books of accounts or where it is kept. What is the question number 2? Obtain the list of such books of accounts and number of places and areas where you have kept it, and if it is maintained in the computerized form, list of the books maintained in the computerized form, and how many you have examined and how many you have checked. So total 3 things we are going to ask here. Bhaiya, do you maintain the proper books of accounts or not? Is saying yes. Where do you maintain it? Obtain the list of such books of accounts and obtain the list of those places where such books of accounts are being kept. If the books of accounts are maintained in the computerized form, obtain the list of all the books of accounts which he has maintained in the books computerized form, and also comment how many you have checked and how many you have examined. Next point. Clause number 12 किसके बारे में है? Clause number 12 talks about the presumptive income schemes. Which schemes, everyone? Presumptive income streams. Whether the P&L includes any profit and gain on presumptive basis from Section 44AD, ADA, AE, AF, B, BB, BBA, BBB, amount of profit or loss debited to P&L account. If you are a presumptive income scheme holder assessee, whether your profit and loss account includes any profits and gains on the presumptive basis from 44AD, ADA, AE, AF, B, BB, BBA, BBB, then the amount of profit or loss, how much is debited to P&L account. That information you have to give in the clause number 12. Superb. Yes, sir. Clause number 13 talks about the method of accounting. तो भैया तुम्हारा method of accounting क्या है? Which method of accounting you have applied? Any changes in the method of accounting as compared to the previous year? If yes, If yes, what is the impact of such change in the P&L account, and show the impact in increase in profit basis or decrease in the profit. Whether there is any adjustment to ICDS you have done. If the answer is yes, then in that case show the impact in the P&L statement, how much profit is increased and how much profit is decreased, and disclosure of the ICDS. The total 6 things you have to mention in the method of accounting. Point number 1, what is your method of accounting adopted by you? Any changes relating to previous year? Point number 3, if the answer is yes, impact on P&L, decrease or increase in profit. Point number 4, did you make any modifications in ICDS? If yes, point number 5 impact in the P&L, decrease in profit or increase in profit. And point number 6, disclosure of ICDS. The total 13 clauses are over, 25 to go. Oh, sorry, 35 to go. Next one, sorry, 35 पे कहाँ हुए? 13 clauses are over, 31 to go. Right or not? 14 clause. What is the 14 clause? Method of valuation of the closing stock. So which method of the valuation of the closing stock you have adopted? Any changes with respect to section 145A? And if yes, then impact on profit, increase or decrease in profit. That is what. So what method of the closing stock valuation you have adopted? Any changes with respect to section 145A? Then if yes, then what is the impact of increase or decrease in the profit due to the change in the method of valuation of closing stock? Clause number 14 is also over. भैया clause number 15 किसके बारे में है? Clause number 15 उसके बारे में है, details of those capital assets which you have converted into stock in trade. So you were having some capital assets, but later on you converted those capital assets into what? Stock in trade. So say for example मेरे पास 20 properties थी which were my capital asset, but later on I'll change that capital asset into what? Stock in trade. Now, description of those capital assets you have to give, date of acquisition of those capital assets you have to give, cost of acquisition you have to give, and amount at which it is converted into stock in trade. अब बताओ easy लग रहा है या बहुत easy लग रहा है? It might be looking very very easy for you. तो भैया no fear when Rohit sir is here. Clear everyone? So clause number 15, details of the capital assets converted in stock in trade, description of capital assets, date of acquisition, cost of acquisition, and amount at which it is converted into stock in trade. Next point, clause number 16. Clause number 16 का इसके बारे में है, amounts not credited to P&L statement. तो भैया amounts not credited to P&L statement के बारे में, those amounts which should be credited to P&L statement but not credited to P&L statement, that can be 5 types of amount. What are those 5 types of amount? Items which are falling under section number 28 but you have not credited to P&L account. Credits, duty, drawbacks, refunds by the appropriate authority but you have not credited to P&L account. Escalation claims which are accepted as per the agreement but you are not credited to P&L account. Next one, any other items of income which you have not credited to P&L account. Capital receipts which you have received but you are not credited to P&L account. So if any of these 5 types of incomes which you have not credited to P&L account, please mention those details. Clause number 16 is over. Clause number 17, very very important clause, very important clause. Suppose you have sold some land and building as an assessee, you have sold some land and building below the stamp duty value which is considered by the government authorities. So government authorities have calculated some stamp duty value. You have sold your land and building below that stamp duty value which is calculated by the state government authority and in compliance with section number 43 CA and section number 50C. So what are the details you have to give? Details of such property, consideration received or accrued, value assessed or adopted, that is SDV, stamp duty value, whether provision of 43 CA and 56 subsection 2 clause 10 is being considered or not, applicability of 43 CA relating to second proviso and applicability of 56 subsection 2 clause 10 relating to fourth proviso. Did you add the point? Now, clause number 17, very very easy everyone. If you have transferred any land or building below the which value? Below the standard stamp duty value which is determined by the state government authorities in compliance with section number 43 CA and 50C. So these 4 details you have to give: details, consideration, details of the property, consideration received or accrued, value assessed or adopted, whether provision of 43 CA and 56 to capital 10 is being followed or not. Particulars of depreciation allowable. Agar this clause is completely and completely dedicated to depreciation. What is the description of assets and block of assets? What is the rate of depreciation you are putting? What is the actual cost of WDV? Now, actual cost of WDV, how you will calculate? Adjustment made to WDV under section 115 BAC BAD for the 21-22 assessment year only. Adjustment made to WDV or intangible assets due to what? Exclusion of what? Goodwill, and adjusted WDV. These are the 3 things you have to remember. So what are the 3 things? Adjustment to the WDV made due to 21-22 assessment year for 115 BAC and BAD. Adjustment made to the intangibles due to the exclusion of the goodwill, and adjusted WDV. Next one, what are the additions and deductions due to? What are the additions and deductions in the WDV due to SCMPE rules, due to the changes in currency rates, and due to the subsidy grant or disbursement? Depreciation allowable and WDV at the end of the year. These are the total 6 informations you have to provide in relation to clause number 18. तो क्या है? Description of block of assets. Second one, depreciation का rate. Third one, WDV with the 3 adjustment points. Fourth one, additions or deletions due to what? Due to fluctuations in the foreign currency rates, due to the SCMPE rules, due to the subsidy grant or disbursement, depreciation allowable, and WDV at the end of the year. Next one, clause number 19. Bhaiya, very, very huge clause. Amounts admissible under section. Amount admissible under section 32 AC, 32 AD, 32 AB, ABA, 3511I, 3511-2, 35112A, 35113, 3514, 352AA, 352AB, 35ABB, AC, AD, CCA, CCB, CCC, CCD, 35D, 35DD, 35DA, and DE. So remember, 32 AC 2 35E का amounts which are admissible. Amount how much debited to P&L account, amounts admissible as per the provision of Act or rules. What you need to verify if these amounts are debited to the P&L account, whether assessee was eligible to get the debit of these amounts or not, whether they are correctly computed or not, whether it fulfills all conditions to avail such a deduction or not. These are basically the deductions. 32 AC से लेके 35 E तक deductions the client has taken and debited to P&L account. तो as an auditor तुम्हें क्या check करना है कि whether these deductions are taken as per the provisions of the Act and rules or not, whether assessee was eligible or not, whether calculation was done properly calculated or not, whether he fulfills all the conditions to get this availment of these deductions or not. Clause number 20. What is clause number 20? Any sum paid to the employee as a bonus or commission for the securities rendered. If you have paid any sum to the employee as a bonus or as a commission for the securities rendered, if you have paid the bonus, what you have to mention? Description of that person, bonus amount, expenses not considered as bonus, description and remarks, right? And if you have paid the commission, then voucher number, date, name of the employee, amount, description of the commission, basis of determination and remarks. And now 20 में A talks about anything paid, 20 में B talks about details of contributions received from the employees from the various funds. What is the nature of the fund from which you have received the contribution? Sum received, due date of payment, actual amount paid, and the amount actual date of payment to the authority. Just say for example EPF, Provident Fund grant. Provident Fund may we take the employee contribution and employer contribution. So how much employee contribution you have received in the EPF? How much is the sum received? What was the due date of payment? When you have actually paid to the IPF authority, and the actual date of payment to the authority. These are the various disclosures you have to make when you are receiving any kind of contribution from the employee. So A talks about making the payment of bonus and commission, and B talks about what? Contribution. Now clause number 21, तो भैया बहुत बड़ा clause है. Clause number 21 में इतने items हैं. So what I did is I divided it into sub clauses. Clause number A. If amount debited to P&L account, these amounts are inadmissible. Which amounts are inadmissible? Which are capital in nature, personal in nature, advertisement, political party contribution, clubs, penalties, contractual obligation. TDS inadmissible under section 40A, AIA, NRI, and payment details on which TDS not deducted and TDS deducted but not paid. So these are also inadmissible. This one is also inadmissible. Inadmissible under 40B, 40BA, interest, salary, bonus, commission, remuneration are inadmissible. 40A, cash more than 10,000. ये तो तुम्हें पता ही है कि if you are making a cash payment for more than 10,000, then it's inadmissible, whether made by the account pay check or not. If not, furnish the details of amount, name and PAN. And remember one thing, 10,000 का limit is relating to per person per transaction. Just say for example, on the 1st February, you purchase from A 6,000. On the 6th February, you purchase from A for 6,000. This 14,000 of cash payment you are making, that is allowed because these are two separate purchases. But suppose on the 1st February only you purchase for 14,000, for which the payment you made 6,000 one time and 8,000 one time, then it is disallowed. But if these are two separate purchases of 6,000 and 8,000, then it is allowed. Clear everyone? If both purchases are made on the 1st February, even though separate invoices, then in that case it is what? It is disallowed. So this 40A subsection 3 is relating to cash payment more than what? 10,000. So bhaiya, if it is made by account pay check, then details. If not furnished, then amount, name and PAN. More than 10,000 is not allowed. Next one. Gratuity provision not allowable. Contingent liability not allowable. Disallowed under section 14A. Expenditures on incorporation which is not a part of total income. Now there is one residual part which I have kept, that is called others. What is others? Expenses prohibited by law, payment to opening creditors, contribution to unrecognized provident fund, employee fund, interest on capital borrowed. So these are the various things which are disallowed under clause number 21. Now clause number 22, interest to MSME. If the amount, if you have paid any interest, if you have paid any interest or payable any interest to the MSME, amount is inadmissible under section 23 of MSME, Micro, Small and Medium Enterprises Development Act 2006. Clear everyone? 2006. Next one, payment to specified person, that is called relative. अब सुनना ध्यान से, यहाँ पे हो क्या रहा है कि if you have made any payment to your wife, your husband means your spouse, brother, sister, any lenient ascendant or lenient descendant, if you make any payment to any of these relatives, then in that case what we are going to do, we are going to check. I am not going to check, assessing officer is going to check, is it excessive payment or not, is it unreasonable payment or not. If the assessing officer thinks that it is excessive payment or it is unreasonable payment, then in that case he will assess that particular thing, whether it is excessive or whether it is unreasonable or not. He will check it on the three parameters. What are the three parameters? Fair market value of the goods which you have received, for which you have made the payment. Suppose I received 500 kg of rice, ठीक है, for which I paid 20 lakh rupees का payment. अब तो मुझे बताओ 500 kgs of rice का 20 lakhs payment होता है, it is excessive and unreasonable or not? Yes. Fair market value of the goods. Legitimate needs of the business and profession. So assessee will also check कि whatever you are making the payment to your relatives, are they required for the particular needs of the business and profession or not? And benefits derived. What do you mean by benefits derived? How much benefit you have actually derived in such kind of sale. Next one, clause number 24, deemed profits or gains under section 32 AC, 32 AB, ABA. Now, no deduction is allowed under section 33 AC from the assessment year 1819 onwards. Section 32 AC allows deduction at the rate of 15% in respect of investment made in the new plant and machinery for the manufacturer if breached deemed profit. They are saying that, ki bhaiya, if you have bought the plant and machinery as a manufacturer, on that plant and machinery 15% is allowed as a deduction. अगर आप 15% से above deduction you are taking, then it is inadmissible. You are not allowed to take more than 15%. If you have taken the deduction for a new plant and machinery bought for the manufacturing purpose. You did the investment in the new plant and machinery for the manufacturing purpose, and if you have taken the deduction more than 15%, then that deduction will be reversed and will be treated as your deemed profit. That is what clause number 24. Clause number 25, profit under section 41. What they are saying, any remission, cessation of trading liability or recovery of already allowed deduction. So say for example, some deductions you have already taken in 1 year. In some year, you already have taken the deductions. Are you getting the point? Just bad debt. And suddenly in this year, you got the bad debt recovery. So when you have already taken the deduction in that year, it means you have saved your tax in that year. So this year, when the bad debt recovery has happened, it is going to be added in your income. So any expenditure deduction allowed in any previous year, thereafter liability has been waived out. That is bad debt recovered, reversal, or right of creditor, sale of fixed assets used in, and generation of power used in the let me just make you understand this. Yes, any sale of fixed asset used in asset and generation of power. So if you have already taken the deduction, then in that case, if you got any income in this year, you have to include it as a profit in the this year. Section number 26, 43B liability. What they are saying that 43B liability, इसको ध्यान से सुनना. Now listen. You all know that there is one section number 43B liability. What do you mean by that? There are some statutory dues which you have to pay by the end of the financial year. But even if you are not paying, you are allowed to make the payment up to the date of the filing of the return. Till that time, you can take the deduction. Now, suppose 1920 financial year ka 43B ka payment I made, but I did not get the deduction in that year. So when I did not get the deduction in that year, that payment is standing as an opening payment in the current year. So obviously, when I did not get the deduction in the last year, I will definitely take that deduction in the current year. So how much deduction, how much pre-existed on the first day of previous year but was not allowed in the assessment year, how much was paid during the year and how much is not paid during the year. So say for example, 5 lakhs ka, say for example, 5 lakhs ka deduction was relating to 1920 financial year, and right now 2021 financial year is going on. So obviously the 1920 financial year ka deduction which I did not take in 1920 will take it in 2021. So it is standing as a pre-existed on the first day of previous year. Out of that, how much you have paid? Suppose my total was 5 lakhs. Out of which 3 lakhs I paid in the 2021 financial year, and how much I did not pay? 2 lakhs. So 3 lakhs will come here and 2 lakhs will come here. And now the second point in the 43B is relating to current year ka 43B payments. How much I paid up to the date of return of filing, that is going to be here. Suppose 2021 financial year ka date of returning file kitna hoga? 30th September 2021. So how much you have paid up to this one will come here, and how much you have not paid come here. Remember one thing, ये जो left side वाला point है ना, it is relating to the deduction relating to previous year which you have not claimed in that year, but total you are not allowed to disclose here. Only that much you have to disclose here which you have paid during the previous financial, during the current financial year, and those which you have not paid will be covered here. Now clause number 27. Clause number 27 says for that if you have taken any GST credit utilized during the year, kitna GST SENVAT credit you have utilized during the year, that information you have to give, and prior period expenditures credited or debited not allowed unless the cash accounting. So remember one thing, if you have taken any prior period ka GST ka expenditure debited or credited, last year ka expenditure debited or credited, so if you have not claimed it last year, so this year generally not allowed. But if you are making the books of accounts on cash basis accounting, then in that case that deduction is allowed in current year as well. Is it clear to all of you? Yes or no? Yes. So it is allowed in the current year also. Next one. Point number 28. What is clause number 28? Shares without consideration, inadequate consideration covered under 56, taxable as IFOS. So they are saying that this particular clause has been eliminated from the portion. So clause number 28 is like you don't have to do. Now clause number 29, क्योंकि it is already made ineffective, it was not applicable as it was made effective from the 1/6/2010 to 2017. So applicability of this clause is already over now. So there is no point of doing this clause, nor ICAI will ask you this clause in the examination, right? Now clause number 29, तो भैया clause number 21 क्या बोल रहा है कि if you have issued the shares more than the FMV, what do you mean by more than FMV? Fair market value. Then whether the assessee received any contribution of the issue of the shares more than FMV or not. If yes, give the details. तो अगर आपने shares issue करे हैं which is more than fair market value, then you have to put the details here. And applicable to the companies, it is this clause is applicable to which companies who have issued the shares more than fair market value? Public is not financially or substantially interested and issued to the resident of India. So those public companies, those companies which have issued the shares more than fair market value and in which the public is not substantially interested and substantially invested and it is issued to the residents, then in that case issue price minus fair market value will be taxable in this clause. Clear everyone? Yes. Now clause number 29A. Clause number 29A में two clauses are there. 56 subsection 2 clause 9, 56 subsection clause 10. 56 subsection clause 9 क्या बोलता है कि भैया if you have taken any advance for the capital asset, if you have taken any advance for the capital asset and you promise the party that ki I will transfer this capital asset to you but you have not done and you have forfeited the advance, then it is going to be disclosed in 29 capital A. So see, any advance forfeited taken in the course of negotiation for transfer of which asset? Capital asset, but the capital asset has not been transferred. If both the conditions are met, what is the condition number 1? Advance को forfeit भी कर लिया, you have forfeited the advance also and you have not transferred the capital asset also. If both the conditions are matched, reported only in case of forfeiture, then whether any such amount forfeited, then such amount shall be chargeable under the IFRS and furnish the income and amount. They are saying that that advance will be treated as your income under income from the other sources, and as a tax auditor you have to furnish the amount and you have to furnish the income over there. Again repeating, what is section number 56 subsection 2 clause 9 is saying कि भैया you have taken any advance and you promise the other party that you will transfer the capital asset, but neither the capital asset is transferred and moreover you have forfeited the amount, then in that case that forfeited amount will be treated as your income. Clear? Now clause number 29B. Clause number 29B is very similar to clause number 17. Do you remember the clause number 17 where you have sold your land and building below, where you have sold your land and building below the stamp duty value? यहाँ पे क्या है? If you have bought any land and building, that was selling, it wasn't buying. If you have bought any land and building, if you have bought any land and building, then in that case this clause will be applicable. But let me tell you one thing. Suppose someone came and gave you the 50,000. Someone came and gave you the 70,000 rupees. Now tell me, did you sell anything for which the payment you received for 70,000 rupees? No. So someone suddenly came and gave you the income of 70,000 rupees. Now tell me, is it more than 50,000? Yes. Then in that case, it is going to be treated as your income. Now suppose you bought a movable property. You bought any movable property. Are you getting the point? Someone gifted his movable property to you. Someone gifted his movable property to you whose fair market value is more than 50,000. Someone is gifted you a movable property. जैसे मेरा friend है, oh no, US shift हो गया. And while shifting the US, he told me that भाई मेरा Ola scooter तू रख ले. Now Ola scooter का market value, if I'll sell that Ola scooter S1 Pro in the market today, so I'm going to face the 75,000 rupees. Did I pay any money to my friend? No. But is this benefit more than 50,000? Yes. So it will be disclosed here. But if I have paid any benefit, if I paid any money, मैंने अपने friend को 10,000 दिया. I told him, भैया, I am Rohit Grover. I will not take anything for free. I will give you 10,000 for your Ola scooter. But I paid 10,000. What is the fair market value? 85,000. Let's say for example, I paid 10,000. What is the fair market value? 85,000. So fair market value minus consideration which I paid, 75,000. So 75,000 is more than 50,000 na. So then also it will come here. Now see, if the fair market value minus consideration is more than 50,000, then also this point will come here. Or if I have bought any immobile property, if someone has given me any immobile property whose stamp duty value is more than 50,000, मेरे दोस्त ने while shifting to US उन्होंने क्या बोला, भाई ये मेरी शॉप है 14x14 की शॉप है, you please keep it and transfer the shop in your name because this was my father's last nishani and last thing, so I don't want to sell it to anybody, I trust you. So he gave me his shop without any consideration. So I did not pay any money, but is the benefit of that shop is more than 50,000? Is the stamp duty value of that shop is more than 50,000? Yes, it is going to get covered here. But if I have paid any consideration for that shop, if I have paid any consideration for that shop and the stamp duty value minus consideration, now small formula, stamp duty value minus consideration, suppose shop is worth rupees 3 lakhs. I have paid only 50,000. Now, what is the difference between the two? 2,50,000. So amount is higher than that 2,50,000 which I got is higher than 50,000 or 110% of the consideration. How much I paid? 50,000. 50,000 का 110% calculate करे तो 55,000. 55,000 को किसके साथ compare करा? We are going to compare it with the 50,000. Whichever is higher. 55,000 is higher. But what is the benefit I got? 2,50,000. Is 2,50,000 more than 55,000? Yes. Again repeating. I bought the shop by paying 1 lakh rupee. But the shop ka stamp duty value is 3 lakh rupees. Can you please tell me what is the benefit I got? Sir, 2 lakh rupees. Keep this benefit aside. Keep this benefit aside. Now, 50,000 rupees ko we are going to compare it with the 110% of the consideration I paid. How much consideration I paid? 1 lakh. 1 lakh ka 110% means what? 1,10,000. 1,10,000 or 50,000 mein whichever is higher. 1,10,000 is higher. But what was my benefit? 2 lakh. Is 2 lakh more than 1,10,000? Yes, 2 lakh is more than 1,10,000. Therefore, it is going to come here. Is it crystal clear? Yes, sir. Clause number 30. What is clause number 30? Details of any borrowed amount on hundi. अगर आपने कोई हुंडीज के थ्रू पैसा बोरो किया है, if you have borrowed any money via what? Hundis, where the interest paid and principal repayment made by the way other than the account pay check, and you have made the payment other than account pay check, then obtain the WRN on it from the assessee. Given appropriate note suggested by the ICAI, with mentioning that it is not possible for him to obtain evidence on the same unless provided by the assessee. Dekho sir, I have borrowed some money on the basis of hundi and I have repaid him via cash other than account pay check. Then in that case, you do not have any evidence other than which is being provided by the assessee. So that note you have to give it over here. That is clause number 30. What is clause number 30A? What is clause number 30A? क्या बोल रहा है? Whether any primary adjustment to transfer price under section 92 CE is being made. What they are saying, transfer pricing is basically relating to your DT topic. अगर आपने कोई transfer pricing में primary adjustment की है, if yes, under which clause of 92E1 it was made, amount of the primary adjustment, whether excess amount available with the associate party has been repatriated to India or not. If yes on above, whether the excess amount available with the associate party to be repatriated to India. If yes on above, whether repatriated within time. If no on the above, then the imputed interest on such excess money which is not repatriated shall be what? Provided. देखो सर क्या होता है 92 CE transfer pricing में, if you have done any primary adjustment, and the primary adjustment if you have done, against that you have to do a secondary adjustment. If you have done any primary adjustment and you have to do the secondary adjustment and the adjustment amount is more than 1 crore, and the adjustment amount is more than what? 1 crore, then these 5 things you have to mention. What are the 5 things? Under which clause it is being adjusted, amount of primary adjustment, and whether the excess amount available with the associate party to be repatriated in India. If it is yes, whether repatriated within the time. If it is no, then whether the imputed tax is being calculated, imputed interest is being calculated on that which is not repatriated shall be what? Provided. Clear everyone? 30B. 30B is relating to 94B, where the interest payment incurred on the amount is exceeding 1 crore rupees. So bhaiya, you are liable to pay an interest, and your interest expenditure is more than 1 crore rupees under section 94B. Furnish the amount of expenditure by the interest. Furnish the amount of expenditure by the interest. Next one, EBITDA, right or not? And if it is more than 30% of what? EBITDA. Now listen to this point very, very carefully. What I'm saying, listen to this point very, very carefully. Now see, if under 94B, you are liable to make payment of any interest of more than 1 crore rupees, then what is the amount of expenditure by the interest? What is the EBITDA of the? EBITDA means earnings before interest, tax and depreciation, right? And if that amount which you are liable to pay is more than 30% of the EBITDA, details of internet expenditure balance carried forward and details of internet interest expenditure carried forward. Clear everyone? Yes or no? So whatever these clauses are there, now you have to make sure that you have to little bit mug up also, right? Whether the assessee entered into any impermissible avoidance agreement under section 96. If yes, what is the nature of that agreement and what is the amount of tax benefit he is going to get, right? Now, with that, our 30 clauses are over and we are only left with the 14 clauses. So, bhaiya, this clause, this 31AB clause is very, very important. So, first of all, to understand 31 May, there are so many other things you have to understand here. Now, see, section number 269 SS. Very simple. If you have received any particulars of the loan or deposit more than the limit specified under section 269 SS, which is 20,000. If you have received any deposit exceeding the limit specified under section 269 SS, तो भैया name and address and PAN, whether squared up or not, maximum amount outstanding, whether taken or accepted by the check or bank, whether same was taken by the account pay check or account pay DD or not. And what is the limit of that section? 269 SS. Particulars, what is the point number B? Particulars of specified sum exceeding the limit specified under 269. So what is the difference between this point and this point is, here the amount is particulars of loan or deposit received. Here, what is the word used? Specified amount. What do you mean by specified sum? Amount related to transfer of immovable property. So this point is non-immovable property related point and this point is immovable property related point. Are you getting the point? But in both the cases, if you have received anything more than the specified limit under section 269 SS, which is 20,000, then you have to report it here. Clear? Now, what is 269 ST? 269 ST को अपन 4 पार्ट्स में डिवाइड करेंगे. BA, BB, BC, BD क्लॉजेस है. BA, BB, BC, BD. BA and BB talks about receipt side. BA, BC and BD talks about the payment side. Now see, particulars of receipt exceeding 269 ST. 269 ST का लिमिट कितना है? 2 lakh rupees. If you have received any amount exceeding 269 ST otherwise than by check, bank draft or ECS. If you have received the amount otherwise than by means other than bank, other than bank draft, other than check or ECS, and the limit is 2 lakhs. If you have received any amount more than 2 lakh rupees other than this check, bank draft or ECS, then it is to be reported under BA. Particulars of receipt exceeding 269 ST by check BD but otherwise other than account pay check. So here, you are not receiving via check. Here you are receiving the payment via check, but it is other than account pay check or account pay DD. What is the difference you found? Here also you are receiving the amount more than 269 ST. Here also you are receiving the amount more than 269 ST. Here you are receiving other than bank draft, other than account pay, other than check, and other than ECS. Here you are issuing via, here you are also receiving via bank draft, ECS and check, but other than account pay check and other than account pay DD. Did you get the point? Now, if you have made any payment, under section 269 ST, other the amount which you have received, you have to make the return, you have to make the repayment also. If you have made the repayment other than via check or bank draft or ECS, then it is to be reported under BC. If you have made a payment via check, via draft or via ECS, but other than account pay check and account pay DD, then it is to be reported here. So what is the difference between this point and this point? You received it without check, and the second point may you received it with check but other than account pay check. What is the difference between this one and this one? You made the payment other than check and you made the payment via check but other than account pay check. Clear everyone? Yes or no? This is the main point you have to remember. Otherwise this is something the ICAI is going to trouble you about. So 269 SS में क्या था? Any amount received more than the specified limit, which is 20,000. Any amount received as a specified amount more than the specified limit, then specified amount is relating to transfer relating to the immobile property, amount relating to the immobile property. 269 ST में 2 points are relating to receipt, 2 points are relating to payment. Here you are receiving by the way other than, you are receiving exceeding the limit other than via check, other than via check, other than via bank or ECS. Here you are receiving it via check or ECS but other than account pay check. And payment के case में you are making the payment without check and you are making the payment with check but other than account pay check. This is what the difference between them. 269 ST, 269 ST हो गया, 269 SS is over 269 T. Now, and remember one thing, 269 SS में limit is 20,000 and 269 ST में limit is 2 lakh rupees. Now, 269 T, particulars of repayment of the loan exceeding in any manner. Are you getting the point? Particulars of the repayment of loan exceeding in any manner. मतलब you made the repayment of loan exceeding the limit. Means exceeding the limit again what? 2,000. But in any manner, via check or demand draft or any case, the name and address of that person, amount paid, and whether squared up or not, and maximum amount outstanding. Particulars of the repayment exceeding the limit of which amount received was via bank draft or check. And particulars of the repayment exceeding limit where the amount is received via check or bank draft but not account pay. So this is, you made the payment by any manner. You made the payment but received the amount via check, but that was not an account pay check. Here you made the repayment exceeding the limit but received the amount via check, which was other than account pay check. Did you get the point or not? Yes or no? See, here you are making the payment in any manner. Here you are making the repayment exceeding the limit, but you received that amount earlier via method other than bank check or other than bank draft. And here you are making the repayment exceeding the limit where you have received the amount via bank or via DD but account pay. तो यहाँ पे normal other than account pay, यहाँ पे account pay, यहाँ पे other than banks and check, and यहाँ पे other than what? Account pay. And here you are making the payment in any manner. Here also the limit is what? 20,000 rupees. Did you all get the point or not? Yes. Now 32A. 32A is brought forward losses or depreciation allowed. This is not allowed under 115 BAA, BAC and BAD. If you have any brought forward losses or depreciation allowance details, then in that case you have to give it in 32A. What is 32B? Whether there is any change in the shareholding came from the last year to the current year, which is more than 49%. If yes, deductions are not allowed to be taken, which means at least 51% of the voting share shall be in the both years to claim deduction. अगर आप कोई deduction claim करते हो, तो make sure that from the last year to this year, your change in the shareholding pattern should not be more than 49%. If it is more than 49%, then in that case, there are some certain deductions which you are not allowed to claim. What is 32C? 32C relating to details of speculation, loss if any furnished. Then details of any specified business or loss incurred in such a specified business under 73A to be furnished. तो ये speculation loss के बारे में, this is relating to specified business. In case of company, whether it is carrying speculative business, if yes, whether they suffer any speculation loss during the year. तो यहाँ पे it was only relating to speculation loss. Here the company is doing the speculation business and suffering a speculation loss. That is 32E and that is 32C. Now, 33. Details of deductions admissible under Chapter 6. 10A and 10AA. If you have taken any special deductions under Section 10A and 10AA, then which section under which you have taken the deduction, qualifying amount, deduction, consecutive years from which the deduction is claimed, and remarks. These are the details you have to give. 34 A, B, C is relating to TDS point. Now see, details of TDS deducted and collected. Whether the assessee is required to furnish the statement of tax deducted and statement of tax collected. Whether the assessee is liable to pay the interest under Section 201(1)(a) and 206(6)(7) late submission of tax to the government authorities. So that all things relating to TDS is going to get covered under 34A, B, C. Details of TDS received, collected and deducted. Whether the assessee is required to furnish the statement of TDS deducted and collected. And if the assessee has not furnished the details or not filed the return with the central government, whether he is liable to pay any penalty or not. Next one, 35A talks about quantitative details in case you are a trading concern. What are the quantitative details? Opening, purchase, sales, closing and shortage. Quantitative details in case you are a manufacturing concern. Manufacturing concern में two details you have to give. Raw material consumed and finished goods produced. Raw material consumed के केस में opening stock of raw material, purchase of raw material, consumption of raw material, sales of raw material, closing stock of raw material, yield of finished goods, percentage of yield and shortage or excess. And in case of finished goods, opening stock of finished goods, closing stock of finished goods, purchase of finished goods, quantity manufactured and sales during the previous year, and closing stock and shortages if any. Next point. Clause number 36. Clause number 36 is omitted. Clause number 36A क्या बोलता है? If the assessee has received any amount in the form of dividend under Section 2, subsection 22, Clause E of IT Act, if yes, furnish the details. 37 क्या बोलता है? कि cost audit has happened or not. If the cost audit has taken place, give the details of any disqualification or the remarks given by the cost auditor. And the focus here is not कि whether the cost audit I'm going to do as a tax auditor or not. Focus is just to ask the management whether cost audit has taken place or not, and focus is on any modifications or reservations or observations kept by the cost auditor. That is clause number 37. Clause number 38, details of excise audit if any has taken place. So 37 क्या था? Cost audit. 38 क्या है? Excise audit. As you all know, excise audit is completely abolished. Next one, 39, details of any audit taken place under Section 72 capital A on valuation of taxable services and the disqualification or disagreements if any kept by the auditor. So this one is relating to cost audit, excise audit and audit under Section 72A. 40, details of turnover, GP, NP, etc. in the following ratios. What are the ratios? Total turnover, gross profit by turnover, net profit by turnover, stock in trade by turnover, material consumed by the finished goods. Clause number 41, details of any demand order or refund issued during the year other than the Income Tax Act or Wealth Tax. If you have got any demand order or refund order other than the Income Tax Act and other than the Wealth Tax Act, if yes, furnish the details. Clause number 42, whether the assessee filed any statement under Section 61, 61A or 61B. What is 61A? Details of party who did not quote PAN while entering the transaction. 61A, any issue of bonds or securities buyback by the listed entity. And what is 61B? Due diligence carried out by the assessee. If yes, any furnish the details. 43, if the assessee or its parent entity or its alternate entity is liable to furnish CBCR. What is CBCR? Country by country report. What is CBCR? Country by country report under the Finance Act 2016. Then if yes, name of the parent party who is furnishing this report, name of the alternate reporting entity who is furnishing this report, and date of furnishing the report. Under Section 286, any international group requires to furnish a CBCR report in India. Tax auditor shall verify whether the tax whose parent is a non-resident has filed form number 3CEAC or not, right? And 44th clause, breakup of expenditures of entities registered or not registered under the GST Act. Now, what are the total information you have to give under 44? Let me tell you one thing. This is very revolutionary clause, and it is supposed to start from 1/4/2022. It means by the time I'm making this video, it has already started. It means from this year, this financial year onwards, when the tax audit will take place next year, you have to give the breakup of all the expenditures of the entities, whether you are registered under GST or not registered. What are the details you have to give? Total amount of expenditure, how much is relating to goods and services under GST, how much is relating to entity under the composite scheme, how much is relating to other registered entities, and how much is the total payment to the registered entities and expenditures in respect of entities not registered. So this is what clause number 1 to clause number 44. I hope I made your journey a little bit easy. It was a contributory video towards your thing, and thank you so much everyone for lending your patient ears. I'll see you guys in the next video. So enjoy and conquer audit with CA Rohit Grover. So do subscribe the channel if you have not subscribed it. Do share this, like, comment and share. Tell me your thoughts, what you think about this video, and do let me know if you are looking for, if your friends are looking for any kind of classes, right or not. Freshly recorded November 22 and May 23 for CA final auditing batch classes are available. My face-to-face batch is also planned in the first week of June in the Hyderabad. So those who want to attend, they can come to the Hyderabad and attend those classes as well. RRB also classes are available. So thank you so much everyone for lending your patient ears. Thanks a lot. Thanks a lot for patiently listening to this video. I hope I made it a little bit contributory towards the end. And make sure that if you really want to buy these handwritten notes, which was a complete hard work did by me, almost 700 to 800 pages of every chapter almost. So you can contact in the description below. The number will be given. So thank you so much everyone. Bye bye. Take care. Okay, somebody please confirm. Am I audible and visible both?
Yes, sir. Good evening.
Yes. Okay. Good evening to all of you. How are you all?
Good evening.
Good evening. Good evening, sir. Okay. So everyone, in the morning session, we almost completed our chapter called audit sampling, right? So we have to do one small topic called data analytics in the audit sampling, and after that, we'll be starting with our another chapter called analytical procedures today, and we'll try to wind it up. Let's see whether we can complete it or not. So in the morning, we had a discussion on the 4 different methods of audit sampling, everyone. What are the 4 different methods? We have the simple random selection method. We have the stratified random selection method. We have the block sampling and cluster sampling. And after the discussion of all these methods, what was our output and what was our conclusion, everyone? Which method is the best method?
Stratified.
Stratified random selection. Why stratified random selection is the best method? Because it gives us an opportunity to select the sample from each and every type of stratum. Am I correct or not? Right, everyone? Chalo. So let me just switch on the chat box, and after that, we'll be starting. Okay, great. Now, so let me just take you to the topic which we are left with in this particular chapter, and after that, we'll start with the next topic. So today we have to finish off this part called data analytics. There is data analytics. Yeah, data analytics. Anyways, about the data analytics, we have to, do it in a very detailed manner when the audit in automated environment will come, which is going to be our next to next topic. Right or not, there we'll understand this in a more detailed manner. But before that, let us complete this thing, data analytics wala point. Now, data analytics is defined as a what? It is defined as a process of inspecting, cleaning, transforming, and modeling data with a goal of highlighting useful information, suggesting conclusions, and supporting decision making. For example, JE testing is a data analytic tool. So basically, guys, what do you mean by data analytic tool is data analytics is all about, like, suppose you are about to select a sample. Am I correct or not? While selecting a sample, only looking at the population, you will read the population in such a manner, you will understand the population in such a manner. Sorry, what happened? Any problem?
No, sir.
Okay, everything is going perfect, right?
Yes, sir.
Yeah, okay. Now, what do you mean by data analytics, everyone? Data analytics means it is defined as a process of inspecting, cleaning, transforming, modeling the data with the goal of highlighting useful information and suggesting the conclusions and what? Supporting decision making. For example, JE testing is a data analytics tool. So basically what while doing the sampling only, we should all understand one fact that at the time of doing the sampling only, we have to read the population in what happened? Disturbance is coming. Archan. Okay, so I'll start it again. No issues. Okay, so what is data analytics, everyone? Data analytics means when we see the population, right or not? In the population, so much of data will be there. Now, by analyzing the population and by analyzing that data only, we should have that kind of experience in our hand. We should be in a position to say that what is to be inspected, what is not to be inspected. Are you getting the point? It means making a choice between the material and immaterial data. Tell me, everyone, for the purpose of the audit, are you going to waste your time on the immaterial data or material data? Tell me, are you going to invest your time in material data or immaterial data? Material data. So, but how you will come to know that whether some data is material or not? So basically, while doing the computerized audit, there I will tell you this practical example. Let me give you one small example today also. Tell me, everyone, where the chances of bad debts are more, the debtors with a less credit period policy or the debtors with a high credit period policy. Means is there are some set of debtors to whom I'm giving only 30 days of credit, and there are some set of debtors to whom I'm giving 6 months of credit period. Now tell me, where the chances of bad debts are going to be higher? More, obviously. So where we are giving the more time for the credit policy, there the chances of bad debts will be higher. But now imagine that you are doing the audit of a company size like Reliance India Limited. Now in the Reliance India Limited, there will be 50,000 to 60,000 debtors. Now in all those debtors, how you will come to know that whether particular data is important or particular data is not important? You will use one tool called data analytics. This is one of the kind of software. Now this software you will apply on the accounting software of your client. And after applying on the accounting software of the client, what it will do, this particular software will start filtering the data what you are looking for. What do you mean by filtering the data? Say for example, I'm interested in those kind of debtors who are in debt with the company for more than 180 days. It means if the debtor has not made me the payment for more than 180 days, chances of recovery are high or chances of recovery are low. Tell me, everyone, in the comment box, chances of recovery is very low. But out of the 50,000 debtors, how I will come to know that which one is a good debtor or which one is a bad debtor or which one is a good debt or which one is a bad debt? So data analytics is a tool which helps in basically filtering the useful information which we are looking for. Are you getting the point or not? And on the basis of that useful information, we will be in a position to draw the conclusions. Are you getting the point? And if somebody will ask me, Rohit, on what basis you are saying that this is your conclusion? That data analytics will help me in getting the evidence also, so that I can support my decision making. Did you all understand? I just gave you the small introduction of data analytics. So basically data analytics is a tool which helps you in filtering the data in such a manner by which you will come to know that which one is a material data and which one is an immaterial data, and you will get the more useful information and the useless information will be filtered. So can I say that it saves your time, effort and energy? Yes or no? Does it save your time, effort and energy? Answer is yes. So this is what was the small topic which we were left with in the data analytics. So with that, everyone, our essay 530 is over. Clear, everyone? So in the 530, if you have any kind of doubt, anybody can ask me those doubts. And if no doubt, then we can proceed to our next chapter called Analytical Procedures. Everyone, anybody is having a doubt? So assuming no one is having a doubt, so let's proceed with the next chapter. What is our next chapter, everyone? The next chapter is Analytical Procedures. Sir, what do you mean by analytical procedures? Let's go back to our main place where we have understood or where we learned this thing for the first time. If you all remember and if you all agree with me, this is the first place where we understood that term called audit procedure. Can anybody tell me what do you understand by audit procedures? What we learned in as per SA 500? As per SA 500, what do you mean by audit procedures, everyone? How many types of audit procedures are there? Tell me, everyone. Two types of audit procedures. Very nice. What are the two types of audit procedures, everyone? There are two types of audit procedures. One is known as RAP and another one is known as FAP. Everyone, what do you mean by RAP? Risk assessment procedures. From the risk assessment procedure, what the auditor comes to know? Auditor comes to know about the ROMUM on financial statement level and ROMUM on assertion level. Am I correct or not? So he'll come to know about the ROMUM on financial statement level and ROMUM on assertion level. Can anybody tell me what are the techniques of RAP we have done? There were so many techniques of the RAP we have done. Inspection was the technique, if you all remember. Observation was one of the technique, if you all remember. We have done one technique called inquiry and confirmation. Right or not? Inquiry and confirmation. If you remember, I told you MRL. And if you remember, we know this one called recomputation or recalculation. Am I correct or not? So these are the various techniques from where we came to know about the RAP. Now, when we came to know about the RAP, after that only we'll decide what kind of FAP, further audit procedures, the auditor has to apply. Am I correct or not? And when we talk about the FAP, everyone, can anybody tell me FAP is further classified into how many?
Two.
Yes, two. What are the two? TOC. First one is TOC and substantive procedures. No. TOC and substantive procedures. Are you getting the point? Now, what do you mean by TOC, everyone? TOC stands for test of controls. TOC stands for test of controls. So, by doing the test of controls, what do we come to know? We come to know about the operational effectiveness of internal control system. Do you all agree with that? Yes or no? We come to know about the operational effectiveness of internal control system. If the operational effectiveness of internal control system is very high, then I will restrict so many things to my TOC only and I will use less substantive procedures. But if the operation, sorry,
Procedure.
if the operational effectiveness of internal control system is very poor, then I will immediately change my focus from TOC to which procedures, everyone? Substantive procedures. Am I correct or not? And if I'm not wrong, in the substantive procedures, you have two. What are the two? One is the substantive analytical procedures. Are you getting the point? Substantive analytical procedures, and one you have TOD. What is TOD, everyone? Testing of details. In the testing of details, further there's a classification TOT and TOB. If you all remember, the same chart we have done in our SA 500. Is it correct or not? Everyone, is it correct or not? Just give me 1 second, everyone. Give me 1 second. My dog is barking a lot, so I'm getting a disturbance. Let me just come. Okay. Everyone, please confirm. Am I audible? Yes? Yeah. Okay.
Yes, sir.
So in the audit procedures under SA 500, we understood this whole chart. Am I correct or not? Now in the whole chart, what we are going to do, if you remember, at that point of time, I completely told you to ignore SAP. Because I told you that for the what do you say, a substantive analytical procedure, I told you that we are going to do it separately. Do you all remember that or not? And if you remember in the chart, I wrote like this also. This one is SA 520. So this will do it in 520 at that point of time. So this is the time now we are going to understand everything about the analytical procedure. So in simple language, if I have to tell you what is SA 520 and what is analytical procedures, everyone, it's a very simple thing. What do you mean by simple thing? Say, for example, it's completely opposite to TOD. If we'll talk about the AP, analytical procedure, it is completely opposite to TOD. Can anybody tell me what do you mean by TOD? I need a meaning, not the full form. Can anybody tell me what do you understand by TOD? TOD stands for testing of details. That we know. Testing of details means what? Do we do the checking from the above only or we go into the detailed manner?
Detail.
Detailed manner. Each and everything we are going to check or not? Yes. So say for example, I can say TOD stands for TOT and TOB. TOT stands for vouching and TOB stands for everyone verification. Am I correct or not? And in the vouching and verification, basically I am going to test what? Assertions. And if you remember the definition of assertions, what do you mean by assertions? I will check existence. I will check ownership. I will check valuation. I will check occurrence. I will check completeness. All these things, if you all remember, I'm refreshing your things. I'm going to check nature, extent, all those things. These are known as assertion. So here we are doing something in detail. But remember one thing, there are so many places in the audit, or there are so many areas in the audit where the TOD is not required. There are so many places in the audit where the TOD is not required. At that point of time, you can easily complete your audit in a less available time with the help of one procedures. That procedures are known as analytical procedures. So let me give you a very simple example. Suppose I want to check my client's liquidity. I want to check my client's liquidity. I want to have an information on my client's liquidity. So everyone, please tell me, if I want to check the client's liquidity, means what? Should I verify its cash balance or should I verify its bank balance or should I calculate the current ratio? Tell me
Current
what
year.
current
Yes,
ratio.
yes.
Everyone, please tell me what is the formula of current ratio? Current assets divided by current liabilities. And if I will compare the current year current ratio of my client with the last 5 years, and suppose this is the answer 3 is to 1, 3 is to 1, 2 is to 1, and 1.33 is to 1, and 0.5 is to 1. This is the current year. Please tell me, look at the last 4 years and tell me, as compared to the last 4 years in the current year, what is the current ratio of my client? Is it increasing or it is decreasing?
Decreasing.
Decreasing. So that shows what? Now tell me, is it completely a positive working capital with my client or it is completely negative working capital now?
Negative.
It's a negative. It's a bad sign. Are you getting the point? Or it means I have only 50 paisa in my pocket to pay my liability of 1 rupee or not. That shows my poor client's liquidity. Are you getting the point? My client's poor liquidity it shows. So tell me one thing. Did I verify each and every cash, how much bank balance they have? No. I simply calculated one current ratio, compared it with the last 5 years. I saw the trend, and from the trend, I came to know about what? Liquidity position of my client. Now, same thing, if I want to check the solvency of my client, everyone, if I want to check the solvency of my client, everyone, should I calculate the current ratio or debt by equity ratio? Debt by equity ratio. Now, in the debt by equity ratio, up to the last year, my client's debt by equity ratio was ranging from 2:1 to 3:1. That is the last 5 years result. But current year में suddenly my client's debt equity ratio is 0.5:1. Everyone, please tell me, what is it indication? Is it a good indication or is it a poor indication? It is a very good indication. Anybody can explain me why it is a good indication? It means I have only 50 paisa of the debt on my head and I have 1 rupee of my equity. It means own funds are 1 rupee and outside funds are only 50 paisa. Am I clear to all of you or not? That shows my client's solvency is going towards a bad manner or it is a good solvency?
Good.
Good solvency. So this is called analytical procedures, everyone. This is what do you mean by analytical? Where you don't have to do something in detail. Just calculate some minor ratios and you will be able to get your results properly. Am I crystal clear to all of you? Yes or no? Yes, this is called analytical procedure. Like, say for example, another practical example. Say for example, there are 40 employees at my client's place. Am I correct or not? And he's showing 13 lakhs, or you can say 1 crore 30 lakhs of what? Or you can say not 1 crore 30 lakhs. You can say that he's showing, you can say that he's showing 1.5 crores. 1.5 crores of salaries and wages. Is showing 1.5 crores of salaries and wages. Now tell me one thing. Do you have to calculate each and every employee's salary into each and every month? That is the one method by which you can do the detailed thing. You will tell to the company, show me your client register. Oh, sorry, show me your employee register. In the employee register, 40 employees are there. How much salary you have paid to each employee each month? Like that, you will verify each and every pay slip. And after that, you will come to the conclusion, okay. I can agree that it is 1 crore 50,000. Or can I say that simply you just ask one of your manager, what is the average outflow per month goes from your pocket? He said that, sir, average outflow is approximately 16 lakh rupees per month we pay to our clients. 16 lakh rupees per month we pay to our employees. So 16 lakh rupees into 12 months, guys, how much? 16 lakh rupees into 12 months, how much, everyone? Approximately it is coming to, if I'm not wrong, 1 crore 72 lakhs. Am I correct or not? If I'm, no, 1 crore 92.
92.
Yeah, 1 crore 92 lakhs. Are you getting the point? 1 crore 92 lakhs. Now, please tell me, what is the difference between the debit and credit? How much they are debited actually?
1 crore 50 lakhs.
And how much is actual according to their point of view?
1 crore 92
Now
lakhs.
tell me, is it a reasonable difference or not? Yes, it is a reasonable difference. What is the difference, everyone? Approximately 42 lakhs of difference is coming, guys. Approximately 42 lakhs of difference is coming. Now tell me, Do I have a right to question that to the employee or not, to the client or not? Yes. So I asked him why this difference of 42 lakhs is coming, why you have underpaid 42 lakhs, where is this 42 lakhs? It should be debited and I'm nowhere able to see any kind of debit. Then he told me that, sir, 3 of the employees left after 6 months only. 3 or 4 of the employees left after 6 months only. Like that, he gave me the, shown me the evidence and all. And I immediately came to the conclusion, within half an hour, the things got sorted. And that is how we use the analytical procedure. Are you getting the point? So sometimes going into detail is going to waste your time. I'm not saying that it is complete waste technique. No, there are some areas where the analytical procedure is the best method, and there are some areas where the TOD is the best method, and there are some areas where the good combination of both of them, TOD as well as analytical procedure, both are required. But again, it all depends upon whose judgment, everyone? Auditor's judgment, whether he wants to go for TOD or he wants to go for what? Analytical procedure. Now, what do you mean by analytical procedure? Now, let's say for example, you are the auditor of Vodafone. You are the auditor of Vodafone Idea company. And you see that ki Vodafone Idea is only earning 8% of net profit. 8% of net profit it is earning. Are you getting the point or not? Whereas as per the market research, every telecom company should earn at least 25% net profit. And when you checked it with whom? When you checked it with Airtel, when you checked it with Jio, Airtel is earning 30% and Jio is earning 32%. Now tell me everyone, who is going as per the market and who is completely going in the opposite direction as per the market?
Vodafone is going
Yeah.
completely going to
Yeah.
opposite to the market.
Airtel is getting 30%. Jio is getting 32%. Industry rate is going on 25%. Whereas the Idea Vodafone is able to only fetch how much? 8%. It means there is some problem with the internal control system or the functioning of Idea and Vodafone or not? Yes.
Yes.
This is called analytical procedure. And what I told you just now, called interfirm and intrafirm comparisons. Did you all understand the point or not? Yes. So there are some areas where the testing of details is can be there, but it is not required. At that point of time, you can save your time. And how you can save your time? You can save your time by using the which procedures, everyone? Analytical procedures. So in this chapter, we are going to understand that thing only. I hope introduction of the chapter went inside your head or not. Yes, everyone? Yes. So if there is any doubt, you can ask, or if there is no doubt, we can start with our concept number 1. Okay, so assuming that there is no doubt, so we are starting with the meaning of analytical procedures. Everyone, please try to understand each and every word written in front of you. We are going to start with the meaning. Since routine checks cannot be depended upon to disclose all the mistakes and manipulations that may exist in the accounts, certain other procedures also have to be applied, like trend and ratio analysis. Did I tell you the same thing or not? It is not always possible to say that, it is not always correct to say that ki TOD will give you the best result. Sometimes the trends, sometimes the ratio analysis will give you the better result as compared to TOD. Do you all agree with me? Yes or no? That is what is written in the first 2 lines, everyone. These collectively are known as overall test. Analytical procedures have acquired a lot of significance as a substantive audit procedure. SA 520 on analytical procedures discuss the application of analytical procedure during an audit. So nowadays it is becoming very popular because you all know that today's auditor is having a time or not having a time. Tell me everyone, today's auditor is having a time or not having a time? He's not having a time. So when today's auditor is not having a time, then in that case, don't you think that analytical procedure is a blessing for him? Yes.
Yes.
Are you getting the point? So it is one of the most important substantive procedure which is nowadays becoming very popular because today's auditor does not have sufficient time to do an audit or ample of time to do an audit. Clear everyone? Yes, sir. As per the standard on auditing 520, what is analytical procedure? It means evaluation of financial information through analysis of, what is this word everyone? Plausible relationships. What do you mean by plausible relationships among financial and non-financial data? Remember one thing, analytical procedures are not going to be applied only on the basis of financial data. It also takes into consideration financial as well as non-financial data. Are you getting the point or not? But whatever the data you are using, there should be a plausible relationship among them. Now let me ask you one thing. While calculating the liquidity of the company, did I use the debt by equity ratio method or current ratio method? Tell me everyone. While calculating the liquidity, did I use debt by equity ratio or current ratio? I use the current ratio.
Current ratio.
Why I use the current ratio? Because current ratio formula is what? Current assets divided by what? Current liabilities. Now current assets and current liability means what? These are those assets and liabilities which are easily convertible into cash within a span of maximum life is 12 months. Am I correct or not? That is what the major difference of, that is what the major definition of the current assets and current liabilities. Are you getting the point? So while calculating the liquidity, why I chose current ratio? Because current ratio will give me the better idea about the liquidity of my client rather than calculating via debt by equity ratio. So there should be a plausible relationship among the financial and the non-financial data. Are you getting the point or not? Now everyone please tell me, should I say that the accounting system of every entity should be highly strong? Tell me, how many of you agree with me? The accounting system of every entity should be highly strong and highly competent. Yes or no? Yes, it should be highly strong and highly competent. So that is called financial information. But my question is, who runs the accounting system? Is it the computers or is it the human resource runs it? Human resource.
Both.
Yeah, both. So if I'm saying that if the accounting system you expect to be very much strong, at the same point of time your human resource also should be very much qualified and competent or not? Yes or no?
Yes.
Yes. So you have a financial and non-financial data, you establish some plausible relationship among themselves and you get a what output? You get what? You get analytical procedures. So everyone, what is the definition of analytical procedure? Analytical procedures is an evaluation of financial information through the analysis of plausible relationship among what? Financial as well as non-financial data. Analytical procedure also means includes investigation as is necessary for the identified fluctuations and relationships that are inconsistent with other information that differ from the expected values by significant amount. Now, my question is very simple. What was the example we have done just now? We did one example that there are 40 employees and they debited 1.5 crores on the debit side of their P&L account as a salaries and wages. When we calculated, say for example number 1, when we calculated, my calculation is saying it is 1.52 crores. But case number 1, my calculation is saying it is 1.52 crores. Now tell me, is it a very significant difference or very small difference is there? It's a small difference. It is manageable. It is what? Manageable. But when my actual what do you say, testing of details, when I did the testing of details, I came to know that it should be it is 1.92 crores now. Now tell me, is it a significant difference or it is a huge difference? It is a small or huge one? Huge one. So that is what analytical procedure is all about. Analytical procedure helps you in identifying the differences between your expected results and actual results. If the expected results and actual results are near to each other, then it's okay. But if it is far away from each other, means what? There is a huge difference, then it is okay or not okay? Not okay. So when it is not okay, do you have to start or do you have to apply your PS or not? What is PS, everyone? Professional skepticism. Do you have to start applying your questioning mind in that case? Yes, you have to start applying your questioning mind in that case. Everyone, Crystal, yes, 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 Komal. It's like a tolerable misstatement. Yes, it's like a tolerable misstatement. So little bit of 1 or 2 lakhs of difference I can manage. Okay, there might be ups and downs, but now the difference is 42 lakh rupees. That is something which is eye catching. So definitely I have every reason to go to the management and ask them about this ROMUM. Am I correct or not? This is what do you mean by analytical procedure, everyone. Any doubt in the page number 1, or there is no doubt in the page number 1? Everyone, please confirm in the comment box if anybody is having a doubt so far, whatever I have told. If no doubt, we'll move to the next page. Write in the comment box, please. No doubt. Okay. No doubt. Okay. Great. Great. So it means you understood what analytical procedures. It's a very simple thing, sir, in single word, where you can save your time, save it by using the which procedures? Analytical procedures. Where you think that analytical procedures are not possible, then the definitely second option is always there with you. TOD. What is TOD, everyone? Testing of details. But where you can save your time, better to save your time, apply your brain and establish some relationship between the transactions and use the analytical procedures at that point of time. Clear, everyone? Now, examples of analytical procedures having consideration of comparison of entities' financial information, which are comparable information for the prior period. Did I do the same thing while checking the liquidity of the company or not? Did I calculate the current ratio of 1 year or so many years? I calculated the current ratio of so many years. So when I calculated the current ratio of so many years, when I compared them with the previous years, did I come to know that whether my client is getting liquidity wise better or whether my client is getting liquidity wise poorer? Am I correct or not? I hope you understood the example number 1. Yes. Okay. Second point. Anticipated results of the entity such as budgets or forecast or expectation of an auditor such as estimation of depreciation. Analytical procedure basically is a completely estimation based. So you can say that like the management puts the estimations, while calculating the provision for doubtful debt or while calculating the provision for taxation. Analytical procedure is also an estimation based tool which the auditor uses. Like say for example, if you all remember, what is the depreciation rate for a machinery as per the Income Tax Act? Plant and machinery mein
15%.
15%. So if you know that 10 crores of plant and machinery is there, and if this plant and machinery was same last year, so 10 crores ka approximately 15% if you'll calculate, can I say that it is 1.5 crores depreciation or not? This is called estimation. But when you actually saw it, it was written 1 crore 55 lakhs, something like that. Are you getting the point or not? Little bit up and down is allowed. But if it is being debited as 2 crore rupees, then the difference is higher or lower? Higher. Then in that case, you should apply your PS. What is PS, everyone? Professional skepticism. Did you get the point? This is what analytical procedures. Similar industry information. Now tell me, while calculating the, while passing the judgment on the Vodafone and Idea, did I compare the Vodafone and Idea with the industry first or not? Yes, I compared the Vodafone and Idea with the Reliance India Limited or with the Reliance Jio? Jio. Why I compared the Vodafone Idea with the Reliance Jio? Because both belong to the which industry? Telecom industry. Are you getting the point? So that is what all about. Are you getting the point? So you should know, you should calculate the industry averages, and by calculating the industry averages, compare it with your client. If your client is meeting the criteria, it's fine. If not meeting the criteria, it means you got your answer ki some problem is there. Now, like in the Geo, it was earning more than industry rate. Airtel, it was earning more than industry rate. But what was our Vodafone and Idea? Were they in the same direction or opposite direction? Opposite direction. It means some problem is there. Some areas are there. It means you already got an idea ki yes, ROMUM is definitely there. Did you get the point or not, everyone? This is what do you mean by which procedures? Analytical procedures. Anybody is having any kind of doubt so far? If no doubt, I can proceed to the next one. Clear? Okay. Now, say for example, tell me everyone, salaries and wages is a financial information or non-financial information? Salaries and wages is a financial information or non-financial information? Financial information. But number of employees is a financial information or non-financial information? Non-financial information. But do they have any kind of relationship with each other? Yes, that is called which relationship, everyone? Plausible relationship. Did you all understand the point or not? Now tell me, to understand the salaries and wages of the company, should I also know the number of employees or not?
Yes, sir.
Yes or no? This is what do you mean by which procedure, everyone? Analytical procedure. Crystal clear? Any doubt or no doubt? No doubt. So that now, why I gave you this example right now? Because like that, so many examples are going to come in the over the period of time. Remember one thing, this is a very simple standard. The more and more you will make it difficult, that is a different issue. But it is a very simple standard. One word standard, save your time. That's it. In case not possible, go for TOD. Otherwise, save your time with what? AP. What is AP, everyone? Analytical procedures. Make some plausible relationships between the financial information data and the non-financial information data and try to do the evaluation of the financial information on the basis of that relationship. Clear? Now, various methods may be used. What they are saying in this point, various methods may be used to perform analytical procedures. These methods range from performing simple comparison to performing the complex analysis. Using advanced statistical technique, analytical procedure may be applied to the consolidated financial statements, components, and individual elements of information also. Acha, everyone, please tell me one thing. Suppose this is a Reliance group. Give me the answer, everyone. It is a Reliance group in which Jio is also there. Reliance India Limited is also there. Reliance Fresh is also there. And Reliance Trends is also there. The total profits of the Reliance is 40,000 crores. This is the group profit. This is the group profit. Can anybody tell me, out of these four companies of Reliance Group, which one is a profit making, which one is loss making, just by looking at 40,000 crore rupees of group profit? Can you tell me which one is a profit making company, which one is a loss making company? Can you tell or you can't tell? You can't tell. Why you can't tell? Because do you have their individual data or you don't have their individual data? You don't have their individual data. Now my question is, now this is called consolidated financial profits. This is called consolidated financial profits. Until and unless you don't check out their standalone financial statements, will you come to know that which one is a profit making subsidiary and which one is a loss making subsidiary? No, that is also known as analytical procedure. Did you get the point or not? That is also known as analytical procedure. So from there also you will only come to know when you will check out the individual components, each and every one. Did you get the point or not? Yes. Now see, therefore, we can say that analytical procedure may be segregated into major types as comparison of client with the industry data, comparison of client data with the similar prior period data, comparison of client data with the client determined expected results, comparison of client data with the auditor determined expected results, comparison of client data with the expected results using the non-financial data. So there are, what is being written here, everyone, try to understand. There are 5 different methods of comparison. How many methods we are going to learn now? 5 different methods of analytical procedure comparisons. If you all can remember, then please help me in writing. Anybody can unmute? Point number 1. Can we compare the client data with industry data? Will we get some results or not? Yes. If we'll compare the client data with the industry data, we'll definitely get some results. If we'll compare the client data with the client's expected results, if we compare the client's actual results with the client's expected results, will we come to know what the differences are not? Yes. If we compare the client's data with the auditor's expected results, then also we'll get some idea or not? Yes. If we'll get the client's data, if we'll compare the client's data with what? If we'll compare the client's data with what? Just now we have done 5 points or not? If we'll compare the client's data with what? Prior period. Client's data with what? Prior period data. Then also we'll get an idea. And if we'll compare the client's data with the client's expectations by using non-financial information, then also we'll get the doubt. So there are total 5 types of comparisons you can do. How many types of comparisons, everyone? 5 types of comparisons you can do, by which you will definitely... No. Second one is not same as the fifth one. Fifth one may we are doing the client's expectation comparison with its client's actual comparison, but by using the which information? Non-financial information. In the point number 2 may we are using the financial information. No need to write, because generally we do not write the word called financial information. Clear, everyone? So everyone again read this paragraph again. Read this paragraph from thus we can say that. Everyone, please read this paragraph from thus we can say that. Thus we can say that the analytical procedures, I'm talking about this paragraph, everyone. Please read it from here. Thus we can say that analytical procedures may be segregated into these 3 major types of comparison. Client with industry data, client with similar period data, client with the client determined expected results, client with the auditor determined expected results, and client with the expected results using which information? Non-financial information. So did you all understand? Did I write the same thing or not? Yes. So 5 comparisons: client data with the industry data, client data with the client's expected results, client data with the client auditor's expected result, client data with the prior period data, and client data with the client's expectations, everyone. Right or not? Now, what is the purpose and timing of analytical procedure? That we have to understand. Acha, tell me, everyone, why do we do the analytical procedure? Tell me the purpose of analytical procedure. What is the first thing comes to your mind which helps you in giving the answer ki why we should do the analytical procedure? Everyone, please give me the answer in the comment box. Or if you want to unmute and please give me the answer. Yes, Harish, very nice. To save the time. And at the same point of time, can I say that to reduce the workload? Yes, to find out the trends. Am I correct or not? So there can be so many purposes. Everybody might be having their own reasons why I should. You can say that I'm not having that much of time in doing the audit. So to save my time, I may do the analytical procedure. So it can be one reason to somebody's else reason. Now, what is the purpose of analytical procedure? Let us understand now. And if there is any doubt, please let me know immediately. For instance, establishing the relationship that exists between the certain balances included in the balance sheet and statement of P&L account, comparing them with those existing between same set of balances in the previous year, recording the physical balances of assets with the relevant financial record, obtaining an account from the bankers, account receivable, account payable, reconciling with the relevant balances in the books of account, confirming amounts of outstanding income, expenditures by preparing reconciliation statement, etc. These are helpful in detection of unusual state of affairs and mistakes in the accounts. So I will ask you a very simple thing, guys. No need to read this big paragraph. Just tell me one thing. What do you understand by BRS? Everyone. Bank? Yes, bank reconciliation statement. Can anybody tell me how do we do the BRS? If anybody is having an idea. Yes. Are we going to compare the company's bank account with the actual bank statement or not? So bank balance as per the bank will be compared with the bank balance as per the books. Now, there will be so many adjustments. What are the 2 types of adjustment basically? Checks deposited but not cleared. Checks deposited but not paid. Are you getting the point or not? plus and minus, plus and minus, plus and minus will do. And ultimately, if the balance is matching, then in that case, it is known as a good bank reconciliation statement. Am I correct, everyone? Yes or no? Yes. So basically, BRS is nothing but the analytical procedure only, na? BRS is nothing but the analytical procedure only, na? Now, say for example, if I want to say that in my household during the pre-corona time period, at that point of time, I was able to save only 50% of my total income of the month. But during the corona time period, I'm able to save 65% of my monthly income. Now tell me, what does that analysis shows? Am I able to save more during the corona or am I able to save less during the corona? What is the reason? What can be the reason? What can be the probable reason for that? Traveling expenditure, food expenditure. Due to the outside food, we have stopped eating outside food. Due to that, our expenditure on the food and expenditure on the traveling increased or decreased? Decreased. So 10 to 15% that change has come or not? Yes. This is also known as what? Analytical procedures. So analytical procedure is not only an audit technique. Analytical procedure is basically our day-to-day technique. Sir, BRS is not necessarily to be made right. I mean, nowadays, due to internet banking, BRS utility is reduced. Yes, I could just give you the example. Nowadays, though, BRS is no more a manual item now. BRS is completely a computerized thing. Are you getting the point or not? Within a single second, you will come to know that where the changes have come, and everything is getting updated on real-time basis. You will get a message as and when you get the message, okay, you will put the entry which was pending entry, receivable became received and payable become paid. Am I correct or not? Yes. So that what brings an end to our page number 2 also, everyone. If there is any doubt in this page, please let me know. If no doubt, that we can move ahead. It's a very simple chapter. Obviously, little bit boring, but at the end of the day, it is a part of your portion. And why I'm reading each and every word in front of you? Reason is very simple, because you never know from which line they may ask you the MCQ question. So it's very much important from me and as from your point of view that we should read each and every word given in front of us. Now,
Sir,
yes,
in the example, the pilgrimage of inventories.
sorry, with example.
In previous examples, XYZ Limited.
Okay. Previous example. Okay, in the XYZ Limited, after applying analytical procedures as comparison of the gross profit ratio with that of the previous year, it is discovered that there has been fall in the ratio. Therefore, it became necessary for the auditor to make the further inquiries as may be due to the pilferage of inventories or misappropriation of a part of the sale proceeds or change in cost of sales without corresponding increase in the sales in price. It's a very simple example, my friend. Here they are saying, what is your name?
Leo.
Yeah. Now see, try to understand what they are saying that. Tell me one thing, what is the formula of the GP ratio? Gross profit divided by sales into 100 or not?
Yes, sir.
Yes. So gross profit divided by sales into 100 of the current year, it was 35%, say for example. Last 5 years mein, it was average 40%, means 40% or above. Now tell me, this year decreased or increased?
Yes,
Decreased. Now, will you get a doubt in your mind ki yes, I should make a inquiry to my client ki why this has been decreased? Yes or no? So what
Yes.
can be the reasons? What can be the reasons of decrease? Tell me one thing. Gross profit comes in the trading account or not?
Yes, sir.
Yes. So trading account mein what kind of items are coming?
Yes, sales.
Yes. So tell me, it can be undervaluation of the sales. Reason can be?
Yes, sir.
Yes. Reason can be undervaluation of the closing stock also.
Yes, sir. Maybe.
Reason can be loss of the stock also.
Yes, sir.
Yes. Reason can be overvaluation of the opening stock also.
Yes.
Reason can be over recording or duplication of the purchase invoices also.
Yes, sir.
Yes. So there can be so many reasons. So what is the meaning of this example? Via this example, the lawmaker is trying to tell you that analytical procedures helps you in getting a base via which you can start asking the doubt or start asking the queries to your client. Are you getting the point or not? Which sometimes is not possible even if the things are there in front of you. Doing the test of details, first of all, is a consumption of a lot of time. After that, if you will not get any kind of output, there will be a lot of irritation in the auditor's mind. That's why auditor first try to use the analytical procedures, and via analytical procedure, if he's getting such kind of, it's a very simple thing. In last 5 years, you are having the 40 or 50% of gross profit. Why suddenly it went down to 35%? I have every duty to ask these reasons to my client. Am I correct or not?
Yes.
The change in COS without increase in sale price means where it is written change in cost of sales without the corresponding increase in sales price. अरे cost of sales मतलब inflation came ना, raw material cost increased. Correct or not? Are you getting the point or not? Raw material cost increase. Now tell me one thing. It's a very simple thing. Due to the lockdown, so many things stopped getting manufactured. Due to that, so many things in India got already reasonably high. Are you getting the point? So that you can't control. And at the same point of time, government has fixed some prices of what? Essential commodities. Am I correct or not? Sometimes even though the price of the essential commodities is very high in the market, but you will still get it at the same selling price because government bears that loss. That is called increase in the cost of sales, but without increasing what? Sales price. Clear everyone? Any doubt or no doubt?
No, sir.
No doubt. Okay. Now, next thing what we have to understand, these are nothing but the examples only which are given. So let's read some examples so that you will get an idea. Okay, what do you mean by analytical procedures? Now, example number 2. On verifying the balances of sundry account receivables, means debtors, by obtaining the confirmation of their statement of accounts, it will be possible for the auditor to find out whether the discrepancies in the balance of an account receivable is due to the failure to debit his account with the cost of goods supplied to him, or is the result of non-adjustment of remittance received from the thing. Now, say for example, what is this example? They are saying that suppose there is one debtor. Say for example, there is one debtor, and that debtor's balance in my books of account, it is showing 5 crore rupees. But when I send the PCR, everyone, what is PCR NCR? Do you remember in SA 505 we have done? PCR NCR, positive confirmation request or negative confirmation request. When I send the PCR and NCR, that particular debtor send me a reply that in his books of accounts, it is showing 4.5 crores only. Tell me, matching or mismatching? Tell me everyone, matching or mismatching? Mismatching. And how much mismatching? 50 lakh rupees mismatching. What can be the probable reasons, everyone? What can be the probable reasons of due to mismatching? The probable reason is very simple. I thought that I sold him the goods at 500 rupees per kg. But actually I sold him at 450 rupees per kg. I recorded at 500. Now tell me, did I over record the debtor or not? Yes or no? Yes. Or there can be another reason. There might be a possibility that 3 days back he came to my office and paid 50 lakh rupees, but I did not make the entry so far. Now tell me, if I did not make the entry in my books of accounts, is it still 50 lakhs of debtors or not? Or it is reduced? I did not make the entry so far. It will still show the 5 crores or not? Yes. So there can be, so by doing the analytical procedure, by doing the, taking the confirmation from the party directly, sometimes you automatically get an answer ki what can be the probable reason for that. So these are nothing but the examples which have been sorted for you to make you understand that what analytical procedure is all about. Let's say the another example. Similarly, it would be possible to compare the balances of the on the statement of P&L account with that of previous period. It would be possible to find out the reasons for increase or decrease in the amount of profits of those years. Yes, very much possible. By setting up certain expenses ratio on the basis of the balances included in the statement of P&L for the year under the audit, comparing them with the same ratios for the previous year, it is possible to ascertain the extent of increase or decrease in the various items of expenditure. I will ask you a very simple thing, guys. Very, very simple things. Tell me one thing. Suppose this is a P&L. In the P&L, repairs and maintenance is increasing year by year. It is what? Increasing year by year. Now tell me, how you will come to know that it is increasing year by year? What you will do? Say, pick up any two figures. Repairs and maintenance divided by net profit into 100. Some ratio will come or not? Repairs and maintenance divided by net profit into 100. Some figure will come or not? Now, that percentage you will calculate for the current year and calculate it for the last 5 previous years. If in the last 5 previous years the percentage is increasing, and increasing, what is your interpretation of increase in the repairs and maintenance? That is it the time? Is it the time that the plant and machinery is getting new, or plant and machineries are getting older day by day? Older day by day. And when the plant and machineries are getting older day by day, and their repairs and maintenance will decrease, or repairs and maintenance will increase? Increases. That is a simple interpretation. Are you getting the point or not? That is what they're trying to tell you. Ki you can do the analytical procedure, or you can simply apply the analytical procedure in any kind of situation. You should know how to apply it. Are you getting the point or not? Next example. An abnormal fall in the cost of manufacture, or that in the administrative cost, apart from the economy in the expenses, there could be no provision or less provision for expenses incurred in the year. When it is suspected, the auditor should compare the entries in the outstanding book with those in the previous year. He must also check the vouchers for 1 month immediately before the close of the following year to verify that none of the expenditure in the accounts under audit have been charged to accounts of the following years. Now, very simple examples, everyone. You all know there is one concept called cutoff procedure. Can you please tell me what do you mean by cutoff procedure? Is anybody having an idea about the cutoff procedure? What do you understand by cutoff procedure?
Minimum that much will happen.
Sorry?
Minimum that much will happen.
Minimum what? I didn't
get. Expenses will happen in future.
नहीं. Cutoff procedure का मतलब क्या होता है? Tell me one thing. Tomorrow the cutoff procedure. Yes. Tomorrow the cutoff procedure is going to happen. Everyone, please tell me what is the date going to be tomorrow?
Year end.
Year end. Tomorrow is going to be the year beginning. Today is year end. Am I correct or not? Tomorrow, is it going to be the 1st April or not? Yes. But tell me one thing. Does it matter to your father or mother who is doing a business, whether it is 31st March or it is 1st April? No, it doesn't matter to them. For them, it is a business day. It's a continuous process, because business is a continuous process. But when it comes to auditing, does it matter or not? When it comes to auditing, does it matter or not? Yes. So why does it matter for the auditor? Whether the auditor will allow your mother and father to record the entries of the next financial year in the 2021 financial year? No. So for the auditor, it matters. But for your businessman, it doesn't matter. That is also called analytical procedure. Are you getting the point or not? Now, let me give you one example. It's a very simple example, everyone. Today is 31st March and 9 o'clock, my business shut down. It means I do not take orders after 9 o'clock. I was about to switch off my computer, 8:45. One mail comes and one call comes. He says that, sir, 50 lakh of purchase is there. Are you getting the point? It means I am selling and that person is buying. I told him, sir, delivery will take place on 7th April. I can't make you the delivery today, and for the next 6 days my labor is off. Therefore, delivery will take place on 7th April. He said, it's okay, sir. No need, no issues. Delivery, I'll take it on 7th April, but you please send me the invoice immediately. I immediately opened the tally, made a sale of 50 lakh rupees, sales, debtors account debited to sales, and made the invoice, signed it, and immediately mailed him. Tell me, is this a sale of 2021 financial year or is this a sale of 21-22 financial year?
2020.
Now, possession is going to be delivered on 7th April. It is just that I created the invoice and sent it on mail. Tell me, is this the sale of current financial year or next financial year? Everyone write in the comment box. Is it a sale of current financial year or next financial year? Next financial year. Okay. How many of you say that it is current financial year? Anybody who would like to give me the answer? Is it a part of current or next? Please unmute yourself and tell me. How many of you think that it is a current financial year, not next? Komal to saying, I think Komal only, right? Komal only has given the answer. It is next. First of all, to tell me, did you all understand this example which I told you? Yes. So Komal, you are saying it is the next financial year. Can you please tell me, Komal, why? Unmute yourself and tell. Possession and ownership transfer in the next year. How many of you agree with the Komal's answer? She's saying that possession and the ownership is getting transferred on 7th April. Is she correct or she's wrong?
Correct.
So you also agree that it is a sale of next year. Okay. Anybody who can prove me or say me that why it is not a sale of next year, why it is a sale of current year? Anybody would like to say that? It's a very logical answer actually. Any,
Invoice based
yes, what's your name please? Tell me.
saving.
Okay, please tell me. What's your answer?
Made in the month of March.
Yeah, everyone please try to understand. How many of you know AS9? What is AS9? AS9 talks about revenue recognition. Am I correct or not? Everyone please tell me. AS9 talks about revenue recognition. And what do you mean by revenue recognition, everyone? Revenue recognition का मतलब क्या होता है? Once the risks and rewards in the property are transferred to the seller, irrespective of its possession, sale shall be recognized immediately. Am I correct or not? Until and unless there is a chance of irrecoverability of the same in the future. Is it what AS9 talks about or not? Tell me one thing. Did I already make the invoice and sent it to my client or not? Tell me everyone. Did I already make the invoice and sent to my client or not? Yes. And remember one thing. The moment you made the invoice, the risks and the rewards in those goods have already been transferred, Komal. Did you understand? Ownership, risks and rewards are already being transferred. Only possession is pending, Komal. Are you getting the point? Only possession is pending. So due to that, it will not be the sale of 21-22 financial year. It will be the sale of 2021 financial year. This is called analytical procedure. Did you all understand or not? How many of you understood this example? Please write in the comment box those who understood. Please write yes. Did you understand the point? Because AS9 said, now tell me, is there any chance of irrecoverability? No. He has already transferred the payment to me. I have already sent the invoice to him. Only one thing is left. What is that? Only the possession is going to take place. So that possession will not decide whether it is a revenue of next year or this year. It is a risk and rewards in the things it will decide whether it is next year or current year. Crystal clear, everyone? So like that, so many examples are given. Now, often it is possible to independently verify the correctness of some of the items of the expenses included in a statement of P&L account. For example, cost of importing goods, which are subjected to an ad valorem duty at uniform rate, can be verified from the amount of duty paid. Similarly, a quantity of sugar sold by the sugar mill can be verified independently from the amount of excise duty paid. Thus, it is important to note that analytical procedures may identify the existence of unusual transaction or events and amounts ratios trends that might indicate matters have been audit implications. Unusual or unexpected relationships that are identified may assist the auditor in identifying the ROMUM, especially the ROMUM due to what? Fraud. Are you getting the point? Let me give you one example, everyone, so that you can understand it. I think this example I already. Acha, tell me one thing, guys. There is a lots and lots of profit, but company is not paying dividend. And situation number two, there's a less and less of profits. Company is still paying the dividend. Why? Can anybody analyze the situation? There were lots and lots of profits, but the company did not pay even a single rupee of dividend. But when there were losses and losses, no profits at all, very minute or minor, or you can rather say negligible profits were there, but still company was paying the dividend. Why?
First one, there may be a capital gain.
There may
compared
be
to
a
profit and loss.
okay, there may be a capital profit. Opportunities exist in the first one. Can you elaborate, Komal? What's your name? Sorry, I didn't get your name.
No, right.
Okay, okay. So you are saying that there may be a capital gain in the first one. That's why they were not paying the dividend. And why the hell they were paying the dividend when there were no profits? Why company would like to pay the dividend even if they can't afford to pay it?
Company make a keep a reputation.
Yes. So tell me one thing, whether the trust and confidence of the shareholder is very important or not.
Yes.
Whether, can I say that in the case number two, they were trying to, what do you say, maintain that trust and confidence only?
Yes.
But let me tell you one thing, it is a clear-cut case of fraud, everyone. It's a clear-cut case of fraud, everyone. Why it is a clear-cut case of fraud? This is what has happened in the Satyam scam. If you all remember, do you all have an idea of Satyam scam? Satyam scam, Satyam Computers. It was
Yes.
one of the biggest corporate scam in India. That is what he did it for 8 years. From 2000 to 2008, everyone. He did not even make a single profit. But still he was issuing the dividend to all the shareholders. What is the reason? Because inside he was eating the shareholders' money. But shareholders are fool fellows. They were getting happy with what amount?
Dividend amount.
Dividend amount only. So they kept their mouth shut. Ultimately, by the 2008, when the whole money was consumed by the Ramalinga Raju, at that point of time, the owner of the Satyam Computers, later on he came to the public and said that I did a fraud of 57,000 crore rupees. Now tell me, now the things can be returned to back into the normal situation, or the damage is already done?
Already done.
So tell me, what was the intention of Ramalinga Raju was here? Was it an unintentional mistake or it was an intentional fraud?
Intentional.
That is what the auditor always have to be alert. He has to see these kind of things. When there is a lot of dividend, when there is a lots and lots of profits in the last 4 or 5 years, you did not pay even a single dividend. Why? Because that time they were eating the money. Are you getting the point? But when there are lots and lots of losses are there, why you are paying the dividend? Because they want to maintain the trust and confidence so that they can like make the fool out of the shareholders, so that the things will not come in public. These are all known as nothing but called as what? Frauds and errors, everyone. Did you get the point or not? This is another example of analytical procedure where your brain is required to be used. I hope all of you understood the purpose of analytical procedure, everyone. Did you all understand the purpose of analytical procedure?
Yes, sir.
Yes. So now we are going to understand timing of analytical procedure. On what time the analytical procedure must be applied. Now see, Analytical procedures are required in the planning stage. It is often done during the testing stage. In addition, there are also required to be done at the completion stage. The lawmaker is a very useless fellow. He simply can say that it is required at every stage. Now see, what is the timing of analytical procedure, everyone? Is it required at a planning stage? Yes. Is it required at the execution stage? I will come back to you. Yes. And it is also required to be made at the time of what? Completion stage. Okay, everyone, please tell me how you can justify that the analytical procedure is required in the planning stage. Tell me, everyone, did we apply RAP first or not? Everyone, please tell me yes or no. Just keep on telling yes or no. Did we apply RAP or not? Yes. From the RAP, we come to know about what?
Romum.
Romum. Romum helps us in understanding whether to go for TOC or whether to go for substantive procedure. Am I correct or not? Now tell me, this is nothing but called what? Which procedure? Analytical procedure. So can I say that planning stage is justified now? Yes or no? Yes, planning stage may justified now. Now, my question is, how analytical procedure is used at the execution stage? Just now I told you, while verifying the books of accounts, you will calculate some GP ratio. And if the GP ratio of the current year is very less as compared to the previous so many years, what can be the probable reasons, everyone? If the gross profit ratio of the current year is very much, what do you say, different from the previous years, very much less from the previous years, what can be the probable reason of that?
Underestimate the sales.
Hmm.
Poor valuation of stock.
Yes. So tell me one thing, is it execution stage or not? When you are doing the audit, right? Yes, yes, Komal, it can be economic conditions also. Next one, completion stage. Everyone, please tell me, am I going to check the liquidity and the solvency of the company at the planning stage, at the execution stage, or at the completion stage? Completion stage only. Now tell me, completion stage means it is the time to give the conclusions or not? Yes, it is time to give the conclusion. Audit is over. So at that point of time, in my auditor report, I would like to talk about the liquidity, solvency. So at that point of time, you need to do the analytical procedures at the completion stage as well. So remember one thing, like planning. Everyone, please tell me, planning is a one-time process or planning is a continuous process?
Yes.
Continuous process, and it is also flexible process. Does it keep on changing at every stage or not? Yes, same is the case with the analytical procedure. So analytical procedure का timing बताओ. If they will ask you that question in the examination, what is the timing of analytical procedure? What you will write? The timing of analytical procedure is what? Planning, execution, and what? Completion. So it is required at planning phase also, testing phase, execution phase also, completion stage also. Clear or not? Yes, everyone? Yes. Okay. Am I audible to all of you?
Yes, sir.
Yeah. I think there was an internet glitch. And um, okay, everyone, please let me know. Am I audible and am I clear?
Yes, sir.
Yeah. Okay. So if you all remember, yesterday we were doing the analytical procedure topic, right or not? Yeah. So we were talking about the analytical procedure. And what is the standard number, everyone? Standard number 520. We were talking about that is called analytical procedures. And after that, in between, it was stuck, and then we had to wind up the meeting. So let us start today from the point where we left yesterday. Now, what do you mean by analytical procedure? As you all know that sometimes the auditor should try his level best to ensure that he should do the audit in the least possible manner, or he should do the audit in the least possible time. At that point of time, he must use the concept of analytical procedures. Analytical procedures are not about nothing about evaluation of the financial information with the plausible relationship among its financial information and non-financial information. So yesterday, though, when we were talking about that, we had a discussion on lot of examples over there, ki how we can analyze the situation and how we can come to the conclusion with the use of analytical procedure. I think this was the topic which we have done yesterday last, कि analytical procedure का timing क्या है? What is the timing of analytical procedure, everyone? Is it required in the beginning of the audit, during the audit, or at the completion of the audit as well? At all the three stages. Am I correct or not? Yes. Yeah. Okay. So let us start with the today's topic: analytical procedure in the planning the audit. Analytical procedure assists the auditor in understanding the client's business and in identifying the areas of potential risk. The information will assist the auditor in determining the nature, timing, and extent of his audit procedures. Analytical procedure in the planning the audit use both financial and non-financial information such as number of employees, square feet of selling space, and volume of good produced, and similar information. That we already know that analytical procedure is all about using the two types of informations. One is financial and one is what? Non-financial. So in case you want to determine the salary of the company, if you want to determine what is the salary the company is paying, are you getting? If you want to determine what the salary the company is paying, at that point of time, understanding the number of employees is also very important for you at that point of time, right? So this is called analytical procedure ka introduction so far, right? Now, first thing, it is not availability in India, it is availability of data. Availability of data. Now, everyone, now let us understand what do you mean by substantive analytical procedures. Auditors' substantive analytical procedures at the assertion level may be test of details, substantive analytical procedures, or a combination of both. Decision about whether to use substantive analytical procedure is based on the auditor's professional judgment about the effectiveness and efficiency of the available audit procedures to reduce the audit risk to an acceptably low level. Auditor may inquire of the management as to the availability and reliability of information needed to apply the substantive analytical procedures and the results of any such analytical procedure performed by the entity. Now, in this paragraph, what the whole lawmaker is saying, that lawmaker is simply saying one thing, कि only substantive analytical procedure is not good, only test of details is not good. It's better that auditor should make a good combination of the both. That thing I already told you yesterday also, कि whenever we are talking about the analytical procedures, never be too dependent upon analytical procedures, never be too dependent upon the TOD. A good auditor will always try to make the good combination of both systematic analytical procedures as well as the testing of details. Now, what are those things you have to keep it in mind? What are those factors you have to keep it in mind if you want to use the analytical procedure? The first factor what you have to keep it in mind is availability of reliable and relevant data will facilitate effective procedures. Now, everyone, please tell me, in case you are verifying the GST operations of the entity, or in case you are verifying the GST amount paid by the entity, which one is the most reliable data? Is it the GST returns or the GST data available from the GST portal? Or is it the sales ledger maintained by the company? Tell me, which data available to you is highly reliable? Yes, GST portal. Are you getting the point? Because in the GST portal, you can cross verify or you can reconcile it with the person from where you are claiming the GST. You can verify the input, you can verify the output, you can verify the conciliation. So reliability of the data availability of the reliable data is the biggest thing the auditor has to keep it in mind to understand whether substantive audit procedures are required to be done or not required to be done. So what is the first thing? First thing is availability of data, and in the availability of data also which data you are looking for. It should be a reliable and relevant data. What do you mean by reliable? It should be trustworthy, and relevant, it should be connected with the procedure which I am using. Second thing is called disaggregation. Now, what do you mean by disaggregation, everyone? Disaggregation is the degree of disaggregation in the available data can directly affect the degree of its usefulness in detecting the misstatement. What do you mean by disaggregation? Now, disaggregation means what? Individual datas. Are you getting the point? Individual datas and cluster of the datas always affect the degree of usefulness in the detecting of misstatement. It's a very simple thing. The more and more individual data will be there with you, the more and more reliability of the audit procedures will take place. The more and more aggregate data will be there with you. What is happening, guys? Are you guys getting out of the meeting automatically and then coming in again and again?
Yes, sir.
Is there any problem with the meeting? Okay, okay, okay. Again, is it the problem from my side or you are getting automatically logged out? Am I audible now, everyone? And am I clear?
Yes, sir.
Yes, okay. Please let me know if any problem is there, okay? Immediately I'll take care of that. Okay. Chalo. Now, third thing. The third thing is account type. Systematic analytical procedures are more useful to certain type of account than others. Income statement accounts tend to be more predictable because they reflect the accumulated transaction over a period, whereas the balance sheet account represent the net effect of the transaction at a point of time or are subject to greater management judgment. It's a very simple thing they are saying that analytical procedures, if I have to tell you in one line, analytical procedures are more useful in the P&L statement items, and it is less useful in case of balance sheet items. Can anybody tell me why? Why analytical procedures in Divya? Are you in the meeting now, Divya? Are you in the meeting now, Divya? Please confirm. Everyone is facing the same issue? Let's do one thing, guys. Let me reconnect the meeting again. Come back again, please. I don't know why yesterday it was my problem and today it is. Okay, let me just reconnect the meeting again. Please come back. Hello, sir. Good evening, sir. Sir, there is a problem coming in the Zoom actually. So students are coming in the class, they're automatically getting disconnected, and again they are sending the request. It is happening like for each student 5, 5, 10 times it is happening. Okay. Zoom ID. Okay. 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 Yeah, that's what just now I did it. I think the problem should be solved now. Yeah. Okay, sir. Right. Right. Okay, sir. Right, sir. Okay. Everybody is able to hear me now?
Yes, sir.
Yeah. Okay. Is it visible now? Everything? Yeah. Okay. Chalo. So let us understand this topic now. So what we were talking about, like the third topic. First topic, we understood that ki availability of the data should be there. And what is the relevant data and how much is the reliable data available to you? That is more important while deciding whether to use the substantive audit procedures or not. So relevance, so you can remember this as RR of data. What is RR of data? Relevance and reliability of the data is the first factor. You always have to keep it in mind. Second thing, how much is the disaggregation of the data available to you? It means individual data are always more better than the disaggregated data. Are you getting the point? Because in the individual data, you can check the things in a better way. In an individual matter, you can check the things in a better way, because in the aggregated data, it will very difficult for you to understand which one is correct and which one is incorrect. Point number three, what we understood. In the point number three, we understood. Acha, please tell me everyone, P&L statement and trading account. Just try to understand what I'm saying. P&L statement and trading account is something which keeps on going on throughout the year or not?
Yes.
Yes. Balances gets balanced throughout the year or only at the end of the year?
End of the year.
End of the year. So tell me one thing, what items you can predict in a better manner? Is it the P&L items you can predict, or is it the balance sheet items you can predict better?
Balance sheet items.
No, you can't predict
P&L
the
items.
P&L items. Yes, P&L items you can
Oh.
predict better. The reason is very simple. Suppose it's been 3 months now. It's been 3 months now, and your total rent paid is 3,60,000. It's been 3 months now of the beginning of the financial year. Total rent paid by you is 3,60,000. Tell me what could be the yearly rent? Tell me what could be the yearly rent?
30,000.
Yearly. If the 3 months rent is 3,60,000, what could be the yearly rent? Yearly rent could be what? 12 lakhs. Yearly rent could be 14 lakhs 40,000 or not?
40,000.
Yeah, 14 lakh 40,000. Are you getting the point? So can you predict the yearly item very easily in the P&L statement or not? Yes. So let me give you another example also. I'm talking about the analysis, everyone. Suppose it's been 6 months that you are doing the business, and in the 6 months you have reached to the turnover of 600 crores. What is the possibility that by the year end, you will reach the turnover of what? 1,200 crores. Are you getting? If 600 crores you have reached, minimum or average, you can say that 1,200 crores, a little bit upside and downside, it is possible. So in the P&L statement and in the trading account, the things can be predicted very easily because the transactions are getting accumulated over a period of time. But in the balance sheet, the prediction is little bit difficult because balance sheet happens only at the end of the financial year, or balances get balanced only at the end of the financial year. So tell me on which items analytical procedure can be used more and on which items analytical procedure can be used less. On P&L items, it can be used what? More. And it can be, I'm not saying that it cannot be used on balance sheet item, but it can be used very less when it comes to the balance sheet item. What can be the reason? The reason is very simple. Reason is predictability. What is the reason, everyone? Predictability. What are the things you can predict and what are the things you can't predict? That you have to understand in this point. Now, the next factor which affects the most is known as source. It's a very simple thing, everyone. Internal source of information is always better, or external source of information is always better? External is always more favorable than what? Internal. Is it correct thing to say? Tell me, everyone.
No, sir.
Yes. Same thing I told you in the audit evidence chapter also. Is it correct to say that?
External is mostly.
Yeah, mostly.
Mostly.
Yes, very nice. Mostly external is more reliable than internal. But when we are evaluating the internal control system, at that point of time, external is more valuable or internal? Internal. And next source is nothing but called what? Predictability. Are you getting the point? Tell me one thing, guys. Where the analytical procedures can be used in a better manner? Those things which are predictable in nature and those things where the prediction is very difficult.
Predictable in nature.
Predictable in nature. So you can read this paragraph, everyone, what is written. Substantive analytical procedure are more appropriate when an account balance or the relationship between the item of data are predictable, like between sales and cost of sales, between the trade receivables and cash receipts. A predictable relationship is one that may reasonably be expected to exist and continue over a time. Now, next thing, what is the fifth factor? Sixth factor, nature of assertion, everyone. What is the sixth factor? Nature of assertion, everyone. Acha, tell me, everyone, what is being written here? Analytical procedures may be more effective in providing the evidence for some assertions, example, completeness or valuation, than for others, right and obligations. Now, tell me one thing. Let's take an example. Okay. Listen to my example very carefully, everyone, and please tell me whether it is correct or not. You went to the godown, and in the godown, lot of stock is lying. Hell lot of stock is there. So by visualizing the stock, can you say that ki yes, I think it is of 30 crores only? They are showing the 30 crores of stock, and you have a little bit of information about the market price of that stock. You are visualizing the whole godown, and in the whole godown is full of stock only. So you can roughly make an idea, okay, minimum 20-30 crores of stock it is there, right or not? So regarding the valuation, you can use the substantive analytical procedure. But just stock is lying in front of you. Can you give me the correct idea? Is it your own stock or outsider stock? Tell me one thing. Ownership of the stock and the valuation of the stock. Which management assertion can be easily made by using the substantive analytical procedure? Tell me, everyone. By looking at the stock, you can tell me, yes, it is existing. By looking at the stock, you can tell me, okay, this might be the value. But can you tell me, by looking at the stock, is it your client stock or somebody's stock? What is not possible in case of which assertion? Tell me. There are three assertions I'm telling you. Suppose you are checking the inventory at the godown. Yes. Existence, ownership, and valuation. Out of these three assertions, what two assertions or what assertions you can tell easily by using this substantive analytical procedure, and what assertions you completely cannot tell?
Ownership.
Ownership. Okay, you can tell about the ownership or you can't tell about the ownership. Yeah.
Content.
Yeah, you can tell about the existence because by watching the stock only, by seeing the stock only, you can say that yes, this much of stock is okay. Again, the same problem is happening, everyone.
No, sir.
I think Dharani went out and came back again, and then Dharani, is it the same thing happening with you again? Dharani or Deva? What is her name? Deva Darshini.
No, sir, I'm in class.
Okay, somebody just now entered it. So please let me know if any kind of problem is there. So looking at the inventory, I can say that, okay, existence of inventory is there. I can say that, okay, looking at that much of inventory, this might be the value. But looking at the inventory, can you say that it is your own inventory or it is given to the bank? Is it hypothecated and inventory or it is free inventory? No. So ownership you can't tell. So what kind of assertions you can tell, what kind of assertions you can't tell, based upon that also we have to see where you should use the, what do you say, substantive analytical procedure, and where you cannot use the substantive analytical procedure. Next factor is known as inherent risk, or what can go wrong. Tell me, everyone, what do you understand by the term called inherent risk? Can anybody tell me? What do you understand by the term called inherent risk? Acha, let me.
Imposed by the management.
Sorry, which is?
Imposed by the management.
Imposed by the management. Very nice. Acha, tell me, everyone, imagine a bank without the cameras. Imagine there is one bank in which no cameras are installed. Tell me, is it a good sign of ICS, a poor sign of ICS, or no ICS? It is a sign of no ICS. What are the chances of frauds and errors in that particular bank branch? Higher or lower?
Yeah, very high.
Very high. So tell me one thing. When there are no internal control systems in a bank, first of all, tell me, installing the camera was the auditor's responsibility or management responsibility?
Management.
So whether this kind of risk is inherent risk or not, that definitely the things will go wrong. Am I correct or not? Harish,
Yeah.
are you facing the problem again and again? I think the person is Harish. Maybe. Harish, are you in the meeting now? So inherent risk is that risk, the error will definitely occur. Acha, if the cameras are there and they are not working, that is a sign of no ICS or poor ICS? Poor ICS. So in that case, the possibility of frauds and errors will be little bit still less. Why? Because even though the cameras are working or not, the theft person, the person who is a thief, might not be aware of the fact that whether cameras are working or not. Are you getting the point? But if he sees surrounding, there is not even a single camera, then so definitely there is an inherent risk that frauds and errors will take place. So if the inherent risk is present in the organization, then you can easily tell what may go wrong or what can go wrong. Now see, when we are designing the audit procedures to address an inherent risk of what can go wrong, we consider the nature of risk of MM in order to determine if a substantive analytical procedure can be used to obtain the audit evidence. When inherent risk is higher, we may design the test of details to address the inherent risk. When a significant risk have been identified, audit evidence obtained solely from the substantive analytical procedure is unlikely to be sufficient. So everyone, please tell me so far now, how many factors you have to keep it in mind to understand whether substantive analytical procedures can be used or cannot be used. Total, how many factors we have done? We have done the 7 factors, everyone. What are the 7 factors, everyone? Tell me, list one by one. Availability of data. In that availability, R and R we are interested in. What is R and R, everyone?
Reliable and relevant.
Reliability of data and relevance of data. Am I correct or not? Second thing, degree of
Misappropriation.
disaggregation. What is the third one? Account type. What do you mean by account type? Where it can be more useful, P&L items or balance sheet? More useful in P&L, less useful in balance sheet. Third, fourth one, predictability. Predictability. Next one, nature of assertion. Nature of assertions. Next one, everyone.
Source.
Yes.
Source.
Inherent risk or what can go wrong. And most importantly, the 7th one is what? Source of data. From where you are collecting the data, that also matters. So these are the total 7 factors which will help you in deciding whether you should go for TOD or whether you should go for what? SAP. Everyone clear or not? Yes. Now, what is the next topic? Techniques available as substantive analytical procedure. Techniques, so we already know, everyone. All about the techniques, so we already know. What do you understand by trend analysis, everyone? Can anybody tell me what do you mean by trend analysis? Now, let me ask you one thing. Trend analysis are nothing but the chart system only. Say, for example, if we are checking the legal expense account of company, legal expense of a company, there is a legal expense account, and you are seeing that it is 2010, 2015, 2020, and the chart is going like this. What does it indicate, everyone? Legal expense account of the company 2010 to 2020. You have made one chart and chart is going on the upper side. What does that indicate, everyone? Expenditures are incurred more and more and expenditures are incurred less and less.
More and more.
More and more. Okay, what does that indicate if the expenditures in the legal expense account are increasing day by day? Whether the company is winning the cases or losing the cases, everyone?
Losing the cases.
Yes, company is losing the cases. So that is nothing but called analytical procedure only. But what does, which method we are talking about right now? Are we talking about ratio analysis or trend analysis? This is known as trend analysis. So it is an upward trend or downward trend. All these are known as what? Trend analysis techniques. So yes. So what do you mean by trend analysis technique? Everyone read it along with me. A commonly used technique is the comparison of current data with the prior period balance or with the trend in the 2 or more prior period balances. We evaluate whether the current balances of an account moves in line with the trend established with the previous balances for that account or based on understanding of the factors that may cause the effect to change. It's a very simple thing. They are saying that the current year figures shall be compared with the last year figures. Jesse, sometimes we do the trend analysis like this also. Let me make one chart. Okay, so I can say that a red color means current year and blue color means last year. And we are doing cost of production analysis. Cost of production analysis. Okay. So 2020, 21 and 2021, 22. So tell me everyone, what does this kind of analysis is all about? Our cost of production as compared to the last year is increasing or decreasing?
Increasing.
Increasing. So this is also known as what? Trend analysis, everyone. Did you get the point or not? So trend analysis is one of the very important technique or very useful technique when it comes to the secure, what do you say, substantive analytical procedure. What is the second thing, everyone? What is the second thing? Second thing is all about ratio analysis. Ratio analysis to all you all know because it is one of the chapter in your financial management. Can you calculate some of the ratios for me? Can you please tell me if I want to check the liquidity of my client, which ratios are better? Current ratio. If I'm checking the profitability of my client, which ratios I should calculate? GP ratio or NP ratio. If I'm talking about the activity of my client, should I calculate the turnover ratios or not? Yes. And if I want to talk about the solvency of my client, should I calculate debt by equity ratio or not? Yes. So these are the various techniques in the ratio analysis which are useful as a systematic analytical procedure. So you can see that everyone, ratio analysis is useful for analyzing the assets and liability accounts as well as the revenue and expenditure accounts. An individual balance sheet account is difficult to predict on its own, but its relationship to the another account is often more predictable. Example, trade receivable balances can be related to the sales. Ratios can also be compared over the time to the ratios of the separate entities within the group or within the ratios of other companies in the same industry. So everyone, please tell me if the telecommunication industry is there, if the telecommunication industry's current ratio is 3:1 and Idea is having 1:1, Geo is having 4:1, Airtel is having 2.8:1. Now tell me whose internal ratio is better? Whose current ratio is better as per the industry, everyone? Please tell me. Geo. Obviously Geo as well as the Airtel also. Okay, industry is 3:1. Airtel is 2.8:1.
Nearest, closest to industry.
Yeah, closest to the industry. As simple as that. Am I correct or not? But Idea is positive or Idea is negative in this case?
Neutral.
No, Idea is not negative. You can't say positive, you can't say negative. You can say that yes, it is below the industry line. This is called what? Did I do the intra-firm comparison right now or inter-firm comparison right now?
Interfirm comparison.
I did the inter-firm comparison, everyone. What do you mean by inter-firm comparison? When you make the comparison between the two companies of the same industry, it is known as inter-firm comparison. And what do you mean by intra-firm comparison, everyone? When you make the comparison, yes, when you make the comparison between the two departments of the same company, that is called what? Intra-firm comparison. Everyone crystal clear or not? Yes. Clear? Now, yeah, within, correctly said. Now, reasonable test, everyone. Reasonableness test. Now, see, unlike trend analysis, this analytical procedure does not rely on events of prior periods but upon the non-financial data for the audit period under the consideration. Example, occupancy rates to estimate the rental income or interest rate to estimate the interest income or the expenditure. These tests are generally more applicable to income statement accounts and certain accrual and prepayment account. Everyone, please tell me, what do you understand by seasonal industry?
I feel.
Yes, seasonal industry is that industry which is having two types of seasons, everyone. Can I say that the season is known as off season and peak season? Am I correct or not? So my question is very simple, everyone. Let's talk about Srinagar. Srinagar is a very hilly area. Am I correct or not? Tell me, everyone, in the Srinagar, in the hilly area, what will be the occupancy rate of hotels during winters, during the snowfall, and what will be the occupancy rate of hotels during the summers? Which is the peak season of the Srinagar and which one is the off season of the Srinagar? When the people would like to go to the Srinagar Valley or Jammu and Kashmir?
Summer.
During the summers or during the winters?
Summers.
During the winters, my friend. Why
Winter.
why the somebody,
Here summer.
huh?
They go in both summer and winter.
They would like to go in the winters, my friend. Why you would like to go to the hilly area just to see the snow? Acha, you are in the south right now. You are in Chennai right now. So in the Chennai right now, so throughout the year you are facing the summers only. Why you would like to go in the hilly area? In the during the winters, why you would like to go over there? Because snowfall is happening during the winters in the Srinagar and Jammu and Kashmir area. So would you like to see the snowfall during that period or not?
Yes.
Yes. So when you will go, like you, so many people in India will go. So what is the peak season for the hilly areas?
Winter.
Winters. And during that winter, what will be the occupancy rate of hotels over there? Highest or the lowest?
Yes.
Highest. And it will be very lowest in case of what? Summers. So that is what do you mean by reasonableness test? Did you get the point or not? What do you mean by reasonableness test, everyone? Where we can predict the things on the basis of its season, on the basis of the events, on the basis of the situations. Now tell me, whatever I told you so far, did you understand it reasonably or not? Tell me, everyone, did you understand it reasonably or not? Yes, so that is called
Yes,
reasonable test, everyone. Are you getting the point? And last but not the least is known as fourth method. What is the name of the fourth method, everyone? Structural modeling. So what are the three methods we are done with? Trend analysis, ratio analysis, and third one is reasonable test. What do you mean by structural modeling? The modeling tool constructs the statistical model from the financial and non-financial data of the prior accounting periods to predict the current balances. Are you getting the point or not? This is what do you mean by restructuring or structural modeling. Acha, say for example, let's do it in this way. 17, 18, 25 crores bad debt. 18, 19, 28 crores bad debt. 1920 में 29 crores bad debt and 2021 में 27 crores of debt. So everyone please tell me, in the 21-22 financial year which started today, what kind of provision of doubtful debt you would like to provide? How much is the amount of provision of doubtful debt you would like to provide now?
based on previous year 1920.
Based on the previous year 1920 or 2021?
1920.
No, in the
So,
21.
sorry, 2020.
Yeah.
2020.
So, acha, can I say that I can consider all these four? If you calculate the average of that, can I say that minimum 25 crores, so definitely you have to provide?
Yes.
Yes or no? Because this is a trend going on. Is 17, 18, 18, 19, 19, 20, everything was under 30, but more than 25. Am I correct or not? This is called structural modeling, everyone, where you use the past year's information, or the prior period information to do the analysis of which year? Current year. To do the analysis of the current year information. That is called what? Structural modeling method, everyone. So tell me, how many methods we understood in the substantive analytical procedures, everyone? Four methods. One is known as trend analysis, one is known as ratio analysis, one is known as reasonable test, and one is known as structural modeling. In all the four things, what is the common thing? The common thing is PJ, everyone. What is PJ? Professional judgment. Professional judgment. So professional judgment helps you in understanding which kind of method is more suitable in which kind of situation. Clear, everyone? Any doubt or no doubt in this particular topic?
No doubt, sir.
Okay, great. Okay. Now, let us understand the next part. How much is there? Okay, we are on the edge of completion of our chapter. Then we'll start with the next chapter. Analytical procedure used as a substantive test, everyone. Now see, when designing and when performing substantive analytical procedure either alone or in combination of TOD, as substantive procedure in accordance with SA 330, auditors shall, what is the first thing? Determine the suitability of particular substantive audit procedure for the given assertion, taking into account the assertion risk of material misstatement, test of details, if any, for those assertions. Evaluate the reliability of data. I think they are repeating the question again. Everyone, please tell me what are the 7 factors you have to keep it in mind. Tell me before deciding whether you should go for SAP or you should go for TOD. Tell me the 7 factors again. It is nothing but the repetitive question of that only. Tell me the 7 factors which you will keep it in mind before deciding whether you should go for what do you say, analytical procedure or you should go for TOD. Tell me the 7 factors. Wait.
First, availability
First one, availability of what? Data.
data.
Second one, source of data. Third one, predictability of data. Am I correct or not? Predictability of data. Okay, what is the next one?
Nature of risk.
Predictable. Okay, my pencil is out of charge now. You keep on telling. You keep on telling. Don't worry, it will get charged. You keep on telling.
Nature of a person.
Nature. Yeah. The predictability of data, source, average of the data, degree of disaggregation, account type, source, nature of assertion, and what was the last one? Inherent risk. That is what can go wrong. Are you getting the point or not? So these are the various things you have to keep it in mind while deciding should you go for SAP or should you go for testing of details. Now, what is the next topic? The next topic is suitability of particular analytical procedure. Is my screen visible, everyone?
No, sir.
Now, is it visible now?
Yes, sir.
Yes, okay. Now, suitability of particular analytical procedure for the given assertion. Now, in which assertion, which analytical procedure is Komal? Is it visible now? Yes, okay. Now, which particular analytical procedure is applicable for which kind of assertion, that we have to understand in this particular topic. Now, somebody please read it on my behalf. Please read it, because I can't actually read without the use of the pencil, and pencil is getting charged. Please read this whole paragraph of 4th, the total concept. And when I will tell you to stop, just stop it over there. Okay.
The suitability of a particular analytical procedure will depend upon the order assignment, how effective it will be in treating a mistake. Individually or when aggregated with other misstatements may cause the financial statement to be materially misstated.
Okay, read the next paragraph.
Different types of analytical procedures provide different levels of assurance. Analytical procedures involving, for example, the prediction of total rental income on a building, dividing into apartments, taking the rental rates, the number of apartments, and vacancy rates into consideration, can provide precise evidence and may eliminate the need for further verification by means of test of details. Provide the element are appropriately verified. In contrast, calculations and comparisons of the gross margin percentages as means of confirming a revenue figure may provide less potential evidence but may provide useful corroboration if used in combination with other audit procedures.
Okay, now it's a very simple example given in front of you, everyone. Please try to understand. Now, there is one client who has shown the rental income on the credit side of his P&L statement. There is one client who has shown the rental income on the credit side of his P&L statement. Do you need to check each? And he's having almost 1600 flats in one building. There is one area, there is one township in which he is having 1600 flats, and from each flat he is getting rental income on the basis of area of their flat. Say for example, per square feet he gets 1000 rupees. Per square feet he is charging 1000 rupees. Now I'm going to give you one figure now. My client is showing some rental income. My client is showing rental income He's showing rental income from 1600 flats. Am I correct or not? It is running in crores and crores of rental income. And he's charging the rental income via square feet of each flat. There are 400 flats of 1500 square feet. There are 400 flats of 1800 SFT. There are 400 flats. Okay, so there are 400 flats of 1500 SFT. There are 400 flats of 1800 SFT. There are 400 flats of 1000 SFT. And there are 400 flats of 1200 SFT. Now tell me everyone, can you easily predict the rental income of my client or not? Yes, it's a very simple thing. Per SFT, he is charging 1000 rupees. So in the first case, what will be his rental income? 400 into 1500 into what? 1000. 400 flats of 1500. 1500 for 400 flats of 1500 SFT. Per SFT, he is charging 1000 rupees. Are you getting the point? It means he is getting a rent of what? Per SFT, if he is charging, he is getting, yes, you can calculate. Like that, in the second case also, you can calculate, Harish. Am I correct or not? 400 flats of 1800 into 1000 rupees. So like that, if some figure is given as a rental income throughout the year, are you getting the point? And into 12, you can do it or not? This is a per month income. And if you multiply the total incomes into 12, it will become yearly income or not? So once these kind of informations are available, do you need to do further for checking each and every rental receipt, or it is a simple mathematical calculation you can do? Tell me everyone. Yes, simple mathematical calculation you can do. You need not go deeper into it. You need not tell your client, show me the testing of details or show me this evidence, that evidence. You need not do. If your calculated figure and the client's rental income shown are matching, it means everything is sorted. If little bit of up and down is coming, then also it is sorted. But if the major difference is that, then definitely you have every right to ask the query to your client. Am I clear with all of you? So tell me, in this case, a substantive analytical procedure can be used or cannot be used? Can be used. Did you get the point or not? This is what the example is given in front of you. But tell me one thing, just by calculating the GP ratio or just by calculating the NP ratio percentages, can you exactly tell what is going to be the revenue of the full year? Tell me everyone. By calculating the GP ratio and NP ratio or percentages, or by just by checking 2 or 3 things, can you tell the full revenue of the full year? No. At that point of time, you have to do the SAP also as well as the TOD also. So there are some areas where only SAP is possible, but there are some areas where the SAP has to be done with the TOD. Did you all understand what I'm saying? Yes or no? Now, in which area SAP is possible? In which area SAP plus TOD is possible? That is purely dependent upon case to case basis. I hope everyone is crystal clear. Am I correct or not? That is what is written in the paragraph number 2. Everyone please read, somebody please read the paragraph number 3, which is given in front of us. Yes, somebody please read the paragraph number 3 given in face of front of us. Please read it. What
The
happened?
determination of the suitability of particular substantive analytical procedure is influenced by the nature of assertion and the auditor's assessment of risk of material misstatement. For example, if controls over sales order processing are weak, the auditor may place more reliance on test of details rather than on substantive analytical procedures for assertions related to receivables.
Okay, so let me ask you a very simple thing, guys. A simple idea I will give. Suppose you are already an auditor of one company for the last 4 years. So when you did the audit of your client for the last 4 years, do you have a rich experience about your client's test internal control system or not? Yes or no? Can I say that 4 years have given you the good experience? Now you can easily tell me whether your client's internal control system is good or bad. Can I say that? Yes. Now tell me one thing. In the last 4 years, the common thing what you have found out is that their sales department is very weak. Their sales department is highly weak, very weak. There are less qualified people in their sales department, and there are so many troubles in their sales department. So tell me, while checking the sales of your client, would you like to go for systematic or substantive analytical procedures, or would you like to go for TOD in that case?
TOD.
TOD, testing of detail. So I would like to do
Basically,
the
it is a part.
yeah, I would like to go for examination in depth because their internal control system is very strong in the sales department or very poor in the sales department.
Poor.
That is what is written. Which kind of substantive analytical procedure you are going to use, in which kind of assertion, that is purely dependent upon the ROMUM. Now tell me, the ROMUM in the sales department is higher or lower?
Yeah.
So that means you are going to go for SAP or TOD?
TOD.
TOD. And if I say the vice versa situation, their ROMUM is completely nil in the department because they're in the sales department, all chartered accountants are working and everyone is having a good qualification and everyone is having a good practice in doing the managing the sales. Now tell me, their internal control system is strong or it is weaker?
Good.
Good. Now, in that case, can you go for systematic analytical procedure or substantive analytical procedure?
Yes.
Yes, you may go for. So that is what the paragraph number 3 is telling us. Read the paragraph number 4, Komal. So somebody who was reading, sorry. Komal, only, you are only reading.
Yes, sir.
Yeah. Komal, read the paragraph number 4.
Particular substantive analytical procedures may also be considered suitable when test of details are performed on the same assertion. For example, when obtaining audit evidence regarding the valuation assertion for accounts receivable balances, the auditor may apply analytical procedures to aging of customers' accounts, in addition to performing test of details on subsequent cash receipts to determine the collectability of the receivables.
Yes. So what they are saying that there is no harm if we can apply SAP with the TOD on the same thing only. Are you getting the point? We are already applying the TOD on something, and there is no harm if we'll apply the SAP on the same thing with the TOD is already applied. Now, they are simply giving you the example. What is the example? Everyone read it very carefully. The example given is this. Now see, when obtaining audit evidence regarding the valuation assertion of debtors receivable. Now tell me one thing. You are checking the value of the debtors. The auditor may apply analytical procedures to the aging of the customers. Means what? What do you mean by aging of the customers? Which debtors are taking longer period of time to release the money and which types of debtors are giving the less period of time. Suppose there are some total 20 debtors. Out of 20 debtors, 15 debtors are there which are giving me the money back within 1 month only. It means they are clearing their payment regularly within 1 month only. But there are 5 debtors who are taking more than 180 days to clear my payment. So tell me, where the chances of bad debts are very high? In the 15 debtors or in the last 5 debtors?
Last to 5.
Last 5 debtors. That is called analytical procedure. I already calculated their value by doing the TOD. So via TOD, I already calculated the valuation of debtors. But where the chances of bad debts are there, where the less chances of bad debts are there, can I calculate this by using the SAP or not? Yes. So did I use the TOD and SAP on the different areas or on the same areas? Same area.
Same
That
area.
is called debtors. So what is the conclusion? What is the total conclusion of our discussion so far in the last 10 minutes is suitability of particular analytical procedure for the given assertion. So in case you want to check something and you think that SAP is good, then follow SAP. If you think that TOD is better, then follow TOD. If you think that ROMUM is high, then follow TOD. If you think that ROMUM is less, then follow SAP. And there is no harm if you are following SAP and TOD at the same point of time on the same items. Did you understand what I told you so far?
Yes, sir.
Yes or not? All the three rules what we understood, based upon the nature of assertion which you are checking, SAP can be decided. If the ROMUM is high, go for TOD. If the ROMUM is less, go for what? SAP. And there is no harm if where you are already going for TOD, you can also apply what? SAP on that. Clear everyone? Any doubt or no doubt? No doubt. Okay. Now, again they are asking you this thing. Now my question is very simple, everyone. Read the question, everyone. Read the question number 5. What is question number 5?
Extent of reliance
On now, extent of reliance means what? When you can have a more trust on analytical procedures, when you can have a less trust on analytical procedure. I'll give you some questions. You please, everyone, please write the answer in the comment box, or if you want to speak also, no issues. Tell me one thing. External source of data I have obtained. More extent of reliance on AP or less extent of reliance on AP? I have obtained external. More. So can I say that the first factor is nothing but again called what? Source. Are you getting the point or not? So are you able to see the same answers? Yes. What is the first answer, everyone? Source of information available. So source of information available is going to help you in deciding whether you can more trust this thing or whether you can less trust on this thing. What is the second thing? Comparability of information available. Tell me one thing, if you have a comparable information, then SAP will be more easier or less easier? If you have a comparability of the information available, SAP will be more easier or less easier? More easier. You can do the more easy thing. Nature and relevance of the information available. Now tell me one thing. I was verifying the debtors, but sales information is not available. I was verifying the debtors, but sales information is not available. Now tell me, purchase information is available. So purchase is more relevant or sale is more relevant? Sale is more relevant. So, yes. So nature and relevance of the information available is the third factor. And what is the fourth factor? Controls over the preparation of information that is available. Tell me one thing. Company's internal control system is highly strong. Can I use more SAPs? Tell me, everyone. Company's internal control system is very strong. Can I use more SAPs or less SAPs? More SAPs, because internal control system is strong. Just now we have done that one question or not. So tell me, everyone, what are the 4 factors which will help you in deciding whether you can rely more on SAP or you can rely less on SAP? Factor number 1, source. Factor number 2, comparability. Factor number 3, nature and relevance. And factor number 4, everyone, controls.
Control over the preparation of.
So can I say that if the external source is there, your trust will be more? Am I correct? If more comparability there, your trust will be more. Are you getting the point? If more relevant information is available, your trust will be more. Am I correct? And if internal control systems are very strong, again your trust will be more. And if I'll do the vice versa, your trust will be less. So my question is very simple, everyone. Is this topic and the previous topic which we have done are the same or different? Try to think logically. Where we have done the 7 factors, those are those 7 factors which will help us in deciding whether to go for SAP or not to go for SAP. These are not those 7 factors. These are 4 factors which are help us in deciding to what extent we can use the SAP, to what extent we can not use the SAP. Should we go for more SAPs or less SAPs? So remember one thing, in the 7 factors we understood whether to go for SAP or not to go for SAP. But in these 4 factors, what we understood, whether to go for more SAP or less SAP. Everyone crystal clear or not? Did you understand? Let me clear it again. How many of you got the doubt what I said so far? I would like to clarify it there itself only. Now listen to this verified. If this question will come, briefly explain the factors to be considered whether to use SAP or TOD. What will be your answer, everyone? Is it going to be the 4 factors or is it going to be the 7 factors? 7 factors. Tell me the 7 factors. Source, availability, predictability,
Inherent risk.
assertion, inherent risk, then what do you say? Yeah, disaggregation and account type. Am I correct or not? But if they are asking you this question, everyone, explain the factors by which auditor can decide his level of reliance on SAPs. Now tell me, is the question maker is asking you whether to use the SAP or not to use the SAP, or question maker is saying that ki you are already using the SAP, but whether to use more SAP or less SAP? There's a difference between these 2 questions or not? Yes. So tell me, what are the 4 factors? Source,
Comparability.
comparability, nature and relevance. And the last one is what, everyone? Yes. The controls. So I hope all of you got justified with the explanation which I told you so far. Yes or no? Yes. Now tell me one thing, whether the analytical procedures helps you in forming the opinion. Tell me, everyone. Whether analytical procedures helps you in forming the opinion, whether your conclusions, your expression of opinion is having a little bit contribution from SAPs. Yes or no? Yeah. Yeah, little bit contribution they make on. I'm not saying that 100% you got the evidence. I'm not saying that 100% reliable evidence you got, but little bit direction you get or not. Yes or no? So can I call it as a primary evidence or can I call it as a supporting evidence? Supporting evidence. Now everyone read this paragraph, everyone. Analytical procedure that assist performing an overall conclusion drawn from the results of analytical procedure designed and performed in accordance with are intended to, what is this word written, everyone? Corroborate. Repeat the word. What is the word? Corroborate. Corroborate means what? You are already having a primary evidence, but you sometimes need a which evidence? Supporting evidence. That supporting evidence is known as what? Corroborate evidence. So everyone, please tell me, primary evidence are you going to collect via SAP or TOD? Primary evidence you are going to collect via SAP or TOD, where you will get the more relevant evidence. TOD. So can I say that SAP helps you in supporting your evidence which you have already obtained from TOD or not? Yes. So do you remember our SA 580, everyone? How many of you remember SA 580? What is SA 580? I told you. Written representation letter. Do you all remember that? Is the written representation letter is your first option or last option? Last option. Is it a primary evidence? No. Is it a sufficient evidence? No. Is it an appropriate evidence? No. But is it a supporting evidence or not? Yes. Are you getting the point? Same is case with the SAP. So SAP and WRL both play the same role only. Read the whole paragraph, everyone. Drawn from the results of analytical procedure designed and performed in accordance with are intended to corroborate the conclusion formed during the audit of individual components or elements of the financial statement. This assists. What is the word used, everyone? The word used is assist. Means it helps the auditor to draw the reasonable conclusions on which to base the auditor's opinion. तो ये auditor की opinion को support करते हैं. Are you getting the point? What do you understand by ROMUM, everyone? ROMUM, to you all know, it is known as risk of material misstatement. Matters relevant to the auditor's evaluation whether expectations can be developed sufficiently precisely to identify misstatement when aggregated or with other may cause the financial statement to be materially misstatement include the accuracy with which the expected results of the systematic analytical procedure can be predicted. For example, auditor may expect a greater consistency in comparing the gross profit margins of one period to another than in comparing the discretionary expenses such as research or advertising. Acha, I will ask you a very simple question, everyone. Please tell me which industries were booming when the COVID-19 was going on? Just an analysis only. Which industries were booming when the COVID-19 was going on? Is it the gold industry or is it the pharma industry?
Pharma industry.
Yeah, pharma industry or medical industry. Very nice. And can I say that at the same point of time, IT industry also? How,
Yes,
how, how IT industry was booming when the COVID-19 was going on?
Zoom meeting.
Yeah, Zoom, Cisco, yes, Zoom, Cisco, online shopping, big basket. Everyone use that many apps or not? Right or not? I तो frankly speaking, last year before the March month when the lockdown happened, I was not even aware of the fact that there is a Zoom app. Are you understanding the point or not? Now today, can I say that the Zoom which was available in 2020 and the Zoom app which is available in 2021, there is a huge difference about that? पहले Zoom होता क्या था? Earlier, what was the purpose of Zoom? Zoom was like a Skype only, where the two people can talk to each other just face to face. Means camera utilization. Now today, I'm recording the class also, and I'm displaying my same recording portal in front of you. So now tell me, is it less than face to face class, or it is very much similar to face class? Not even similar. I can say that it is face to face class only. It is just that I'm not in Coimbatore with you people. Am I correct or not? Yes or no? So I can't watch you. You can watch me and you can watch my live expressions. You can watch the live things which I'm underlining. So it is not less than. So if I'll be coming to Coimbatore also, what will be the maximum thing? I'll be sitting in front of you only. There also I'll be using the laptop and my tab and all those things or not. Are you getting the point or not? So things can be predictable. You cannot say that ki systematic analytical procedures or substantive analytical procedures can be always applied on all the situations. Now tell me, these are the, now was the COVID-19 situation predictable or unpredictable? Unpredictable. So you cannot say that ki, okay, acha, now you can say that ki in the future, when these kind of diseases will come in this world, do we know how to fight them now? Little bit. Do we know how to fight them? Yes. If we'll get an idea, those who might have gone through this, bad phase of COVID-19, they might be aware of the fact that COVID-19 does not affect you physically. It affects you mentally more. Are you getting the point? It has been created a big issue in this world now. If you are COVID-19 patient, then you are about to die. ऐसा नहीं होता. COVID-19 is just an additional disease or additional virus which increases the pace of your death. That's it. If you are older, that's the reason COVID-19 is very much difficult to survive by the which people? Younger people or older people? Older people. I have survived the COVID-19 during my September month for the 15-20 days. So I was also completely down at that point of time. But ultimately what I realized that more than physical, it does the which damage? Mental damage. Mentally it damages, right or not? I hope you all are taking the necessary precautions in your own city, because in the south side, to Coimbatore mein to definitely the cases are on the peak right now. Is it happening? Yes. Okay. Okay. Yeah. So now the slowly everywhere it is happening now. Again, I think second wave have started. So that's why it's better to be at your home, take the classes in the most necessary manner, right? Now with that, everyone, almost the whole standard is over. These are just the residual parts which we are left with. Investigating results of analytical procedure. What does that say? If the analytical procedure performed in accordance with 520, identify the fluctuations or relationships that are inconsistent with the other relevant information or that differ from the expected values by the significant amount, auditor shall investigate the such thing. That too I already told you. Suppose, do you remember I told you the 1600 flats wala income? Suppose your calculation is coming 40 crores yearly rental income and he has credited only 20 crores. Now tell me one thing, is the difference huge or small? Your calculation is saying 40 crores and he has credited only 20 crores of income. Is the difference huge or small? Huge. Now are you going to investigate in that case? Yes. Are you going to use your PS in that case? What is PS, everyone? Professional skepticism. Will you become, or will you be using your questioning mind or not? Yes. And according to your calculation, if it is coming 40 crores and according to his calculation it is coming 39.9 crores, are you getting the point or not? Now tell me one thing, is the difference so huge? I'm not saying that it is less difference, but it is not much difference. In that case, you will just simply go to the your client and you will say that why this difference of 10 lakhs. He might be saying that one of the what do you say, tenant vacated it in the 11th month only. He did not pay the last 2-3 months of rent. So that can be a possibility. Am I correct or not? Yes. So definitely if your expected results and actual results and the difference between them is huge, you will definitely would like to do the investigation. And you would not like to do the investigation if your expected and actual may difference is what? Less. That is what is written in this paragraph, everyone. Everyone, please tell me whether 520 went inside your head now? Yes or no? Yes. So please tell me the list of standards which we are done with. Help me in the list of standards which we are done with. I think almost 20-21 standards we are done with, I think, right or not? Out of 26. We are done with 200. We started with 200. We are done with 200. We are done with 210, 220, 230. We are done with 300, 320. We are done with 500, 501, 505, 510, 520 now, 530 also, 550, 560, 570, 580. Complete 500 series is over, right or not? We are done with 700 series also, everyone. We are done with 700, 701, 705, 706, 710. So 700 series is also completed. It means 315 is left over and some chiller standards of 200 series are left over. Clear or not, everyone? So almost how many standards we are done with? 1, 2, 3, 4, 5, 6, 6 plus 10, 16 plus 5, 21 standards we are done with. Clear, everyone? Now 260 and 299, 265, these are very, and 250, these are very small standards, plus 315 and 240. I think you don't have 265. Can somebody please confirm whether 265 is there in your portion? I don't think so that you have 265. We have 240, 250, 260, 299. So 4 standards of 200 series are left and 315 of what? What do you say? 300 series is left and we are left with 610 also. So in total 6 standards we are left with. But no, you should be the 200, 210, 220, 230, 306, 6 plus 10, 16 plus 5, 21, 25 plus 1, 27. हाँ 600 series में 610 is only available. 620 and for the 600 I'll provide you. Okay, Komal? Yes. So everyone, any doubt so far in this two standards which you have done in the last 3 classes? We talked about 530 also. We talked about 520 also, right or not? So let us just see what are the things we are done with. So we're done with this chapter. We're done with this chapter. We're done with this chapter. We're done with, yeah, छोटा सा chapter है 240 almost done with. 6 chapter 9. 6 chapter 9 हुआ. We're done with this. We're done with this. And we are done with this. And we are done with this. Clear everyone? Yes or no? Audit of banks, one day topic we will do. Okay, let's do one thing. Tomorrow we will start with the audit of bank only. But it's a very small topic actually. Audit of bank we'll do. And after that, we'll start with the audit of automated environment also will complete. It is also one and a half class. And fraud also 1 day class. So audit of banks, automated environment and fraud will take not more than 4 classes. 4 classes are required for bank audit. It is required for automated environment and fraud and responsibility. Yes. Then we'll be left with only 3 chapters, that is called audit of different items and audit of items of financial statements, different entities and risk assessment and internal control. 400 सीरीज नहीं है कोमल, पोर्शन में नहीं है 400 सीरीज, वो आपके पोर्शन में है 402, 450, but new syllabus में it is not there. Are you getting the point? So this is how we are going to proceed. So as I told you that 15th might be your last day. 15th तक अपना पोर्शन हो जाएगा and the total classes and the total topics, everything will be sorted out. Right or not? Is the time right now? We still have a time. So let's do one thing. Shall we start with the audit of banks right now? Everyone?
Yes, sir.
Yes. So let us complete the audit of banks. Let me just see where is the audit of. And after that, one particular day, we'll have a discussion over the RTP also, everyone. Clear? I will make sure that 1 or 2 days we'll discuss the RTP also with you so that you will get an idea ki, okay, this kind of questions they may ask you, because they're discussing the RTP. Why it is important? Because you never know from where they may ask you this question, right? Let me just discuss you that bank what. Just give me 1 minute, guys. Please. I will send you these files to you separately also. Sir, can we have a mock test too? That is available in ICAI, Komal. It is available in the ICAI. You can give the mock test over there. No issues. In case you need any kind of assistance, please let me know in that. I will help you out in how the mock test can be given. At least you will get an idea over there. You can do enough practice before leaving for the exam. I hope all of you are left with the group 2 only.
Yes, sir.
Yes, okay. Chalo. So everyone, let us start with the new chapter. What is the name of the chapter? The audit of banks, everyone. Not that big chapter, not that small chapter, but little bit of, MCQ based chapter it is. Now, why it is MCQ based chapter? Here, there are so many things you have to understand, and I will try my level best to squeeze this chapter and put it inside your head. Now, let us first understand, everyone, what is the background of this bank. Now, why bank audit is there in your portion? What is the, from where it has come? Actually, bank audit was your, not was, is your CA final topic as well. So if you are doing the bank audit at the intermediate level, Komal, you can leave, Teja, you can leave, because you all are old syllabus. Bank audit is not a part of your portion. Okay. And tomorrow's class also, I will let you know whether you have to join the tomorrow's class or not, because I think tomorrow's class also will be there on the bank audit only. Clear, Komal? So today and tomorrow you need not attend. You and Teja both. You can leave right now. No issues. Yeah. You can listen. There is no problem. If you want to listen, there is no problem at all. But I'm telling you that it is not there in your portion, because being from the old syllabus, it is not. So Teja, do you also want to continue?
No, sir, I have
Yeah, sure.
function in
You
our
can.
house, so latest and a lot of work is going on. So
Yeah, sure. You
I
can
will,
discontinue, and
prefer.
tomorrow also you need not come. Okay.
Yes, sir. Thank
Yeah.
you, sir.
Chalo. Thank you. Chalo. Everyone, let us understand what is there in the audit of banks. Everyone, audit of bank means what? See, you all know that bank is nothing but is a place where the lot of public money is involved. Am I correct or not? And being a public money involved, what happens basically? The government of India has given the instructions to the RBI. It's okay, you are doing your internal audit, you are doing your inspection audit, but please make sure that bank audit is also required to be done. What do you mean by bank audit? All the bank branches in India are required to be audited statutorily by a statutory auditor on the yearly basis. Like we do the audit on the normal company on the yearly basis, banks are also required to be audited on the yearly basis. But let me tell you one thing, the whole audit of bank is not there in your portion. In your portion, just they have touched some of the topics, because in detail, the bank audit is waiting for you in CA final. So here, so you can say that yes, they have touched the bank audit so that you can have an idea what bank audit is all about, right or not? So everyone, bank ka definition is there in front of you. So like a normal audit, you all have to understand the bank audit in the same manner only. Obviously, we are doing the audit of the bank, and definitely the rules and regulations will be little bit different. So everyone, please understand what is the definition of the bank. It is a financial institution that accepts a deposit from the public and lends the credit and loans to the public. So remember one thing, why the bank audit is required? Because bank is a place where the lot of public money is accepted by them, and lot of public money is given to the public in the form of loans. Are you getting the point? So it is a financial institution that accepts the deposit from the public. Am I correct? And also lends what? Credit to the public. Everyone crystal clear with the definition of the bank or not? Yes or no? Yes. So when we are talking about the bank, are you getting the point? You all have to understand if there are some features of the bank. What are the features of the bank? In the bank, there will always be a huge volume of transaction. Do you all agree or not? Imagine that. Just imagine the volume of checks which are getting deposited and cleared in a day. Tell me, is it a one or two checks getting deposited and cleared in a day, or crores and crores of checks? Crores and crores of checks are going to be cleared and deposited in a single day. So there is a huge volume and there is a complexity of the transaction. Now let me tell you the meaning of complexity of the transaction. Everyone, please tell me, you all must be having the ATM right now. Am I correct or not? Yes. So now tell me, can you use your ATM card in any corner of the country and immediately within a nanosecond, your account statement will be automatically updated if you will take out the mini statement from that ATM?
Yes.
Yes. Is it the same bank ATM you can use or any bank's ATM? Any bank's ATM, but automatically your bank statement will be automatically updated or not? So just try to understand the complexity of the softwares what they are using. You are having an ATM card of SBI Bank in Coimbatore in the Shivaji Nagar or Rajaji Nagar, sorry. So in the Rajaji Nagar, you have one ATM of that particular branch. You have opened an account. You went to Kashmir. You are withdrawing money from the Canara Bank ATM in the Kashmir. So look at the complexity. How complex the business of banks are. They are interlinked with each other. So what is the first feature? We all understood, everyone. Huge volume and complexity of transaction. I hope all of you understood. Just write the yes or no in the comment box. Okay. Now, what is the second feature of the bank? Now you can see that these many complexities and these many volume of transactions are there. So that definitely demands the audit of the bank or not? Yes. Second one, wide geographical spread of banks network. Now tell me, India may there are so many banks. Each and every bank is having so many branches. Some are rural branches, some are urban branches, some are semi-urban branches. So can I say that there are lakhs and lakhs of banks in India? So are they limited to one particular area, or there's a widespread of geographical locations? Widespread. Not only in India, we have the multinational banks also. We have the SBA branches in New York also. We have the SBA branches in London also. We have the foreign banks in India also. Indian banks in foreign also. We have the banks in Andhra also, Telangana also, Tamil Nadu also. The same banks which are available in Hyderabad are there in Coimbatore also. So you can find that on every, I think in every area nowadays, you can see at least one bank branch or not. So tell me, is it a small network or it is a wide network, everyone? Wide network of banks. Second thing, are today's banks only dealing in the taking the deposits and lending the loans, or there are multiple new products have come in the banks? There are multiple and multiple of products and services which the bank can provide. Can you take a DD from the bank? Yes. Can you take the traveler's check from the bank? Yes. Can you take a bank guarantee? Yes. Can you take a letter of credit? Yes. Can you do the foreign exchange currency? Yes. Whether the banks can also work as a portfolio managers? Yes. Whether the banks can collect and pay the LIC premium on your behalf? Yes. So nowadays banks are only limited to two types of activities, or they are providing the variety of products and services, everyone? They are providing the variety of products and services. So first point may be understood that today's the banks are involved in huge volume and there's a complexity of transactions. Point number two may understood there's a wide geographical spread of banks network. Point number three may understood variety of the products and services. And at the same point of time, are the banks open birds or are they the free birds? No, they are always being watched under the strict vigilance of which one? RBI. Are you getting the point or not? Can I say the Reserve Bank of India is the father of all the banks? Yes, you dare to do anything wrong. You dare to do anything wrong. Whether RBI is the regulator of the banks or not. Yes. Who are the regulators of whom? Tell me. Who is the regulator of listed companies? SEBI. Who is the regulator of insurance companies? IRDA. Who is the regulator of the telecom companies? TRI. Am I correct? Who is the regulator of the banking companies? RBI. So you are always going to follow whose guidelines? RBI guidelines. And nowadays, can I say that this is a biggest truth right now? Today's bank is a manual banks or all are using information technology nowadays? All are using information technology. So can I say that nowadays there's an extensive use of information technology or not? Yes. You go to any bank, you go to any branch, you go to any ATM. Today you can deposit the check also without going to the bank. Can you do everything online today? I think half of you, not only half of you, all of you who are listening to me right now, you all might be agreeing with me that today it's been more than 1 year or 1.5 years you have not seen the bank branch of your own bank account. Am I correct or not?
Yes, sir.
Now everyone is using Google Pay, Phone Pay, Bharat Pay, whatever the pays you are using, Paytm and all. You want to transfer the big amount also, then you can do the IMPS, NEFT, RTGS. You want to apply for the credit card also. Do you have to go to the branch? No, online you can apply. You want to replace your debit card because your debit card is not working properly. You can make a request and the new debit card will come. So all these things are now difficult nowadays, or it became easier nowadays? Easier nowadays. It's only because of the extensive use of what? Technology. So these are known as the 5 features of the bank, everyone. So what are the 5 features of the bank? Huge volumes are there, complexity of transactions are there, wide geographical spread of banks is there, variety of products and services they offer. They are always regulated under the strict vigilance of RBI, and extensive use of technology is there. So this is nothing but called as a meaning of banks, everyone, in front of you. Crystal clear? Any doubt or no doubt, everyone?
No doubts.
No doubt. Now, remember one thing, this is the highly asked question in your examination. Very like common question what they may ask you. What is the regulatory framework of the banks? On the banks, which kind of acts are applicable? Now tell me whether the Banking Regulation Act is applicable on the banks or not. Yes. Banks are also governed by which act? And remember, you have to remember the acts, all the acts. Remembering the year or you are not remembering the year, that is your problem. And I will suggest that don't go for the years. Are you getting the point? I will suggest that at least remember the name of the acts which are applicable on the banks. So what is the first act, everyone? Banking Regulation Act. Second act, Companies Act. Why Companies Act is applicable? Because banks are nothing but incorporated in the form of companies only. SBI being the biggest bank or being the biggest PSU bank in India, so SBI Act is also there. Then SBI, you all must have known the fact that all the various other banks of state have been merged with the SBI recently, last 2-3 years back. Am I correct or not? Now there is no State Bank of Chennai, there is no State Bank of Coimbatore, there is no State Bank of Hyderabad, there is no State Bank of Rajasthan, there is no State Bank of things. All these state banks have been merged together, and now there is only one PSU. What is that PSU? SBI. So for that they created one act. What is the name of that? SBI Subsidiaries Bank Act. So tell me, everyone, what are the 4 acts applicable? Banking Regulation Act, Companies Act, SBI Act, SBI Subsidiaries Bank Act. Right or not? Now we have a separate act called Banking Companies Act also. So this is a Companies Act and this one is a Banking Companies Act. We have the Regional Rural Banks Act also. What do you mean by RRBs? Those kind of banks which are operating from the rural areas, like cooperative banks are there. Now tell me whether Information Technology Act is also applicable on the banks or not. Why? Because banks nowadays using the extensive use of technology. So now tell me, if you are online transferring the amount from your bank to another bank, is it acceptable as a legal transfer or not? Tell me. Yes, it is all possible because it is having an approval under the which act? Information Technology Act. Can anybody tell me about this act? What is this? Prevention of Money Laundering Act. Can anybody tell me about this act? Why this act is applicable on the banks? First of all, tell me, what do you mean by prevention of money laundering? Yeah, very nice. Black money. Very nice. So let me tell you everything, guys. Say for example, in your bank transactions, 10 lakhs of credit is there in the year, or 10 lakhs of debit is there, and if the total turnover is going what? 20 lakhs debits and credits. Remember one thing, banks are always watching your account activity. If the bank will get any kind of suspicion, if suddenly the so many payments are coming into your account and you are making so many payments out of your account, bank will immediately give your information to Enforcement Directorate, and Enforcement Directorate will raid on your business, will raid on your house. That is known as Prevention of Money Laundering Act. Basically, banks have every right to inform the income tax department, GST department, and the government departments in case you are nothing but hiding your black money via banks. So that act is known as Prevention of Money Laundering. It is known as money laundering. Don't worry, it is there in your CA final. Wait for the CA final law. We will be meeting over there and we'll be definitely doing over there, right? What is the next act, everyone? Anybody can tell me the full form of SURFACE Act? You all have to remember these acts. That's why I'm going a little bit slow in that. What is the full form of SURFACE Act, anyone? It is known as, now listen to this, it is known as securitization and reconstruction of financial asset and enforcement of security interest. Now, anybody can explain what is the full form? Securitization and reconstruction of financial assets and enforcement of securities interest act. Sir, what is this act actually? Those people who take the loan from the company but they become defaulter. Are you getting the point? What the bank will do? Bank will not take the tension to recover the money from you. Bank will sell its dead money, its dead loan defaulters to one company called Securitization and Reconstruction Company. Those securitization and reconstruction companies will come to your house as a recovery agents. They will try to recover the money from you. If you will not give the money within 60 days, they will take over your properties. You might have seen that sometimes when you take a loan, bank takes a security or not? Yes. If you fail to repay the loan, what the bank will do with that security? Bank will auction that security. Bank will give you the 60 days notice. If you want us not to auction your house and sell it in the open market, please come and repay your loan. And in case you are not repaying the loan, bankers have every right to enforce your securities. That is the reason ESI stands for enforcement of security interest. They will sell your securities in the market and recover their money. That act is known as SURFACE Act, everyone. Everyone is understanding whatever I'm saying so far? Yes or no?
Yes, sir.
Yes. So what are the acts which we are done with? Banking Regulation Act, Companies Acts, SBI Act, SBI Subsidiaries Act, Banking Companies Act, RRB Act, IT Act, Prevention of Money Laundering Act, SURFACE Act. Sir, what is CICR Act? It is known as Company Credit Information. Just wait, CICR. Credit Information something act is there. What is CICR? Sorry. Credit Information Companies Regulation Act, right? Is it correct what I'm saying? Credit Information Company. Yeah. Okay. So it is CICR is Credit Information Companies Regulation Act. Now, what is the next act? Next act is known as Payments and Settlements Act. Payment and Settlement System Act. So like that, you have to remember all these acts. These are known as regulatory framework. Are you getting the point? And remember one thing, one act is not written here. That is called RBI Act 1934. Which act? RBI Act 1934. So these are the acts. Yeah, that's what. Devadashini, I think just now I saw. Yeah,
Yes, sir.
RBI Act 1934. Right or not? So everyone remember one thing, very important question, and so many times they will ask you this question as it is in the examination. How they will ask you? Briefly explain the regulatory framework of the bank. You need not remember the years, but you have to remember all the acts. Banking Regulation Act, then Companies Act, then SBI Act, then SBI Subsidiaries Act, then RRB Act, then Information Technology Act, Banking Companies Act, Money Laundering Act, SURFACE Act, CICR Act, Payment and Settlement System Act, and RBI Act 1934. Crystal clear, everyone? Any doubt so far or no doubt? No doubt. Okay. Now, yes. Yes. Speak, please. SBI Act is? Yes. Applicable only for the SBI bank only. Why we are giving the information about the SBI Act is there? Because it is the India's largest public sector bank. So being India's largest public sector bank, they have created a special act for that. So yes, obviously SBI Act will definitely apply only on the SBI as well as its subsidiaries. Clear or not? Yes. So everyone, yeah. So everyone will do one thing. So we will continue this tomorrow, and tomorrow we are going to understand the whole audit of banks. So tomorrow's complete class from 7 to. So I will not be able to take right now half an hour extra. I will definitely take half an hour extra tomorrow. So tomorrow 7 to 9:30 we are going to complete this particular audit of banks. Are you getting the point? So it does not deserve more than 3 hours क्योंकि छोटा सा ही act है. It is not a big audit. You it is getting over here. So I will try my level best to complete it by tomorrow itself only. And tomorrow our audit of banks another chapter will be over. Then day after tomorrow we are going to start with audit of automated environment. Audit in automated environment. It will go up to Sunday, right or not? So I think by Sunday we should be in a position to complete these 2 more chapters. Then we'll do fraud and responsibilities of the auditor. 1 class it is required. That is on Monday. It will be over. Okay. And after that we'll be left with the 3 major topics, that is called audit of items of financial statement, audit of different entities, and risk assessment and internal control. So after that, once your portion will be over, then when I will ask the management to conduct one RTP discussion things. So otherwise I'll do one thing. Anyways, I'm going to discuss my RTP on my YouTube channel. So you all can join at that point of time also. I think that will be the better idea. Am I correct or not? Yes. So anyways, I'm going to discuss the whole RTP of audit and whole RTP of law on my YouTube channel. So I will intimate you via SMS on which particular day I am fixing that particular discussion of 2-3 hours of session on the YouTube. You all can come and join that session. Clear everyone? Right? So thank you so much everyone. Good night to all of you. See you guys tomorrow. Okay? Bye everyone. Good night. Good night. Bye everyone. Thank you. Thank you. Thank you.
Thank you, sir.
Good night. Good night all of you. Thank you so much.